Everyone, good afternoon, good morning, good evening to all of you. Welcome once again to this Muhurat trading session. 1:30 to 1:45 प्री मार्केट ओपन था. मुहूर्त ट्रेडिंग चलेगी 1:45 से 2:45 के बीच में. आज इंडियन मार्केट और बाकी सब मार्केट क्लोज है. लेट्स सी कहाँ पर ओपन होता है. ये बैंक निफ्टी फ्यूचर है और ये निफ्टी फ्यूचर का चार्ट है. सिल्वर और गोल्ड फिर से अपने ऑल टाइम हाई को हिट कर गए. ओके, 15 सेकेंड्स आर लेफ्ट नाउ. क्वेश्चन होगा तो कमेंट बॉक्स में पूछ लेना. ठीक है, 1 घंटे की मुहूर्त ट्रेडिंग है. ज़्यादा बड़े रिस्क मत लेना. देखते हैं कुछ ट्रेड बनता है तो, नहीं तो फिर अवॉइड करना. हैप्पी दिवाली टू ऑल ऑफ यू वंस अगेन. जो लोग आज सेलिब्रेट कर रहे हैं, जिन लोगों ने कल कर ली उनको भी. ओके, मार्केट ओपन हल्का सा गैप अप हुआ है. सेल ऑफ ही दिख रहा है. गोल्ड को देखोगे, इफ यू लुक एट द गोल्ड, नेचुरल गैस कल के रेजिस्टेंस एरिया पे ओपन हुआ है. ठीक है, नेचुरल गैस कल के रेजिस्टेंस एरिया पर ही हिट किया है सीधा. क्रूड ऑयल भी फ्लैट ही ओपन हुआ है. इफ यू लुक एट द क्रूड ऑयल, एक सेकेंड, इसका कॉन्ट्रैक्ट चेंज नहीं हुआ क्या? क्रूड ऑयल भी फ्लैट ही ओपन हुआ है. कल की लेवल है क्रूड ऑयल में भी. सपोर्ट भी था कल भी. मैं एक बार क्रूड ऑयल और नेचुरल गैस को लगा देता हूँ, फिर निफ्टी बैंक निफ्टी में आएंगे फटाफट से. कॉन्ट्रैक्ट चेंज हो गया होगा, ध्यान रखना. कल के बाइंग का ट्रेड था 15 मिनट टाइम फ्रेम पे, वही चल रहा है अभी भी. फ्लैट ही ओपन हुआ था कल. मार्केट क्लोज होते होते वहीं पर क्लोज हो गया था. इट इज स्टिल होल्डिंग दैट बाइंग ट्रेड. नेचुरल गैस में भी अगर चेकआउट करोगे, नेचुरल गैस में मार्केट रेजिस्टेंस पे ओपन हो रहा है. देखते हैं यहाँ से रिजेक्शन लेता है, क्योंकि एग्जैक्टली ओपन ही रेजिस्टेंस पे हो रहा है. कल मार्केट कंप्लीटली बुलिश था. कोई भी सपोर्ट और रेजिस्टेंस होल्ड ही नहीं हो रहे थे उसमें. ठीक है, रेजिस्टेंस पे ओपन है. बट याद रखना, एक ही घंटा चलेगा मार्केट, तो कोई बड़ी ट्रेड मत लेना. क्रूड और नेचुरल गैस में जो फॉरेक्स में कर रहे हैं उनकी बात अलग है. दे कैन टेक द रिस्क बिकॉज वहाँ पर मार्केट ओपन ही है. कोई और डेटा तो नहीं है शेड्यूल आज. ठीक है, क्रूड ऑयल, लेट्स सी. टारगेट देता है तो आज इसको चेंज कर देते हैं. ठीक है, इस लेवल के ऊपर जाएगा. टारगेट थोड़ा मैंने बड़ा रखा था कल भी, आज भी वही है. टारगेट तो पूरा ही रखा हुआ है. स्टिल टारगेट इज सेम. 164 पॉइंट, तो उसका आधा मान लो. 80 पॉइंट का ही टारगेट है. पहला टारगेट अगर अचीव होता है तो हाफ क्वांटिटी बुक करके ट्रेल करो, एंड देन फिर सेकंड टारगेट के लिए जाते हैं, वहां से सेल करेंगे. बाकी नेचुरल गैस 15 मिनट के कल के दूसरे रेजिस्टेंस एरिया पे, नीचे वाला रेजिस्टेंस एरिया पे था, वहां पर दो दो ब्रेकआउट करके चला गया. होल्ड ही नहीं कर पाया. नीचे आता है तो फिर ये सपोर्ट जोन रहेंगे हमारे पास. वैसे 15 मिनट में सिर्फ 4 ही कैंडल बनेंगी, तो ज़्यादा रिस्क लेना नहीं है. मैं जा रहा हूँ सीधा निफ्टी बैंक निफ्टी में 15 मिनट टाइम फ्रेम पे. लेट्स मूव ऑन टू द निफ्टी बैंक निफ्टी 5 मिनट. एंड गोल्ड, गोल्ड में एक बार देख लेते हैं. ऑल टाइम हाई पर है. क्या सिनेरियो बन सकता है इस पर्टिकुलर एरिया पे. गोल्ड को देखोगे, कल अपने ऑल टाइम हाई को हिट किया था, वहां से थोड़ा बहुत सेल ऑफ आया था। अ, अभी देखोगे थोड़ा बहुत और सेल ऑफ आया है। लग रहा है एक बड़ा ब्रेकआउट एम पैटर्न बनाने के चक्कर में है। अभी ये छोटे वाले एम से काम नहीं चल रहा। 4 आवर टाइम फ्रेम पे एक एम पैटर्न बनने की पॉसिबिलिटी लग रही है। ध्यान से देखोगे तो 4 आवर टाइम फ्रेम पे एक एम पैटर्न की ओर जा रहा है प्राइस। और नीचे 4 आवर टाइम फ्रेम पे सपोर्ट, सपोर्ट भी काफी नीचे ही है। 4 आवर टाइम फ्रेम पे ये एम पैटर्न सक्सेसफुली बना दिया तो बड़ी प्रॉब्लम हो जाएगी बायर्स को। बट अब ये दूर है, देखते हैं वो एम पैटर्न बनता है नहीं बनता है। 4 आवर टाइम फ्रेम पे, 1 आवर टाइम फ्रेम पे काम ही नहीं कर रहे हैं। लेट्स मूव ऑन टू द 15 मिनट। हाई से गिरा है, क्या प्लान कुछ कर सकते हैं यहाँ पर? लाइक भी करते रहो गाइस, कोई क्वेश्चन हो तो पूछ लेना। हाल ये क्रूड ऑयल नेचुरल गैस है। मैं गोल्ड को चेक कर रहा हूँ, निफ्टी बैंक निफ्टी में तो मुझे लग नहीं रहा कुछ ट्रेड बनेगा खास। अब इतने छोटे में क्या ही ट्रेड करें, फिर भी एक देख लेते हैं। गोल्ड को भी जाते वक्त देखेंगे, अभी तो क्या ही करें उसमें गोल्ड में। 5 मिनट टाइम फ्रेम पे बैंक निफ्टी फ्यूचर को देखोगे तो वो कल की रेंज में ही ओपन हो रहा है। कल जो रेंज बनाई थी क्लोजिंग होते होते निफ्टी 50 ने, उसी के अंदर ओपन हुआ है। और बैंक निफ्टी फ्यूचर भी वहीं पर ओपन हुआ है। बैंक निफ्टी फ्यूचर भी कल के 15 मिनट के टाइम फ्रेम के अंदर ही ओपन हुआ है। या रिजेक्शन ले लिया, ठीक है। बैंक निफ्टी में एक सेलिंग का प्लान कर सकते हो इसमें इजीली। बैंक निफ्टी फ्यूचर में 5 मिनट की बात कर रहा हूँ मैं। चार्ट भी लगा देता हूँ। निफ्टी में कुछ नहीं है, बैंक निफ्टी में ही है। सपोर्ट कहाँ पर है इसमें? 5 मिनट में जाओ। ठीक है, वैसे रहेगा ही रेंज के अंदर ही, मुझे लगता नहीं रेंज ब्रेक कर पाएगा इजीली। इतना आसान तो नहीं है 5 मिनट में भी। ठीक है, यहाँ पर देखते हैं ब्रेक डाउन करना चाहिए। 58,014 के नीचे क्लोजिंग आनी चाहिए, तभी बड़ा गिरेगा, नहीं तो बस इतना ही है सेल ऑफ का टारगेट। यहाँ पर ना एक छोटा सा पॉइंट ऑफ इंटरेस्ट बना हुआ है। अगर उसके नीचे कैंडल क्लोज नहीं होती तो फिर और नीचे जाएगा नहीं। इसके नीचे प्रॉपर एक ब्रेकडाउन चाहिए। 58,020 के नीचे नहीं आता है तो यहाँ से थोड़ा बहुत वापस रिटर्न कर सकता है ऊपर रेजिस्टेंस एरिया की ओर। इस पे ब्रेक करके अगर नीचे सस्टेन कर दिया तब थोड़ा सा बड़ा टारगेट रखना, नहीं तो इतना ही है। इतना ही जाएगा, है क्या, इतना ही जाएगा। ठीक है, थोड़ा सा नीचे आता तो बेटर था। नीचे एक सपोर्ट है, वहां पर थोड़ा टारगेट भी बड़ा हो जाएगा हमारा। इसको यहाँ mention कर दो। ठीक है, फ्यूचर में ही है। यहाँ ब्रेक करता है तो फिर सीधा 57,640 650 तक गिर सकता है। नहीं ब्रेक करता है तो फिर यहीं पर रुक जाएगा मोस्टली। फ्यूचर का चार्ट है, ध्यान रखना ये स्पॉट का चार्ट नहीं है, तो प्राइस से कंफ्यूज मत करना। दिस इज फ्यूचर चार्ट। एक बार और है वहाँ पर। नहीं, ब्रेक ही नहीं कर रहा। इसके नीचे ब्रेक डाउन जरूरी है, नहीं तो। ठीक है, नहीं ब्रेक कर रहा है। ठीक है, अगर नहीं ब्रेक किया तो फिर रेंज के अंदर गया है, क्योंकि ऊपर कैंसिल कॉज पर रख लेते हैं। ठीक है, यहाँ पर एक छोटा सा ये पॉइंट ऑफ इंटरेस्ट बना हुआ है एक्चुअली। ठीक है, गोल्ड में क्लोज होते होते देखेंगे, अभी कोई फायदा नहीं है, अभी कोई ट्रेड तो करेंगे नहीं गोल्ड में। इन्वेस्टमेंट वगैरह कुछ करनी है तो अभी क्लोजिंग होते होते सिल्वर और गोल्ड के चार्ट को एक बार देख लेंगे। थोड़ा बहुत फॉल किया है 4 आवर टाइम फ्रेम पे, एक पैटर्न बनाने की कोशिश में है आपका प्राइस। टाइम फ्रेम पे तो इसने रिसेंटली काफ़ी ट्राई कर दिया बट यस, दिस इज अ 5 मिनट चार्ट है, 5 मिनट का चार्ट है। क्रूड ऑयल और नेचुरल गैस में कल की लेवल है। क्रूड ऑयल अपने वही कल के सपोर्ट एरिया पे रुका था, वहीं से थोड़ा बहुत ऊपर जा रहा है। वैसे क्रूड ऑयल में ज़्यादा कुछ टारगेट मिलेगा नहीं आपको, 4 ही कैंडल बनेंगे 1 घंटे में, उससे ज़्यादा तो बनेंगे नहीं। 15 मिनट की एक कैंडल होती है, तो मान के चलो ये पूरा टारगेट शायद ही अचीव हो। बट इस जो लोग फॉरेक्स को ट्रेड कर रहे हैं, फॉरेक्स में ट्रेड कर रहे हैं, उनके लिए ठीक है, दे कैन होल्ड। फॉरेक्स मार्केट ओपन ही है, 12:30 लंदन सेशन ओपन ही चल रहा है, 5:30 न्यूयॉर्क सेशन ओपन होगा, 7 PM यूएस मार्केट ओपन होगा। डेटा कोई नहीं है आज भी, देर इज़ नो डेटा शेड्यूल फॉर टुडे एज वेल। 7 बजे थोड़ा सा यूएस मार्केट ओपन होगा तो देख लेना। हाँ, ठीक है, इन्वेस्टमेंट अगर करेंगे तो थोड़ा देख लेंगे गोल्ड और सिल्वर में अभी क्लोज होते होते। बाकी बैंक निफ्टी फ्यूचर में देखोगे तो कल की 15 मिनट और निफ्टी फ्यूचर को देखोगे, कल के 15 मिनट की रेंज के अंदर ही ओपन हुए हैं दोनों। थोड़ा बहुत रिजेक्शन, ये 15 मिनट की रेंज की बात कर रहा हूँ मैं। 5 मिनट टाइम फ्रेम पे थोड़ा बहुत रिजेक्शन लिया था, ऊपर से रेजिस्टेंस एरिया पे ही था एग्जैक्टली। बट ये नीचे एक पॉइंट ऑफ इंटरेस्ट है, इसके नीचे ब्रेक नहीं हो रहा, ब्रेक नहीं हुआ तो फिर ये मान के चलो रेंज के अंदर ही क्लोज हो जाएगा, इसी रेंज के अंदर रहेगा मोस्टली। नीचे ब्रेक कर देता तो फिर थोड़ा सा नीचे बड़ा टारगेट है 5 मिनट टाइम फ्रेम पे, अगर ऊपर ब्रेक करता है सस्टेन करना चाहिए, ऊपर सस्टेन करता है तो फिर थोड़ा सा टारगेट अपर साइड पे अच्छे मिल जाएंगे, वो भी एक सिनेरियो है। बाकी अगर ऊपर सस्टेन किया ब्रेकआउट करके प्रॉपरली। पर कोई रेजिस्टेंस है भी नहीं, ऑल टाइम हाई पर क्या ही रेजिस्टेंस बनेगा, देयर इज नो रेजिस्टेंस देयर इन बैंक निफ्टी। ऑल टाइम हाई है, अगर इसके ऊपर निकलता है तो फिर सीधा कोई ऊपर रेजिस्टेंस नहीं है, दैट इज द रेंज देन। ठीक है, बाकी क्रूड ऑयल में अगर कल से होल्ड करके रखा था तो आप हाँ प्रॉफिट निकाल देना, इस लेवल पे थोड़ा टारगेट बड़ा है ये। निफ्टी में कुछ नहीं बन रहा है, निफ्टी में भी कुछ नहीं है। निफ्टी इवन तो अपने ऑल टाइम हाई से दूर ही है अभी, बट वहां पर भी 5 मिनट में कुछ खास ट्रेड नहीं बन रहा है। निफ्टी बैंक में ही था एक ये छोटा सा। ठीक है, वैसे देखोगे हायर टाइम फ्रेम पे तो निफ्टी बैंक भी फ्यूचर, जो बैंक निफ्टी फ्यूचर है, निफ्टी फ्यूचर है, वो भी रेजिस्टेंस पर ही हायर टाइम फ्रेम पे, बट लाइक 1 आवर टाइम फ्रेम। बट हम अभी इंट्राडे कर रहे हैं, 1 आवर टाइम फ्रेम का इतना इंपॉर्टेंट नहीं है, एक 1 आवर टाइम फ्रेम की कैंडल ही एक ही फॉर्म होगी सिर्फ। बाकी 1 आवर टाइम फ्रेम पे भी निफ्टी अपने रेजिस्टेंस जोन पर ही है, मैं निफ्टी का चार्ट भी लगा ही देता हूँ। हाँ ठीक है, उसमें तो में हाफ प्रॉफिट बुक कर लेना। बाकी जिन लोगों ने बैंक निफ्टी में शॉर्ट किया हुआ है, सेल किया हुआ है, फ्यूचर पुट कुछ भी लिया हुआ है, ध्यान रखना अगर ये नीचे का पॉइंट ऑफ इंटरेस्ट ब्रेक नहीं हुआ, सस्टेन नहीं होता इसके नीचे ब्रेक करके, फिर ये साइडवे चला जाएगा मोस्टली 5 मिनट टाइम फ्रेम पे भी, क्योंकि ऊपर भी ये रेजिस्टेंस बना रखा है पूरा, होल रेजिस्टेंस जोन है, इसको भी ब्रेक करना पड़ेगा अगर और ऊपर जाना है तो। बस तो ये था, नीचे ब्रेक करता, नीचे वाले सपोर्ट से सपोर्ट लेके ऊपर जाता, क्योंकि ऊपर गया तो फिर ऊपर रेजिस्टेंस नहीं है, ऑल टाइम हाई पर ही चल रहा है बैंक निफ्टी ऑलमोस्ट। की रेंज के अंदर ही है ये भी, देखोगे ना निफ्टी को। बाकी 5 मिनट में ऐसा कोई रेजिस्टेंस निफ्टी में है नहीं, हायर टाइम फ्रेम पे बने हुए हैं, तो मैं वही लगा रहा हूँ। 5 मिनट में कुछ बनेगा तो देखेंगे। निफ्टी बैंक में तो बना था इसलिए लगा दिया है, बैंक निफ्टी में कुछ नहीं बनाया हुआ है, निफ्टी 50 में कुछ नहीं बना हुआ है। ठीक है, बाकी जैसे मैंने बताया हायर टाइम फ्रेम पे यहाँ पर ये रेजिस्टेंस है, इसको चाहो तो इसको मार्क कर सकते हो 5 मिनट के अकॉर्डिंग, बट ये 5 मिनट का रेजिस्टेंस नहीं है, हायर टाइम फ्रेम का 30 मिनट या 1 आवर टाइम फ्रेम मान सकते हो। वहाँ तक अब जाएगा नहीं जाएगा, चांसेस कम ही लगते हैं। बाकी 5 मिनट में सपोर्ट जरूर है, वो मैं बना देता हूँ अगर वहाँ तक आ गया तो। 5 मिनट में यहीं पर एक सपोर्ट है नीचे, 25,800 टू 820 के बीच में, तो थोड़ा सा दूर बने हुए हैं निफ्टी में, तो मुझे लग नहीं रहा वहाँ तक जा पाएगा ये। बैंक निफ्टी सही लग रहा है थोड़ा, अगर मोमेंटम आ जाता है। बाकी मुहूर्त ट्रेडिंग का टाइम है, 1 घंटे मार्केट ओपन रहेगा, ओनली 1 आवर। वंस अगेन हैप्पी दिवाली टू ऑल ऑफ यू, जिन लोगों ने कल बनाई और जो लोग आज सेलिब्रेट कर रहे हैं। मुहूर्त ट्रेडिंग का टाइम 1:45 से 2:45, 1 घंटे के लिए ओपन रहती है। फॉरेक्स मार्केट ओपन है, फॉरेक्स मार्केट रिमेन ओपन। कल मार्केट ओपन है, कल तो मार्केट ओपन ही है, मार्केट रिमेन ओपन टुमारो। दिवाली। अभी सिंह 4766। ठीक है, मुझे नहीं लगता भी बैंक निफ्टी में कुछ मोमेंटम आएगा। लेवल मैंने दिखा दिए हैं इस 5 मिनट टाइम फ्रेम पे। फ्यूचर में, ये फ्यूचर का चार्ट है, मैं फ्यूचर का चार्ट यूज़ करता हूँ, तो देख लेना लेवल पे आता है तो। मुझे लग नहीं रहा आएगा, साइड में चला गया। कल की रेंज में ही है, बाकी 15 मिनट की कल की रेंज देखोगे, कल की 15 मिनट के टाइम फ्रेम के अंदर ही मूव कर रहा है। ठीक है, इससे कम टाइम फ्रेम पे जाना सही नहीं है। लेट्स बैक टू द क्रूड। ठीक है, क्रूड में भी कॉन्ट्रैक्ट चेंज हो गया है, तो थोड़ा ध्यान रखना, ये करंट कॉन्ट्रैक्ट है, बट अब कल से ही लगाएंगे इसको। अभी मैंने नेक्स्ट मंथ का कॉन्ट्रैक्ट लगा रखा है, तो ये कल वाला ही चार्ट है। ऊपर आया कल अगर ये या फिर फॉरेक्स में आता है 5120 130 के बीच में, तो यहाँ से वापस सेल कर सकते हैं। दिस आर यस्टरडेज लेवल, कल का ही लेवल है। कल याद होगा सपोर्ट पे आया था, थोड़ी बहुत बाइंग आई, फिर नीचे आया, फिर बाइंग आते 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 वहीं क्लोज हो गया था। अभी वहीं पर ओपन हुआ है, थोड़ा बहुत ऊपर जा रहा है। बाकी बैंक निफ्टी 5 मिनट में एग्जैक्टली रेजिस्टेंस पर ही है, वहीं से सेलिंग आई थी थोड़ी बहुत। नीचे एक पॉइंट ऑफ इंटरेस्ट है, अगर ये ब्रेक करके सस्टेन कर जाता है तो फिर थोड़ा बड़ा टारगेट एक्सपेक्ट करना। नहीं करता है तो ये भी कल के 15 मिनट के लेवल के अंदर ही है, फर्स्ट फर्स्ट 15 मिनट की कैंडल के अंदर ही अभी भी ट्रेड हो रहा है इसमें। ठीक है, यहाँ पर एक छोटा सा पॉइंट ऑफ इंटरेस्ट बना हुआ है, इसलिए ब्रेक नहीं कर पा रहा है। ऊपर रेजिस्टेंस, नीचे ये सपोर्ट की तरह काम कर रहा है। अगर नहीं ब्रेक होता है तो फिर रेंज बाउंड हो जाएगा ये भी। नेचुरल गैस मैंने आपको दिखाई दिया था, नेचुरल गैस अपने कल के रेजिस्टेंस जोन पे था एग्जैक्टली, वहीं से थोड़ी बहुत सेलिंग आ रही है उसमें। कल तो काफ़ी बुलिश था, मार्केट ज़्यादा ही बुलिश हो गया था। ठीक है, कल के लेवल है, याद होगा मार्केट कल पहले मॉर्निंग पे बहुत बड़ा गैप अप हुआ था, कंसोलिडेशन किया, एक रेजिस्टेंस था, काफ़ी देर रुका, होल्ड ही नहीं कर पाया, फिर वहाँ पर ऊपर निकला था, ऊपर एक और रेजिस्टेंस था, वहाँ पर भी होल्ड नहीं कर पाया, कंटिन्यूसली ओपन इक्वल टू लो बनाते लगा था, फिर एक रेजिस्टेंस और लगाया था, वहाँ तक पहुँचा नहीं था, अभी आया है एग्जैक्टली देखोगे, वहीं ओपन हुआ है एग्जैक्टली। तो वहाँ से एक थोड़ी बहुत सेलिंग चल रही है। लेट्स सी थोड़ा नीचे तक अगर आता है ये, सपोर्ट तो नीचे ही है, या फिर अभी भी बुलिस है, क्योंकि ओपन तो फ्लैट ही हुआ है, तो ज़्यादा बुलिस अब नहीं कहेंगे। कल मोमेंटम काफ़ी अच्छा था, थोड़ा सा अगर नीचे आ जाए तो आप एक्सपेक्ट कर सकते हो। अब ये लेवल को थोड़ा सा सही कर देते हैं, ये रेजिस्टेंस है। कल का एक बीच का रेजिस्टेंस भी है जिसका ब्रेकआउट हुआ है, तो वो एक रीटेस्ट के तौर पे देख लेना उसको। अभी ये बुलिस ही लग रहा है ये, वाह। स्टिल ऑलमोस्ट 1% पॉजिटिव है नेचुरल गैस MCX में। पुल बैक भी नहीं आ रहा, नीचे से बाई करते, नहीं तो नेचुरल गैस में नॉट गिविंग अ पुल बैक इवन। कल भी पुल बैक नहीं आ रहा था, पूरी स्ट्रेट लाइन ही बनी हुई थी। ठीक है, कल का ही तीसरा रेजिस्टेंस है, कल दो रेजिस्टेंस ब्रेक करके चला गया था नेचुरल गैस 15 मिनट टाइम फ्रेम पे। लेट्स सी थोड़ा पुल बैक आए फिर बाई करें, क्योंकि ऐसा ही करता है जब ये भागता है फिर सेल ऑफ आता है ना ना जब भागता है तो रेजिस्टेंस होल्ड कर पाता है, नीचे आता है तो फिर सपोर्ट भी होल्ड नहीं कर पाता है। बाकी गोल्ड और सिल्वर में देखेंगे थोड़ा रुक के, ठीक है, अभी नहीं देखेंगे बिकॉज इंट्राडे में तो ट्रेड नहीं कर रहे हैं, कुछ इन्वेस्टमेंट वगैरह अगर करेंगे तो विल सी दैट। निफ्टी बैंक निफ्टी का व्यू मैंने बता दिया था। निफ्टी बैंक निफ्टी का व्यू मैंने फ्राइडे के दिन, वीकली व्यू, सैटरडे के दिन सॉरी, आप सैटरडे का एक बार एनालिसिस देख लो परसों का। मैं हर सैटरडे को वीकली एनालिसिस करता हूँ प्राइस का। वहाँ पर मैंने निफ्टी बैंक निफ्टी गोल्ड सिल्वर सबका एनालिसिस किया हुआ है, क्रूड ऑयल नेचुरल गैस इंक्लूडिंग। ठीक है, वहाँ पर वीकली एनालिसिस रोज करते हैं, रोज मतलब हर सैटरडे या संडे के दिन वीकली एनालिसिस, वहाँ पर वीकली डिटेल से एनालिसिस किया हुआ है, एक बार उसको चेक कर लेना, निफ्टी बैंक निफ्टी एंड ऑल। बाकी ओवरऑल देखोगे तो इंडियन मार्केट तो पॉजिटिव है, बैंक निफ्टी ऑल टाइम हाई चला गया है। ठीक है, कल ऑल टाइम हाई बैंक निफ्टी ने हिट कर दिया था फ्यूचर में, और कल फिर साइडवेज चला गया, आज भी उसी रेंज के अंदर है। यहीं पर अगर इसी तरह से कंसोलिडेशन रहा तो फिर एक नया ऑल टाइम हाई बना ही देगा। सेलिंग आनी होगी तो फास्ट आती है, सेलिंग हमेशा फास्ट आती है। तो प्राइस को अगर यहाँ से गिरना है बैंक निफ्टी को वापस से अपने ऑल टाइम हाई से, तो रुकेगा नहीं प्राइस ज़्यादा देर। यहाँ अगर कंसोलिडेशन हो गया ज़्यादा देर, ऑल टाइम हाई के और ऊपर चला जाएगा बहुत ही आसानी से। बाकी निफ्टी अभी काफ़ी दूर है, अभी भी निफ्टी फ्यूचर की बात कर रहा हूँ, काफ़ी दूर है अपने ऑल टाइम हाई से, तो उसमें तो टाइम लगेगा खैर। बट या ये भी जिस लेवल पे अभी है, हायर टाइम फ्रेम मतलब इन द सेंस ऑफ एटलीस्ट 30 मिनट या 1 आवर टाइम फ्रेम पे ये भी रेजिस्टेंस पर ही है। तो अगर इसको भी सेलिंग में आना है तो फास्ट आना चाहिए। अगर यहाँ पर ये भी थोड़ा कंसोलिडेशन करता है तो, और ब्रेकआउट होता है उसके बाद, तो ये भी फिर अपने ऑल टाइम हाई को हिट करने जा सकता है। बट अभी के लिए देखोगे मैं एटलीस्ट 1 आवर टाइम फ्रेम, क्योंकि थोड़ा सा ठीक ठाक बड़ा टाइम फ्रेम है, इंट्राडे बेसिस पे अगर देखोगे या फिर स्विंग बेसिस पे देखोगे, तो 1 आवर टाइम फ्रेम पे ये भी अपने रेजिस्टेंस जोन पर ही खड़ा है फ्यूचर निफ्टी का। तो अगर ये ब्रेकआउट में सस्टेन करता है 26,060 के ऊपर, 26,060 के ऊपर 1 आवर टाइम फ्रेम पे ब्रेकआउट सक्सेसफुली सस्टेन करता है, मतलब एक कैंडल क्लोज हो गई और रीटेस्ट करके चला गया, तब फिर अपने ऑल टाइम हाई के ऊपर चल जाएगा। बट उसके लिए मैं एक्सपेक्ट कर रहा हूँ कि थोड़ा कंसोलिडेशन करके जाए, क्योंकि सीधा गया तो सस्टेन ही नहीं होगा। लास्ट टाइम भी देखोगे यहाँ पर प्राइस आया था जब इसी लेवल पे 1 आवर टाइम फ्रेम पे निफ्टी फ्यूचर में, 1 आवर टाइम फ्रेम पे प्राइस आया सीधा, इस जब रेजिस्टेंस क्रिएट करने के बाद 1 अक्टूबर को, अगले दिन मतलब 2 अक्टूबर को तो हॉलीडे था, 3 अक्टूबर को सीधा गैप डाउन हुआ और फिर जाता ही चला गया नीचे, होल्ड ही नहीं किया। तो 1 अक्टूबर को रेजिस्टेंस क्रिएट किया, क्लोजिंग होते होते रेजिस्टेंस पे क्लोज किया, अगले दिन सीधा गैप अप, गैप डाउन माफ करना, गैप अप नहीं, अगले दिन सीधा गैप डाउन, एंड देन कंटिन्यू फॉल। उस दिन तो पूरा गैप डाउन ओपन हुआ, और गैप डाउन ओपन होने के बाद 2% लगभग 400 पॉइंट गिरा था, एंड उसके बाद फिर गिरता ही चला गया था। सेम सिनेरियो है यहाँ पर भी, अभी देखोगे इसी सेम रेजिस्टेंस पे प्राइस परसों कल कल 20 थी ना, कल हिट किया था, कल हिट करने के बाद इसी रेजिस्टेंस पे क्लोज कर गया था, पूरा दिन साइडवेज था ना। आज अभी इसी लेवल पे ओपन हुआ है, तो सेलिंग आनी है तो आज कल में आ जानी चाहिए। एनी ब्रेकआउट ऑन 1 आवर टाइम फ्रेम अबाउट 26,060 और सस्टेन करता है तो फिर या इजीली आप ऑल टाइम हाई देख सकते हो। तो मेरे अकॉर्डिंग तो थोड़ा सा कोई अगर न्यूज़ वगैरह नहीं आती है तो एटलीस्ट कंसोलिडेशन कर दे। अगर कंसोलिडेशन नहीं होता है और मंडे को मार्केट गैप डाउन ओपन हो गया, तो फिर वापस सेल ऑफ में ही चला जाएगा। तो ऑल टाइम हाई निफ्टी में हिट करना है तो एटलीस्ट ये ब्रेकआउट जरूरी है फ्यूचर में 26,060 का। हाँ, इसके ऊपर अगर ब्रेकआउट रिटेस्ट हो गया सक्सेसफुली तो ऊपर एक गैप भी है, गैप भी दिख रहा होगा आप लोगों को, ऊपर एक गैप भी है और ऊपर रेजिस्टेंस भी है, दोनों ही है, ऑल टाइम हाई का ही है। तो वहां तक जाना चाहिए। बाकी अगर यहाँ से सेल ऑफ आता है कंटिन्यू, क्योंकि सेलिंग हमेशा थोड़ा फास्ट ही आती है, सेलिंग रुक के ज़्यादा नहीं आती है, तो इसका मतलब ये नहीं कि गिरता ही चला जाएगा, क्योंकि नीचे भी अब सपोर्ट बन चुके हैं। इफ़ यू लुक एट द लोअर एंड ऑन 1 आवर टाइम फ्रेम इन निफ्टी फ्यूचर, तो प्राइस अगर नीचे डाउन साइड की ओर फॉल करता है तो मार्केट के पास स्ट्रॉन्ग सपोर्ट है अभी, अभी के लिए एटलीस्ट। ठीक है, 25,600 से 25,700 के बीच में 100 पॉइंट की काफ़ी स्ट्रॉन्ग रेंज है। तो बेस्ट के सिनेरियो तो यही है कि ये, अगर इसको ऊपर जाना है, यहाँ पर थोड़ा देर कंसोलिडेशन करे, या थोड़ी बहुत सेलिंग आती है, हेल्थी सेलिंग, रेजिस्टेंस है क्योंकि दूसरी बार ही आ रहा है इस रेजिस्टेंस पे, कल आया था दूसरी बार, आज तीसरी बार हो गया। तो इस लेवल पे अगर थोड़ा बहुत रुकता है और थोड़ी बहुत प्रॉफिट बुकिंग नीचे की ओर आती है 25,600 से 700 के बीच में, वहां से वापस बाइंग अगर आती है, तो एक काफ़ी अच्छा आइडेंटिकल रेजिस्टेंस बन जाएगा, और वो आइडेंटिकल रेजिस्टेंस जब ब्रेक होता है तो फिर प्राइस मोमेंटम बड़े अच्छे दिखाता है। इसको आप कुछ ये समझ सकते हो, ये हायर टाइम फ्रेम के जोन्स। ऊपर ये रेजिस्टेंस है ना, वो हिट कर चुका है पहले, ये दूसरी बार कल आया था, ये तीसरी बार हिट कर रहा है। तो यहाँ पर कंसोलिडेशन करे, ब्रेकआउट करे, ऑल टाइम हाई जाएगा, नहीं तो थोड़ा बहुत नीचे आ जाए और यहाँ से सपोर्ट लेके फिर जाए। तो यहाँ ये कुछ ये पैटर्न दिखेगा आपको। एक बार आया रेजिस्टेंस पे, लो बनाया, दूसरी बार हायर लो बनाया, तीसरी बार आएगा आइडेंटिकल रेजिस्टेंस, हायर लोज, ब्रेकआउट हुआ तो इतना मोमेंटम इजीली एक्सपेक्ट कर सकते हैं। तो 1 आवर टाइम फ्रेम पे, बाय द वे ये 1 आवर टाइम फ्रेम की बात बता रहा हूँ मैं, कोई इंट्राडे की बात नहीं कर रहा हूँ, 5 मिनट या 15 मिनट में। एक बार देख लेना उसको, ठीक है, देख लेना। वैसे मैंने एनालिसिस तो कर दिया है यहाँ पर निफ्टी का 1 आवर टाइम फ्रेम पे, हायर टाइम फ्रेम पे, इस वीक के लिए एटलीस्ट। तो मैं एक्सपेक्ट ये कर रहा हूँ कि, क्योंकि देखो सीधा ब्रेकआउट हुआ तो सस्टेन नहीं करेगा, वेरी हाई चांसेस। तो ऊपर आप मान के चलो 26,060 तक मेजर रेजिस्टेंस है, और नीचे 25,600 तक मेजर सपोर्ट है। तो 25,600 से 26,060 के बीच में ही रहना चाहिए अब इस वीक में। थोड़ा नीचे आके सपोर्ट लेके ऊपर जाए तो मेरे अकॉर्डिंग बेस्ट है। या फिर आज और कल कंसोलिडेशन कर दे, क्योंकि फ्राइडे को यूएस का सीपीआई का डेटा भी आने वाला है, आप लोगों को पता होगा। इसी वीक फ्राइडे के दिन यूएस का सीपीआई का डेटा भी है, उनके इन्फ्लेशन का डेटा भी है। तो ये बहुत इंपॉर्टेंट है, इसी के बेसिस पे यूएस में वहाँ पर रेट कट होंगे नहीं होंगे डिसाइड होता है मोस्टली। तो वो यूएस में इन्फ्लेशन कितना है यहाँ से पता लग सकता है। तो ये फ्राइडे को आएगा डेटा, तो मुझे लग रहा है मार्केट, अगर कोई और इवेंट नहीं होता है तो फ्राइडे का वेट हो सकता है। फ्राइडे के बाद शायद फिर नेक्स्ट मंडे को एक मोमेंटम हो जाए, तब तक ये रेंज भी कंटिन्यू कर जाए मार्केट। तो इस रेंज को देख लेना टिल फ्राइडे। फ्राइडे को सीपीआई का डेटा आएगा, फिर नेक्स्ट वीक हो सकता है थोड़ा मोमेंटम में चला जाए रेंज को ब्रेक करके। ओके, कुछ खास मोमेंटम तो हो नहीं रहा है निफ्टी में भी नहीं, क्रूड ऑयल नेचुरल गैस ही थोड़ा बहुत मूव कर रहे हैं। गोल्ड लगा लें फिर अब। अभी मोरा ट्रेडिंग के बाद फिर हम बिटकॉइन लगा दूंगा मैं वैसे, बिटकॉइन और गोल्ड। क्योंकि क्रूड ऑयल और नेचुरल गैस फॉरेक्स में तो शायद ही करते होगे आप लोग कोई, वहाँ पर मार्जिन बहुत ज़्यादा है, और ठीक है। बिटकॉइन भी लगभग 3% डाउन है, परसों से सेलिंग ही आ रही है बिटकॉइन में भी। परसों एक वो हाई बनाया था, कल 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 नॉट परसों, कल एक हाई बनाया था, साइडवे चला गया था, उसके बाद से आज अर्ली मॉर्निंग ब्रेकडाउन हुआ 1,10,000 का, फिर गिरते ही जा रहा है। ठीक है, तो एक बिटकॉइन और एक गोल्ड का चार्ट लगा लेंगे आफ्टर 2:45 इंडियन मार्केट, अभी ये क्लोज होता है तो। ठीक है, ऑलमोस्ट 25 मिनट और हैं। कुछ नहीं हो रहा, निफ्टी में भी कुछ नहीं हो रहा, साइडवे चला गया। कोई ट्रेड ही नहीं कर रहा लग रहा है निफ्टी में, मोमेंटम ही नहीं हो रहा है। 5 मिनट में भी निफ्टी में कुछ नहीं, मोमेंटम नहीं है। ठीक है, थोड़ा बहुत ऊपर से सेल ऑफ आया, अब साइडवे चला गया। बैंक निफ्टी एटलीस्ट फिर भी, बैंक निफ्टी भी रेंज के अंदर ही फंसा हुआ है। नो, बैंक निफ्टी ब्रेकडाउन करता है अगर 5 मिनट में 58,000 के नीचे सस्टेन कर गया तो फिर आ जाएगा नीचे। ठीक है, 57,600 से 650 तक वही सपोर्ट है नेक्स्ट 5 मिनट में। अगर ये थोड़ा सा पॉइंट ऑफ इंटरेस्ट ब्रेक कर देता है 58,000 के नीचे, फ्यूचर की बात कर रहा हूँ, बैंक निफ्टी फ्यूचर। लेट्स मूव ऑन टू द गोल्ड। लाइक भी करते रहो गाइस। ठीक है, गोल्ड में देखते हैं, गोल्ड और सिल्वर, बिटकॉइन को लगा दूंगा इसके बाद में। बाकी और कोई यूएस वगैरह से भी कोई न्यूज़ तो है नहीं जिसका डायरेक्टली इम्पैक्ट इंडिया पे हो। Japan warns Vietnam of job losses as Hanoi means Vietnam capital. Motorbike ban hits Honda. European leaders back Trump's call for Ukraine ceasefire at present line. Trump makes rare earth deal with Australia to fight China.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and Nasdaq 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity.
ओके, क्रूड ऑयल एटलीस्ट मूव कर रहा है। ये ऊपर अगर जाता है, जो लोग फॉरेक्स में ट्रेड कर रहे हैं 5100 टू 110 टू 120, यहाँ से एक सेलिंग का जरूर देख लेना। ठीक है, इंडियन मार्केट तो क्लोज हो जाएगा अभी एमसीएक्स में, कल ही ओपन होगा हमारा मार्केट, बट फॉरेक्स तो ओपन ही है। बाकी गोल्ड में देखो, गोल्ड को अगर थोड़ा सा एनालिसिस करोगे ना, हायर टाइम फ्रेम पे, मंथली टाइम फ्रेम पे बुलिश ही है, कहीं से भी कुछ ऐसा लग नहीं रहा कि सेल ऑफ आएगा या आने के चांसेस हैं, क्योंकि वो जो टाइम फ्रेम बनेगा सेल ऑफ का, वो पहले स्मॉलर टाइम फ्रेम बनेगा, तब जाके हायर टाइम फ्रेम पे बनेगा। अभी के लिए तो बिल्कुल भी नहीं लग रहा है कि कहीं से कुछ भी थोड़ा बहुत भी सेल ऑफ देखने के लिए मिल रहा है। रैली देखोगे तो स्टार्ट हुई थी आपका अक्टूबर 2023 से, कंटिन्यू चलती ही जा रही है। अक्टूबर अक्टूबर नवंबर 2023 तब से रैली स्टार्ट हुई है ये, उसके बाद से अभी तक एक भी कोई नया सपोर्ट या पॉज मंथली टाइम फ्रेम पे बना ही नहीं है। तो वहां से काउंट करोगे तो ऑलमोस्ट 112-115% का रिटर्न दे चुका है गोल्ड। तो मंथली टाइम फ्रेम पे तो देखो बहुत ऊपर निकल गया है। मेरे अकॉर्डिंग मंथली टाइम फ्रेम पे इन्वेस्टमेंट करने के लिए तो ठीक नहीं है, मेरे अकॉर्डिंग तो नहीं है भाई, थोड़ा पुल बैक आना चाहिए। वीकली टाइम फ्रेम पे भी अगर देखोगे, वीकली टाइम फ्रेम पे भी कुछ खास नहीं है। 3 दिन बने बचे हुए हैं अभी भी। अगर ये वीक अगर कैंडल देखोगे, अभी क्लोजिंग में 3 दिन है, बट अभी के लिए कैंडल देखोगे तो एक डोजी टाइप कैंडल लग रही है। स्पिनिंग टॉप भी कह सकते हो, डोजी टाइप कैंडल भी कह सकते हो, 15 वीकली टाइम फ्रेम पे गोल्ड में, फॉरेक्स की बात कर रहा हूँ। तो अगर ये इसी वीक थोड़ा सा इसी तरह से कैंडल रहती है, या फिर थोड़ा सा और सेल ऑफ आ जाता है, काइंड ऑफ अगर एक इन्वर्टेड हैमर टाइप फॉर्मेशन में कन्वर्ट हो जाती है, या फिर अगर पॉज कैंडल भी बनी लाइक स्पिनिंग टॉप या डोजी टाइप कैंडल, तब आप एक्सपेक्ट कर सकते हो वीकली टाइम फ्रेम पे अगर इसका लो ब्रेक होता है तो देयर हाई चांसेस कि थोड़ा सेल ऑफ आएगा। ठीक है, और वो सही भी है। तो अभी वीकली टाइम फ्रेम पे लग रहा है थोड़ा बहुत बेरिस बन सकता है, बना नहीं है, कंफर्मेशन नहीं है, इस वीक क्लोजिंग होने दो फिर देखते हैं। डेली टाइम फ्रेम पे देखोगे, डेली टाइम फ्रेम पे मार्केट में भी कुछ खास हुआ नहीं है। मार्केट एक पैटर्न तो बना रहा है, ये सेम पैटर्न बना था अगर आप ध्यान से चार्ट देखना, निफ्टी फ्यूचर या बैंक निफ्टी फ्यूचर का डेली टाइम फ्रेम पे, आई थिंक सर डेली या वीकली टाइम फ्रेम पर ही निफ्टी बैंक निफ्टी का बना था, जब 2020 में कोविड से पहले, कोविड के टाइम पे प्राइस गिरा था, सेम ही पैटर्न था। थोड़ा सा और लॉन्ग था, ये थोड़ा शॉर्ट है, था सेम ही पैटर्न। जिस तरह का पैटर्न बना रहा है तो उसमें भी थोड़ा बहुत सेल ऑफ आता है, तो कंफर्मेशन नहीं है, बट या वही जो डोजी बन रही है वीकली टाइम फ्रेम पे उसका लो ही है 4185, इसके नीचे सस्टेन करता है डेली टाइम फ्रेम पे तो जा सकता है। 4 आवर टाइम फ्रेम पे देखोगे वो इंटरेस्टिंग है, वहां पर एक एम पैटर्न की तैयारी हो रही है बिल्कुल। 1 आवर टाइम फ्रेम पे तो एम पैटर्न काम नहीं कर रहे, पहली बार बन रहा है यहाँ पर ये एक 4 आवर टाइम फ्रेम पे बड़ा वाला एम पैटर्न। इससे पहले एक एम पैटर्न बना था बट उसका रिटेस्ट किया नहीं प्राइस ने, और नीचे उसी एम को काउंटर करने के लिए डबल बना के प्राइस ऊपर चला गया था, तो उससे उसके बाद ये सबसे बड़ा एम पैटर्न है। अगर आप रिसेंट टाइम पे देखोगे इतना बड़ा एम पैटर्न रिसेंट टाइम पे बहुत रेयरली ही बना है, ठीक है। लास्ट टाइम आप कह सकते हो ऑलमोस्ट 22 अप्रैल के आसपास बना था, तब मार्केट ने उस 22 अप्रैल से लेकर 29 अगस्त तक एक रेंज बना दी थी सेलिंग में ही। उसके बाद जब उसका रेंज का ब्रेकआउट हुआ ऊपर चला गया था, तो उसके बाद इतना बड़ा एम पैटर्न आज बन रहा है। तो लेट्स सी, ये अभी कंप्लीट बना नहीं है, अगर ये बन जाता है क्लोजिंग बेसिस पे 4185 तो या अच्छा खासा आ सकता है नीचे, अभी बना नहीं है, ध्यान रखना 4 आवर टाइम फ्रेम पे। बाकी 1 आवर टाइम फ्रेम पे तो बहुत सारे एम पैटर्न बन रहे हैं, सेलिंग आ रही है, नीचे डब्ल्यू बना के फिर सेम 1 आवर टाइम फ्रेम पे ऊपर चला जा रहा है प्राइस, तो 1 आवर टाइम फ्रेम भी इतना एक्यूरेट तो नहीं है कहने के लिए। ठीक है, तो मैं इन्वेस्टमेंट के लिए तो नहीं कहूँगा, अगर आपको लेना ही है ETF ले लो, डायरेक्टली गोल्ड में मत जाना, मेरे अकॉर्डिंग तो मत ही जाना। ठीक है, बाकी देखते हैं, क्रूड में कोई है तो हाफ प्रॉफिट यहाँ बुक कर लेना, वो टारगेट बड़ा है 160-70 पॉइंट का। 15 मिनट में देखते हैं इंट्राडे में कुछ बनता है तो, जो लोग फॉरेक्स में ट्रेड कर रहे हैं। कल मार्केट एज यूजुअल ओपन ही है, कुछ क्लोज नहीं है, मार्केट इज रिमेन ओपन टुमारो, डे आफ्टर टुमारो। यहाँ पर अभी सपोर्ट पे ही पहुंच गया गोल्ड वापस, 15 मिनट की मैं बात करूँ, यहाँ से एक बार ले चुका है, दूसरी बार आ रहा है यहाँ पर प्राइस सपोर्ट लेने, ले लिया मतलब फॉरेक्स गोल्ड में। ठीक है, गोल्ड का ही चार्ट लगा देता हूँ, 15 मिनट बचे हुए हैं, 15 मिनट की कैंडल में नेचुरल गैस में कुछ होने वाला तो नहीं है। लेट्स मूव ऑन टू द गोल्ड चार्ट। ठीक है, ये सपोर्ट ही है 15 मिनट टाइम फ्रेम का, दूसरी बार आ रहा है यहाँ पर, बट ये पहली बार एक बार ले चुका है सपोर्ट, दिस इज द सेकेंड टाइम। इसके नीचे भी है, वो भी हो गया टेस्ट। नीचे भी है एक सपोर्ट, ये दोनों ही टेस्ट हो चुके हैं, नीचे वाला तो 2 बार हो गया, ऊपर वाला एक ही बार हुआ है। बार टेस्ट हुआ, दूसरी बार, 3 बार हो गया तो। इसमें एक और सपोर्ट है। ठीक है, मल्टीपल सपोर्ट बने इसमें। मैं सजेस्ट करूंगा नीचे वाले पे ही जाना आप। 4198 से 4200 के बीच में। वो लोअर एंड पे टेस्ट नहीं हुआ अभी तक। सारे टेस्ट हो गए हैं। अरे हो गया, ये भी हो गया टेस्ट। ये भी हो गया टेस्ट। सॉरी, ये भी हो गया। ये तीनों ही लेवल टेस्ट हो गए हैं, 1 2 3 बार। ये दूसरी बार हो रहा है। ये 3 बार हो गया है। ये 2 बार हो चुका है। बट ये तीनों के तीनों डीप लेवल से टेस्ट हुए हैं, यहाँ से लोअर एंड से, बिल्कुल लोअर एंड से। ये भी टेस्ट हो गया, वाह। तो इसमें से सिर्फ इस वाले को होल्ड करना, इसी में देखना, बाकी तो रहने दो। ऊपर वाले भी हैं सपोर्ट, वहाँ पर और भी हैं। बट वो सारे हो गए हैं टेस्ट, तो मुझे लगता नहीं वो होल्ड करेंगे। थोड़ा बहुत ये कर सकता है, अदरवाइज नहीं। ठीक है, बाकी ऊपर एक रेजिस्टेंस है, स्ट्रॉन्ग ही है ये। 4360 to 370, 15 मिनट टाइम फ्रेम। 7 मिनट लेफ्ट, 7 मिनट और रह गए। यहाँ पर एक पॉइंट ऑफ इंटरेस्ट भी है, इसका भी ध्यान रखना, रेजिस्टेंस के थोड़ा सा नीचे साइड पे। देखना, अगर हो सकता है पहले ऊपर ही चला जाए, ऊपर जाता है तो ऊपर से सेल भी कर सकते हो, नीचे आता है तो बाइंग का प्लान भी रख सकते हो, ऊपर गया तो सेलिंग भी अच्छी ही आ जाएगी। बिटकॉइन को भी देखोगे तो वो भी साइड में जाए। 2 मिनट रह गए हैं, याद रखना, 2 मिनट ही हैं सिर्फ। यूएस मार्केट, इंडियन मार्केट की ओपनिंग में।
is at a crossroads. in a global power struggle over
whenever and wherever it happens. I'm Hassan Amin in Bangkok. This is Bloomberg.
So I have a 7-year-old granddaughter, and she's very smart. And I'm just wondering, is there an early decision process that Harvard has? I mean, she's very talented.
Well, David, I have to ask you, how's her pitching arm?
Season is here.
Earnings season begins once again.
So much going on.
Bloomberg is first to break the numbers.
From Snowflake, from Pure Storage, from Urban Outfitters, and from NVIDIA.
Coming up, we'll talk about some of the other earnings that are coming out.
With the smartest insights.
Third quarter numbers are going to be really important. The commentary is going to be important. It's all going to be about margins because margins lead to earnings. And if earnings come down, we have a problem.
You have to come back again soon. This is really excellent.
Continuing coverage on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Bloomberg Tech London is underway, bringing together some of the top voices in Europe to discuss everything from tech sovereignty to AI regulation, cybersecurity and industrial policy. Earlier today, we heard from the CEO of Pigment, a company that offers AI tools for financial planning.
The way I think about tech sovereignty in Europe is not so much about protecting yourself, but more growing faster. And I think we have to ship faster. We have to be faster at bringing the right technology in Europe. And this is really what I try to push, working all together, creating the right energy infrastructure, the right talent infrastructure, the right business infrastructure. And what I encourage all of our customers and businesses is to adopt technology faster.
Tom McKenzie, host of Bloomberg Tech Europe, joins us now. So, Tom, what have the executives there been saying about Europe's ability to build truly sovereign tech?
Yeah, Vonnie, well, actually, interestingly, the CEO of Pigment there, Elena Crespo, also saying that there's a need for European enterprise to adopt these AI solutions more quickly. She gave an example, in fact, of how some of our European clients might take 6 months to sign a deal and to actually adopt some of their AI solutions versus 2 days in the US. So that speed of adoption gap between Europe and the US is fundamental. And in fact, we've been hearing from executives at Mistral as well, Mistral being one of the leading LLMs, really the best hope when it comes to European sovereign large language models and AI. They've been talking as well. That executive at Mistral, she's been talking about the fact that there needs to be faster adoption because then it creates this circular momentum in terms of raising additional capital to keep funding these efforts. So adoption has been a key part of it. Sovereignty, why is that important? We've had a reminder in the news flow today of just why the focus on sovereignty is there for Europe. You think about the US signing a deal with Australia around rare earths. Rare earths, when we have a reduction there, it challenges the defense space. Defense technology and defense sovereignty is going to be key in terms of the conversations today as well. We're going to be hearing from Helsing, for example. I'll be sitting down with the co-founder and the CEO of what is the leading defense tech company in Europe. We're also talking about space innovation and how Europe needs to be less reliant, for example, on Starlink and SpaceX. So all of that is coming together in the conversations today here in London.
We are looking forward to those conversations. Our thanks to you. That is Bloomberg Tech Europe anchor Tom McKenzie. Let's stay there now because our executive editor for Global Tech, Tom Giles, is sitting down with CoreWeave co-founder and CEO Michael and Trader. Let's take a listen.
Customers in particular, and do you see a degree of urgency around sort of bespoke and very region-specific solutions in terms of the data center?
Yeah, so, you know, I think that the way that the demand comes through the market right now is it's sort of bifurcated in a lot of ways, right? Like you've got one driver of demand that's coming from the most enormous companies in the world, the largest labs in the world, you know, and you know, your OpenAIs, your Mistrals, all of them together, and they are very kind of tech forward, kind of thinking about how they're going to address this, and then in addition to that, you've got a host of startups, you've got a host of application layers that are looking to be able to orchestrate their compute that way. I mean, and we just completed the acquisition of Monolith, which was a UK-based company. It's a good example of a company that has a significant distribution of clients, kind of outside of that first tier of really, really large consumers that touch a lot of other players. Another acquisition that we did earlier this year was Weights and Biases. Another great example. They have a massive breadth of clients, really that globally that really are providing us that roadmap. So we're kind of tackling the problem from two sides, right? One is this is the really scaled players, and those are kind of relatively small in number, always have been. And then there's this groundswell of smaller consumers that you need to be able to address, and you need to be able to help them as they're tackling these problems that are going to come up where they're not going to have the ability to kind of shift workloads around within their infrastructure.
Sure. Around the time of your IPO, there was some chatter on Wall Street about a lack of diversification of your customer base, right? Microsoft accounting for a big chunk of it. Obviously, since then, you've announced some pretty breakthrough additional customers, OpenAI, Meta. Talk about. And your stock has more than tripled last I checked, so I get the sense that the market gives it a stamp of approval. I'd like to just get a sense of the degree of urgency for greater diversification, to the extent that you have that. Where does it come from and how soon?
Yeah, so look, regardless of what the street said about diversification. Diversification's always been a priority for us. We understand the value in having a broad array of clients, both from the perspective of it stabilizes your business, but also the information that you're getting by serving lots of different clients help you tailor what you're building, where you're building, how you're building, so that you're better able to serve consumers of this type of product. And so I was in an investor meeting recently, and there was a large Microsoft deal that went through.
All right, that's Bloomberg's Tom Giles speaking with CoreWeave CEO Michael Intrater there at Bloomberg Tech Summit in London. And you can continue to listen in on your Bloomberg terminal at LiveGo. Coming up, a look at what else is making headlines in your front page news. That's next. This is Bloomberg.
Southeast Asia is at a crossroads. In a global power struggle over tech, trade, and influence, will the region be able to chart its own course? Hear from top CEOs and key policymakers as they shape the region's economic future and redefine growth on their own terms. The Bloomberg Business Summit at ASEAN. Join us.
I don't even fully understand what brand strategy even means nowadays. I come from thinking about storytelling from a product marketing perspective, not a brand perspective. The splashy brand campaign has its place and it can be useful, but I think it is no longer the existential driver of success or failure. Good marketing is to understand what really matters for the people that you're selling to and explaining to your customers what your products do, what are the details that really sets it apart from the competition, that really unlocks value in a disruptive way. As marketers, our job is to go figure out what is the smartest thing for us to do and then not be emotionally attached to it if new data comes in. As long as we stay focused on that, being relevant is not going to be a problem.
Make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works on an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
In case you missed it on Bloomberg Tech Asia.
I'm in a Nissan Ariya with the latest ProPilot system developed with Wave's AI technology.
Bloomberg NEF says we'll see a robotaxi fleet about 6 million strong on the roads by the next decade. And with many of these projects scheduled to deploy across the world in the coming year, the era of robotaxis may be arriving soon to a city near you. Don't miss Bloomberg Tech Asia every month.
Time now for your front page news. First up, the Financial Times reporting the US Army has asked private equity, Apollo, Carlyle, KKR, Cerberus among candidates, to pitch strategic projects to help the service fund a $150 billion infrastructure overhaul. It's the latest effort from the administration to enlist some of Wall Street's biggest investors in national security. Next up, sources telling the Wall Street Journal a group of banks, including JP Chase, Bank of America, Goldman Sachs, is struggling to put together a $20 billion loan to Argentina without leaving themselves on the hook to the virtually bankrupt South American country. Bankers are waiting on guidance from Treasury on what collateral Argentina would be able to provide for them, or if Washington would plan to backstop the facility on its own. And on the Washington Post's front page, a federal appeals court rules President Trump could deploy the National Guard to Portland, Oregon. That blocks a judge's ruling that prohibited the action. The 2-1 majority ruled it was likely Trump acted lawfully in federalizing the National Guard during protests over immigration enforcement. And those are your front page stories. Coming up, $3 trillion in market cap reporting today. We'll get more on earnings with Sitara Sundar of JP Morgan Private Bank. That's all next. This is Bloomberg.
Southeast Asia is at a crossroads. In a global power struggle over tech, trade, and influence, will the region be able to chart its own course? Hear from top CEOs and key policymakers as they shape the region's economic future and redefine growth on their own terms. The Bloomberg Business Summit at ASEAN. Join us.
A cidade estava sitiada.
Nisso, ao começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A rare deal. The U.S. turns to Australia for a supply of rare earths with a landmark pact. The Takaichi trade. JGB is under pressure as Sanae Takaichi becomes Japan's first female prime minister. Mega caps in focus. Earnings from GM, Coca-Cola and Netflix among companies today to give insight into consumer and corporate health. So let's take a look at markets, because even with that rare earths deal, we still see futures pointed lower, although fractionally, and we should remember that we were up by 1.1% on the S&P yesterday and 1.3% on the Nasdaq. And year to date, well, don't even get me started, we're up 20% on the Nasdaq 100 year to date. Let's take a look at bonds, because yields have been moving, but they are staying where they were. We're back down to 3.96 on the 10-year yield. The 2-year yield came up to 3.45 and is staying there. The 30-year yield down to 4.55. So lots of movement in this yield curve. Ed Yardeni out with a note in the last few hours suggesting that the 10-year could actually hit 3.75 if oil continues to slide because of the correlation between the two asset classes longer run. But that's what we have to look at today. The VIX down to below 19, still slightly elevated. We have oil a bit softer, and the yen there, as you can see, weaker at 151.75 as Sanae Takaichi names new cabinet members. Let's get to some individual stocks to watch now. Over to London and Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with a check on Zions, that regional bank that was at the heart of those credit worries last week. Out with results better than expected, and shares are trading higher, up 2.5%. The CEO saying some positive things, that the issue last week was a one-off. It was an isolated incident. And even the chief credit officer saying they have gone through the loan portfolio. They don't see any other similar issues. They've also hired an external team to review their loan portfolio as well. So it seems like things are bouncing back when it comes to U.S. regional bank. Zions in the green this morning. Let's move on to the AI trade. The headlines this morning are around Core Scientific, who's attracted a takeover bid from CoreWeave. Now, Core Scientific used to be essentially a Bitcoin miner. It's now changed to having computing capacity available for AI data centers. Now, Core Scientific, the key proxy advisor, has suggested that the bid from CoreWeave is too low. Now, the shareholders will vote on this takeover next week, but it does seem like unless CoreWeave does increase their bid, they will vote no on this, and shares are trading 3% higher on the back of that. Lastly, let's end in the healthcare industry. DocGo, this is a mobile healthcare services provider, has announced an acquisition of SteadyMD. That is a telehealth platform. They're looking to offer services now across all 50 states in the U.S. Now, it was an undisclosed figure that DocGo had paid for SteadyMD, but still shareholders, I guess, are looking positively on this. DocGo is up 41% so far in pre-market trades. Bonnie?
Another massive move. Valerie, thank you so much. That's Valerie Teitel there. $3 trillion in market capitalization reporting today. JP Morgan's Sitara Sundar keeping a close look and writing, quote, "The critical test is whether ongoing AI spending is being effectively monetized with additional attention on supply chain indicators like book-to-bill ratios and data center power timelines." I'm pleased to say Sitara joins us now. She's head of alternative investment strategy at JP Morgan Private Bank. So Sitara, thank you so much for joining. Obviously, that particular quote is about the AI trade. So let's get started there, even though today it's more of the mega cap consumer focused names. The AI trade, will it bring us through this earnings season intact?
So it's the number one question we're all grappling with, because markets don't seem to be as patient when you think about this dual mandate that we've placed on a lot of the hyperscalers and the bigger tech players that have been dominating returns, not just year to date, but over the past 2 or 3 years, is this dual mandate of efficiency from the cost side and then optimization in terms of actually seeing productivity and efficiency gains from artificial intelligence in terms of it impacting the bottom line. But what we expect to see in this earnings season and what consensus expects to see is still around 8% earnings growth, which is still meaningful. It's a deceleration from what we've seen over the past couple of quarters, but still meaningful. And tech and comm services is going to contribute about 60% of that, which is meaningful. That's the expectation. So what we're looking for is any indications and signs about artificial intelligence and actual productivity gains or signs of productivity gains on the investment that's already been put into place. And then two, on what that CapEx investment outlook is still going to be. Are these hyperscalers still going to be putting the same amount of CapEx to work as they have been, or are we seeing any signs of a slowdown?
So we do have a couple of weeks before we get to some of those big names. As for the universe of names that we saw on the screen a moment ago, they're all today. So 3M, Coca-Cola, and Netflix. We're going to get some real insight into the consumer, presumably, today.
Yes, and it's increasingly important. I think whenever we think about the market, there's always this adage that's mentioned that the market is not the economy. And a lot of that is because the economy is shored up by the consumer. It's a little bit different so far this year because we've actually seen AI CapEx actually boost up some of economic growth, at least within the United States. But the consumer still makes up 60% of GDP. So when we're looking into earnings so far this season, it's the health of the consumer balance sheet and what consumer spending levels look like, and whether or not consumer spending in general is just on staples, or if we're actually starting to see a pickup in discretionary spend, and whether or not we're seeing a pickup in broad-based discretionary spend. And we have seen some indications of airline activity pickup and travel pickup as well, that we still feel confident on not just the consumer balance sheet, but their propensity to spend.
Yeah, because we also haven't been getting readings of inflation expectations, right? Not official ones really anyway. So there's a lot to ask in these reports. That said, they're a little bit backward looking, so we have to watch for what is being said on the conference calls and so on as to the outlook for the consumer. But I mean, the executives are flying as blind as we are on this, right? We still don't know the impact of tariffs.
So I think the biggest thing is that in the same way that we think about portfolio management as probability weighting scenarios, we know that even in the past couple of earnings seasons, a lot of executives have come out and trying to probability weight the different scenarios that are out there in terms of what that means for guidance and forward-looking guidance. You have usually the base case scenario, which is even our base case scenario of moderate economic growth, though economic growth is going to be slowing, but not a call for recession. We still don't believe that recession is our base case. But there is this left tail risk that continuously rises, which is this idea that inflation and inflation volatility is going to be a persistent risk that we have to monitor for. And that means in terms of companies, there's already been, when you think about tariffs, supply chain mitigation efforts that have happened over the past couple of years. This is not the first time that the United States has been in trade negotiations over the past few years. So there's already been some of that where we've already seen companies mitigate the risk of tariffs. But when we think about the outlook moving forward, it is 100% right to say that inflation volatility is likely going to be here to stay. We actually just released our long-term capital market assumptions yesterday, which is our forward-looking projections for what we think the world is going to look like over the next 10 to 15 years. And one of the findings from that is that inflation volatility is likely going to be persistent. Inflation is likely going to be a little bit higher, which means that the correlation benefits that you've usually gotten in a portfolio from just stocks and bonds may not persist moving forward.
Is that going to be visible as soon as Friday when we get the CPI data? Hopefully, fingers crossed. Or, are you talking more longer term? And also, how do you play this inflation volatility, given that we know the Fed is, very concerned about the labor market, right, and likely to
Definitely. So on the first point, it's likely going to be a longer term story. I think you're going to see fits and starts in terms of where inflation is headed, but the likelihood.
Absolute Strategy Research seeing signs of an AI bubble, and Chris McGrassie of KBW as two regional banks shake investor confidence. We begin this hour with stocks sliding and the 10-year bond yield falling below 4% as more credit cockroaches are seemingly uncovered. Matt Miskin of John Hancock writing, bond yields are living on the brink. If yields fall, income opportunities that we've been talking about for years will vanish. Matt joins us now for more. Matt, welcome to the programme, buddy. Before we get into the bond market, let's talk about what sparked the recent move in the last 24 hours, credit jitters. Matt, how justified are those concerns this morning?
We're going to just have to see. I'm looking at high yield spreads, John, this morning. I'm not seeing that much credit concerns. High yield spreads are still under 3% here. So broadly speaking, the markets are holding up okay. But it's almost like you're a mechanic here and you're opening up the hood and you got to see what's underneath it. And it's hard to do because it's not that transparent. In general, though, as you two have just brought out in terms of opening up the show, markets were priced for perfection. You know, we're still at 22.5 PE on the S&P 500, near all-time highs. High yield spreads are still tight. We just had a massive rally. In our view, you wanted to manage risk. You wanted to prune some of the winners. Income is still available, but it is moving away fast. We want to make sure we've got that in the portfolio and move up in quality.
So let's just stay on the credit story, Matt, just for a few more beats. There's obviously concern about the credit cycle turning. But when you look at non-performing loans, net charge-offs of the banks, there doesn't appear to be much to worry about. In fact, the banks, the big players at least so far this week, have absolutely crushed estimates. But Matt, you've got these big flashy headlines, Tricolor, First Brands. Is there anything more than that catches your eye?
Yeah, more broadly, the macro has been weakening for months. And, you know, we've been talking about this. You know, the jobs data is getting weaker. We've had housing slumping. We've had, I mean, some of the business surveys have been weaker, and it's all over the place. So in our view, the macro has been signaling to you that the underlying economy has been weakening, and yet asset prices haven't reflect that at all. So what we're looking at is more of a realization that the underlying economy isn't as strong as the markets had been reflecting. In our view, that's a dose of reality that's probably good. You know, I think about got milk. Well, it's got bonds right now, high quality ones in nature. In our view, they've been underappreciated for much of this year. Pound for pound, they're up about 7-8% with much lower volatility than equities. Not a bad place to be right now.
So, Matt, when you say bonds, what are you actually talking about specifically? You're talking about treasuries or something else?
Yeah, treasuries are a part of that. MBS, investment-grade corporates. Investment-grade corporates is our new high yields in terms of how much credit risk we're willing to look at, but also municipal bonds. This is a kind of a sleepy part of the market for U.S. investors, but tax-free municipal bonds are actually, on a tax-equivalent basis, giving you almost high-yield type income. To us, that's a really attractive place to be, too.
Matt, does this remind you a little bit of what happened in 2023 when it comes to Silicon Valley Bank?
It's a start. Yeah, the shoot first, ask later type market response is definitely reminiscent. It's bringing back flashbacks of that period. The difference between now and then, the Fed was hiking back then. The 2-year yield sniffed it out just like it's sniffing it out now, but the 10-year yield back then was about 3.4%. So just to put it in perspective, that's how much more we could see a drop in the 10-year just pricing this in. Now, then the Fed also stepped in. So we've got a Fed that's all over the place. Just yesterday, the last 24 hours, it's even more bifurcated on Fed messaging. You had Waller saying one thing, Moran saying another. And so you've got to get the Fed to start signaling that they would be a backstop, in my view, to start to heal this kind of regional bank stress. But with a Fed that's really diverging in outlook, it's going to be hard to get them all on the same page.
Well, they're not diverging in terms of what they expect at the end of the month, which is a rate cut.
Yeah, after that, though, what's next? Waller's saying basically yesterday, we might need to take a break after that. Moran's saying we should do 50 basis points. So, obviously there's different perspectives there. But it's what next? And the signals, if the 2-year yield is telling you, the 2-year yield just broke 3.5%. And I just keep going back to, if you want to have a Fed view, talk to the 2-year. The 2-year yield is the best crystal ball on Fed policy. And it just told you that the Fed's going to have to act more aggressively on cutting than it did before this week.
339 at the moment, which is quite a rally considering where we were only a few months ago discussing what the Fed could or couldn't do. We're down 3 basis points on a session so far. Matt, this move more recently, though, is about credit and risk aversion, driving people away from equities into bonds. When you look at the broader economy, and this is a conversation we had with Governor Waller yesterday, the broader economy seems to be okay. The one standout, in fact, some people might say the outlier, is this massive step down in payrolls. And Governor Waller himself will acknowledge it's kind of strange that you've seen this massive step down in payrolls, employment, and at the same time retail sales has held up. Matt, how do you think that's going to resolve itself in the coming quarter?
Yeah, I mean, Halloween's coming up here, and I think about basically the Fed has an eye patch on right now. They're going to get part of their mandate data with the CPI just because they want to open it up for the COLA reassessment, but they're not getting much jobs data. The NFP is not going to be there because of the government shutdown. So they're almost half, they've only got one eye really to look at this. I'm looking at Indeed job opening data. It's on the Fred website if you ever want to nerd out and watch some economic charts with me. That keeps going down. This website, this other source called Link Up provides data on job openings. That actually just showed September job openings were moved down. Basically, companies are starting to move job openings off. And to me, that's just showing more weakness in the jobs data. I think the Fed is underappreciating this. You go back over history, negative NFPs or jobs reports are very infrequent. Most of them happen in recessions. The only time that we saw it not in a recession was 1996. So either you need the markets to keep going like this. And just to put this in perspective, John, consumer net worth is $170 trillion. All right. The economy is $30 trillion. Basically, the markets and the wealth effect of the markets is overpowering the economy. That's what matters. And if you get jitters in these markets that show a negative wealth effect translate into the economy, I think that's going to spell more weakness on top of the already weak jobs data. And to us, that means the Fed's going to have to cut more than they expect.
So what does that mean, Matt? So right now, Fed funds has a 4 handle. What do you think it's going to look like 12 months from now?
I think it could be sub 3%. And if you're down to 3, and this is a global phenomenon, look at the European 2-year yield. It just rolled over after being in a nice uptrend. In the end of all this, excuse me, but basically we could go all the way almost back to zero interest rate policy. We haven't even gotten to the hard part yet.
Hold up, Matt. Pause. You think we can go back to zero?
We haven't even gotten to a recession yet or any real liquidity event. High yield spreads are still tight. The market's near all-time highs. This is not yet the real troubling part of the market. When we get there, I think the Fed's going to have to cut more than the markets think. I think it's going to be a global phenomenon. And I think you could need to go back there. The government doesn't have the ability to provide fiscal stimulus like last cycles because they are so tapped out. They've already done so much. So the government's going to say, look, we can't provide the stimulus we used to. Federal Reserve, it's on you to get us out of this. And I think that's going to make them have to cut more than they typically have to and maybe even reach the lower bound.
Matt, appreciate it, sir. Matt Miskin of John Hancock. Everyone's entitled to an opinion. If he's right, Governor Myron has got some company.
Governor Myron might have some company, and potentially Governor Myron could do that at the end of the month when he sits down with his colleagues and explain his point of view. But I don't think Waller was saying they can't go there. The quote from Waller is, you don't want to make a mistake. You want to be cautious and you want to be careful. So why not do 25 and then recalibrate and see where the economy is? And also, maybe we'll get some government data.
This market recalibrating, bond yields down on a 10-year maturity now. About 396 at the front end of the curve. Two's down 339. Let's get you an update on news worldwide with your Bloomberg brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Good morning, John. Yes, back to those regionals. The S&P Regional Banks Index suffering its worst day since April after Zions Bancorp and Western Alliance said they were victims of suspected fraud on loans tied to distressed property funds. 74 of the biggest U.S. banks shed more than $100 billion in market value. The White House is poised to deliver a major win for automakers, easing tariffs after months of lobbying by Ford and GM. The Commerce Department is expected to announce a 5-year extension of an agreement that allows car makers to reduce duties on imported parts. It's a key offset to Trump's record-level auto tariffs. President Donald Trump's former national security advisor, John Bolton, has been indicted over allegedly mishandling classified documents. Bolton was charged with 18 counts by a federal grand jury in Maryland. He served for more than a year in Donald Trump's first administration, but then became an outspoken critic of the president. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the programme, bringing Russia to the table.
I thought it was a very good phone call. I thought very productive. But I'll be meeting with President Putin, and we'll make a determination. We hope we're going to get it stopped.
That conversation up next with the former White House Deputy National Security Advisor, Victoria Coates, from New York City this morning. Good morning.
Southeast Asia is at a crossroads. In a global power struggle over tech, trade, and influence, will the region be able to chart its own course? Hear from top CEOs and key policymakers as they shape the region's economic future and redefine growth on their own terms. The Bloomberg Business Summit at ASEAN. Join us.
Two names in a moment in the pre-market shaping up as follows. Zions down 1%. Western Alliance down by 1.5. These so-called one-off credit events are starting to add up. These two banks disclosing a $50 million charge-off. That was Zions yesterday. Western Alliance also revealing some negative exposure to potential fraud. This is a conversation that builds after the events of the last few weeks, including Tricolor and First Brands. And it's dragging down the big players as well. Check this out in the pre-market. The likes of JP Morgan down by 1.5% also. This after a week of fantastic earnings from all the banks on Wall Street. Beats across the board. Citi's down by 2% on the session. That risk aversion reflected in the broader index as well. On the S&P 500 down here by 1%. On the Nasdaq 100 down by 1.3%. Also captured in the bond market. 10s sub 4%. 2s sub 340. We're down 4 basis points at the front end. 338. One guest already. It's just amazing how quickly the tide turns. One guest already on this program talking up the potential of taking rates down to zero. Steady on. That's a major call from John Hancock a little bit earlier this morning. Check that interview out with Matt Miskin on Bloomberg.com and on the Bloomberg terminal. Under surveillance this morning, let's talk about foreign policy, bringing Russia to the table.
I thought it was a very good phone call. I thought very productive. But I'll be meeting with President Putin, and we'll make a determination. Tomorrow I'm meeting with President Zelensky, and I'll be telling him about the call. I mean, we have a problem. They don't get along too well, those two. We hope we're going to get it stopped.
So here's the latest this morning. President Donald Trump meeting with the Ukrainian leader later on today and planning to meet with the Russian leader in the coming weeks. For an update, Bloomberg's Jack Fitzpatrick joins us now for more. Jack, we had a feeling after the big event in the Middle East earlier this week that this would be the next big effort. How are things shaping up?
Yeah, there's a lot of expectation among both sides, or all sides, I should say, that the developments in the Middle East have enabled the Trump administration to shift its focus to potentially take a different direction on the Russia-Ukraine war. Both Russia and Ukraine were hoping that could play to their advantage. We're still finding out whether this latest development, setting another meeting with Putin, is a reversal to President Trump's original position, trying to seek a friendly relation with Putin and call off the pressure campaign against him. I think we'll learn a lot more because there is the meeting today, this afternoon, in the White House with President Zelensky, who likely has learned some lessons from his last Oval Office meeting. You can't pressure Trump too much to come to your aid, but Zelensky, I'm sure, will try to suss out exactly what Trump's position, exactly how much he's changing. Lately, he's been much more favorable to Zelensky and more pressure, focused on pressuring Putin, but we'll see how much of a reversal that is, and we've got a couple weeks of planning for this Budapest meeting to figure out exactly what Trump's position is.
Jack, given the apparent success of the president in the Middle East, is there a sense that the president's now operating from a position of increased strength?
Yes, that seems to at least be his interpretation and the expectation of President Trump, that he's gotten one thing more or less off his plate and can focus on Russia and Ukraine if that's where he wants to put his focus. The president is someone who operates on a sense of what victories have I had, operating from a position of strength, getting momentum off of what he sees as a win. He's feeling good about what he's done in the Middle East. And I think, again, that raises questions about what direction he takes this with regard to Russia and Ukraine. But he's looking to make decisive moves on that front.
Hey, Jack, appreciate the update. Thank you, sir. Jack Fitzpatrick of Bloomberg down in Washington, D.C. To extend the conversation, the former Trump Deputy National Security Advisor Victoria Coase joins us now for more. Victoria, welcome to the program. We have an anti-war president who's not afraid of using hard power to try and de-escalate things. That's put him in a position of strength in a place like the Middle East. Can we leverage that success in that region and apply it to this war in Ukraine?
Well, good morning. Yes, I think we can. And certainly what was demonstrated by President Trump last week, bringing together all of those heads of state, not just from the Middle East, but from Europe, from countries like Pakistan, from Indonesia, together to get to progress on the Middle East. And we saw the hostages come out of Gaza. Nobody thought that was possible. And I don't see anyone, not Vladimir Putin, not Chairman Xi of China, performing that way on the world stage in terms of diplomacy, in terms of progress towards peace. So I think that does build momentum for him. Obviously, the Ukraine problem set has been intractable. He has said repeatedly he thought that was going to be easy. It's turned out to be the hardest. But progress in this phone call with President Putin, in the decision to meet in Budapest in coming weeks, hopefully we can get towards a resolution.
How does the president cajole Putin to the table? What carrots could the U.S. offer?
Well, I don't know that it's so much carrots. What I heard also in his remarks yesterday, which caught my attention, is the assertion that India is going to start to reduce their purchases of Russian oil. India is now the second largest purchaser of Russian oil. And in the first Trump term, the Indian purchases of Russian oil were very small, maybe 5% of their imports. Now it's up over 40%. From the most recent estimates. So that's a massive amount of income for Putin. That's keeping this war machine going. And the president said yesterday that he'd talked to Prime Minister Modi. Modi said he was going to reduce them. There are reports that our brand new ambassador to India, Sergio Gore, who's known to be very close to the president, has met with the prime minister and discussed this. If we can get the Indians to reduce those imports the way we did with them in the first term when they were importing so much Iranian oil, that's a big stick, not a carrot, for Putin. That may be what's actually going to bring him to the table.
Another big stick potentially is sending Tomahawks to Ukraine. There's going to be a weapons discussion today in the Oval Office. What do you think the outcome is going to be, Victoria?
Well, we'll see. I mean, that would be a big step. The Tomahawks obviously can strike much deeper into Russia, potentially hit the launchers that the Russians are using to attack Ukraine. It's going to be up to the President, Secretary of War Hegseth, if they decide that is a good strategic move for the United States. I mean, the problem is that while we do have a significant stockpile of Tomahawks, they're not limitless. They're expensive. They take a while to make. And so we have to be very careful to balance what we're giving to Ukraine with what we might need in the Pacific in the event of a conflict potentially with China.
Yeah, they cost nearly $2 million. If the president was to offer these Tomahawks, what do you think the signal would be from Russia regarding this?
Well, for Russia, I mean, this would be, a major step and a potential escalation. But bear in mind, Russia has also been escalating in Europe. They've been sending drones, even MiGs, over some of our NATO allies, Estonia, Poland. So they've been pushing at the boundaries as well. And so for the president, that'll be a strategic decision. Does he want to push back on Putin the way he pushed back on Iran with the B-2 strike in the spring, when they had just kind of dragged that diplomatic situation out to the point that he didn't think there was a diplomatic option on the table? And he has given Putin every diplomatic opportunity to come to a resolution of this war. It's going to be when he makes the decision. Putin is just being obstreperous. He's not going to come to the table. Does he want to take that next step, which would be the Tomahawks?
Victoria, you've worked with the president. Could you share with us his approach to moments like this? Because it's often said that typically when heads of state get together, 99% of the work has been done by diplomats. Heads of state sit down, sign a deal. But with the president, it's often described that he approaches these moments almost on the fly, that nothing's been agreed. He wants to see the person face to face. What's your experience of how it actually goes down?
Well, that's not entirely accurate. There are going to be a series of meetings this week between top-level diplomats. I expect Secretary Rubio, Steve Witkoff will get together with Russian counterparts, discuss where they are in their calculus. This will give the president some context for where Putin's head is when he goes to Budapest. And then, but at the same time, I do think you're correct. He does try to go in without a lot of kind of preconceived parameters. He wants to see what's possible. He has an incredibly strong nose for people. He can just kind of figure out where they are, what might be done. And he's said over and over again, he wants to end the killing. He wants to end this grinding, horrible war. And so if there is a path there, if Putin is feeling the economic pain, if he's concerned about the situation with India, maybe there is an opportunity that there wasn't when they met in August in Alaska.
Victoria, appreciate your time on the programme today and your experience. Thank you. The former White House Deputy National Security Advisor, Victoria Coates, hopeful that Budapest can be different to the Alaska that you experienced on the ground.
Right, and Alaska was really what you're describing in terms of the president taking this starting gun approach. I'm going to meet leader to leader first, then the diplomatic work can trickle down. There will be Secretary Rubio heading over, but the president wants to sit face-to-face with Putin after today. He sits face-to-face with Zelensky and really debriefs him on this phone call. We just heard from the Kremlin that Putin got off the phone with Viktor Orban. Potentially, are we seeing contours of a group of these leaders getting together? Because really for this war to end, it needs to be a trilateral. You have to have Putin, Zelensky, and Trump in a room.
That's the latest on foreign policy. If you're just joining us, of course, an additional focus on what's happening with the regional banks. We're getting some earnings this morning. This coming from Comerica. Net charge-offs, $32 million. The estimate, $28.6 million. Nothing too scary about that number right there. Net interest income was a beat, $574. The estimate was $569.3 million. We get a range of earnings from regional bank lenders in this country throughout this morning. A lot of focus on that given what happened with Zions and Western Alliance yesterday and the kind of moves it triggered in the broader market. Some negative follow-through this morning. Futures down by 1% on the S&P. Up next on the show, we'll catch up with Ian Harnett of Absolute Strategy Research on another massive AI deal, adding to bubble concerns. Plus, Danny is back. She's got your morning movers with growing credit fears, sending bank stocks lower. I know it doesn't feel like it, but coming into Friday, actually heading towards a week of gains. We've just had these massive swings. Another 1 percentage point swing in yesterday's session, and this morning we're down across the board, threatening to take out those gains. We're down by 1% on the S&P. On the Nasdaq, we're down by 1.3. In the bond market, at the front end of the curve, a move of more than 10 basis points so far this week, 4 of which come this morning. 338 on twos, new lows for 2025 across the board, potentially here. 10s at 394.76 and down 3 basis points on a session. And if you want to rally a bigger one, check this out. In the gold market, a 6th consecutive day of gains, up a third of 1%, heading towards a 9th straight weekly advance for gold. The longest weekly winning streak going back to 2020, and this week higher by 8%.
And you can see why, right? You have loan blowups in the United States that everyone is looking at whether or not this is idiosyncratic and independent, or potentially is it more systemic? Are we going to see more cracks, more cockroaches? At the same time, what is going on in the macro environment? The two biggest economies right now are at loggerheads, trading hot rhetoric, and yet we do not know what the end game is going to be when the president sits down with Xi Jinping. We think there's going to be an off-ramp, but we don't have that just yet. So this is why. Where else are you going to go? It's a haven trade.
43.37 on gold so far this morning. That story just keeps on moving and moving higher. From New York, welcome to the program. That's the cross-asset setup. Let's get you some single names in the pre-market, some morning movers. Here's Danny. Hey, Danny.
Hey, John. Has another little critter or two scurried out from underneath the fridge. This morning, the sell-off continues in Zions and Western Alliance, both those regional banks earlier this week, taking a $50 and $100 million write-off, respectively, tied to loans gone bad. This was regarding a distressed real estate developer, but it has echoes of Tricolor, of First Brands, of alleged allegations of fraud, of collateral that maybe wasn't there. And Anne-Marie, as you put it, the question is going to be, are these cockroaches or are they termites that have chewed through the foundation? But we are selling first and maybe deciding on those questions later, because you're also looking at the big banks taking an even harder hit this morning, whether it be Bank of America, Citi, Wells Fargo, all of them down at least 1%, nearing 2% for both Bank of America and Citi, despite the fact that they reported earnings that had better credit quality than quarters past. It's not just the big banks, it's also private capital firms that are being hit hard this morning too, those that have big private credit operations. KKR down 2.5%, Ares down 1.6%, Apollo down 2.6%. 0.4%. Of course, all of these and a lot of private credit managers have been very vocal. We are not the cockroach. The banks are the cockroaches, including my conversation with Blue Owl earlier this week. But even so, all the financial services sector is taking a hit, John.
Danny, thank you. Thanks for the update. More from Danny in the next hour. More earnings for you. These come from Fifth Third. Fifth Third, of course, in the news more recently for taking out Comerica. Interested in net interest income, that comes in at 1.53 billion. The estimate was 1.52. Provision for credit losses, a number that's going to take an increased importance, of course, given the events of the last 24 hours. $197 million. The estimate was 239. We'll keep tracking that story for you throughout this morning. On our radar this morning, our top story, regional bank stocks sinking with credit concerns weighing on global equities. The slide following Zions and Western Alliance reporting fraud on loans tied to distressed commercial mortgages. Those names again, just slightly so far this morning. Elsewhere, a major relief for the auto industry. Sources telling us here at Bloomberg the White House is aiming to grant car makers a 5-year extension on tariff relief for imported parts. A big win for the likes of Ford and GM after months of lobbying. And finally, the White House teasing another summit between President Trump and the Russian leader. The news coming after a 2-hour phone call between both of them. President Trump is set to meet with Ukrainian President Volodymyr Zelensky later on today.
And then in 2 weeks, he says, or about 2 weeks, he's going to be sitting down with President Putin. At the same time, the Kremlin just came out and said Putin just spoke to Viktor Orban, where the president is going to be meeting Putin in Budapest. So behind the scenes, there's a lot of work and momentum potentially driving ahead to try to put an end to this war. Even Democrats this morning, Jonathan, Rahm Emanuel in the Wall Street Journal talking about after a success in Gaza, Mr. Trump standing on the global stage has never been higher. Some of them are saying, though, do more. That sanctions package that's been lingering in Congress, put that forward. Send Ukraine the Tomahawks. Give them everything they need to defeat Putin. At this moment, the president has been 2 steps forward, almost 1 step back when it comes to trying to cajole him to the table.
We talked to Victoria Coates just moments ago. She'd worked alongside the president years back, and we talked about the increased leverage he might have given the success in the Middle East. It's an anti-war president who's not afraid of using hard power. I think it's important to talk about this. If he doesn't have success at a Budapest meeting, if it looks like something that we saw in Alaska, what's the next step for the president and this White House?
I think he starts to rearm Ukraine in a bigger way. Those Tomahawks, maybe they're on the table today for discussion. Maybe they don't get delivered, but if this meeting fails, potentially he doubles down on backing Zelensky. Remember, this entire year, February 28th, that meeting in the White House between Putin and Zelensky, I was at the White House. That was a massive blow-up. Then in August, Zelensky came back, and you saw a much warmer approach between these two men. And even the president coming out and saying things like, I see where he's going, I see his side. So potentially, you're going to see him really double down on backing Zelensky if this Budapest meeting falls.
Look out for that meeting later on today between the Ukrainian leader and the President of the United States, Donald Trump. Let's turn to tech. Sources telling us here at Bloomberg that Meta and Blue Owl are set to seal a $30 billion private capital deal for an AI data center in Louisiana. Ian Harnett of Absolute Strategy writing in the Financial Times recently, the AI bubble looks to be approaching its endgame. But history shows that a bust triggered by this overinvestment may hold the key to the positive long-run potential of AI. Ian joins us now for more. Ian, welcome back, sir. Been trying to make this happen for a while, so appreciate your patience.
Yes, we have, Jonathan.
Let's get to this story. Why do you think we're approaching a so-called endgame?
So I think, if you look at what's been happening in the AI stocks, we've got all the classic symptoms of, a bubble. I do think it is a bubble. We've outperformed since 2016. The FANGs Plus index has outperformed the global stock market 6-fold over. The TMT bubble only saw a 5-fold increase, Jonathan. We've got exponential share prices. Companies are using those share prices to do deals with each other. They're buying each other's goods, and they're even lending each other money to do so, that vendor financing. So the key final element of any bubble is always this overbuild of capex, and that's really the bit that we're seeing now. And I think it doesn't mean that the AI bubble is going to stop tomorrow, or maybe not even 6 months' time, but the end game is definitely coming in place here.
So, Ian, when you compare this moment to what happened in the late 90s, and you think about the companies central to this moment versus then, the companies now have incredibly strong balance sheets. When you say endgame, I'm sitting here thinking maybe this can go on for a whole lot longer than people realise.
So, Jonathan, the thing that we always try to remind our clients at Absolute Strategy is that, the theme may be structural, and the companies that are winners will probably be the winners in the future. But 2 things to bear in mind. First of all, the companies, the winners in the digital age today, Microsoft, Amazon, Oracle, Apple, they all lost between 65% and 95% in the tech blow up. And you know, Microsoft took 16 years to get back to its 2000 level. So there's a price for everything. The second point is the structural story, the theme. It's going to stay there. It's going to be there. AI is going to be. But the problem is that your clients need to have the cash flow. So the theme can be structural, but you know, in the end of the day, the economy and the clients of the AI businesses are going to be cyclical, and that means that somebody's going to run out of cash at some point. So cash flow is absolutely key here.
Ian, you also talk about how tech busts have more negative economic impact when it's funded by debt rather than equity. Can you explain what potentially that can look like if this bubble bursts?
Well, I think that, you know, if you look at the scale of the bust that we saw around the GFC and the debt, you know, losses that were imposed there, debt deleveraging is a very damaging process. Equity bubbles, as we saw in 1987, 1998 with LTCM, you can probably recover from those relatively quickly. And even the tech blow up, you know, you did come back from that relatively quickly. So the economic cost, I think, tends to be less. But the dangerous lesson from history is that if you are the equity holders funding this kind of accelerated capex build out that takes place when people get crowded into these bubble themes, you typically lose around about 70 to 80% of your capital. So, you know, funding this via equity rather than running, just as Jonathan was saying, if these companies were only using their own cash, then that would be great. But they are using other people's money as well.
And I wonder what GDP would look like. If you look at GDP at the moment, just how dependent are we on that capex story already?
Yeah, we're very, and this is something that our chief economist, Dominic White, has been highlighting to clients as well, that, you know, almost half the growth in the US economy so far this year has actually come from this AI-related capex. So it's almost as large as total US consumption spending. So this is the first time we've really seen that scale of capex driving GDP growth like this. So, yeah, you'd be in a very different situation, I think, Jonathan, if we didn't have this. And this is one thing why we should celebrate this kind of bubble, why we should celebrate this kind of capex, but you know, recognize that it doesn't go on forever, and you know, there are limits to how strong you can see this performance go on for, and how long it can last as well, typically.
So, Ian, just finally, this is your framework for thinking about a pretty important moment and a major transition. What's your approach? What are you advocating for in financial markets, given everything you've just said?
Well, at the moment, we're still overweight equities, partly because you're seeing an administration that wants to cut interest rates into double-digit earnings growth. Historically, that has been very positive indeed. But what we're saying is watch out for those early warning signs. Watch out for nominal growth, nominal earnings, but most importantly, Jonathan, nominal cash flows. When those start going down, and particularly the cash flows of the people that are buying the AI services, then that's the point at which you want to be thinking, well, maybe I want to be in something else rather than some of those tech stocks and some of those highly geared plays in the equity market.
Ian, appreciate your time. It's good to see you again. It's been far too long. Thank you, sir. Ian Harnett there of Absolute Strategy Research on the equity market. Equity futures this morning down by about 0.9%. We've got a lot of news flow to deal with. Let's get your top stories in your Bloomberg brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. Well, the U.S. government shutdown is in its 17th day with no end in sight. Senate Majority Leader John Thune is trying to entice Democrats to support reopening the government by promising a vote on Affordable Care Act subsidies once the shutdown is over. So far, the offer has not been enough to get the needed 5 Democrats to pass the GOP-led stopgap funding bill. The consortium buying video game maker EA is set to add more than a dozen banks to its underwriting group. This comes after JP Morgan put up $20 billion of debt to bankroll the leveraged buyout. Around 15 banks are likely to join the underwriting group, with some taking around 10% of the deal apiece, while JP Morgan will keep around 40%. IKEA is boosting its U.S. production after President Trump imposed tariffs on furniture and kitchen cabinets. The retailer currently produces around 15% of products domestically. IKEA plans to invest $2.2 billion in new stores and production facilities. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next on the programme, complacency turning to concern.
The problem is investors have been used to this environment of low volatility. The volatility, the price discovery in the market is being suppressed for a very long time, and investors have misallocated capital to vehicles that don't have mark-to-market.
That conversation up next with Chris McGratty of KPW from New York City. You're watching Bloomberg TV.
Good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level, being open to comments, feedback, discussions. There's always this back and forth workflow. Sometimes conversations with different people might open up ideas to explore.
Embrace a growth mindset. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
Equity futures on the S&P 500 down by 0.9%. A bit of tension building in the last 24 hours regarding credit and credit risk. The Nasdaq 100 also participating in the downward move, down by 1%, and the underperformance from the smaller players. The small caps this morning down by 1.25%. Under surveillance this morning, complacency turning to concern.
We're at a 30-year tie in credit spreads, and this has been fueled by monetary liquidity and fiscal spending. The problem is investors have been used to this environment of low volatility. The volatility, the price discovery in the market is being suppressed for a very long time, and investors have misallocated capital to vehicles that don't have mark-to-market. We believe there's going to be more pain in the coming quarters.
So here's the latest this morning. Credit fears growing on Wall Street. Zions, Western Alliance, both disclosing loan fraud losses, sending regional bank shares plummeting and triggering fear across Wall Street. Herman Chan of Bloomberg Intelligence joins us now for more. Herman, welcome to the program. Just in very simple terms, what did we learn yesterday from these two banks?
We learned that there was a couple of loans that the two banks in question had exposure to, but they should be fairly small, relatively small losses, and the contagion fears seem to be a bit unwarranted given the fact that we've seen a slew of regional banks report this morning, and we've had regional banks report over the past couple of days that showed credit quality is really stable and solid. So there's a lot of fear in the marketplace given the fraud issues that are really hard to screen for. So that's really driving the anxiety today.
David George of RW Baird said something similar, Herman. He said to take advantage of today's weakness in the bank group, and he upgrades Zion to outperform. Says market participants are fighting the last crisis. $1 billion market cap decline, over $50 million in losses seems a bit excessive. Herman, can you comment on that? Fighting the last crisis. Are we more spooked by this because of what happened in the past few years?
I think so. I think the scars from the SVB issue and the other banks that failed really are on top of mind today. But I think this is a different issue, right? This is a credit issue, not a liquidity and deposit flight issue. And the banks have really strong capital that they've built up since the SVB crisis. And we think that these issues are a bit more one-off in nature that can be readily absorbed. Nonetheless, the contagion fears have affected the marketplace today.
Herman, thank you. Herman Chan. That fear continues. Thank you very much. Chris McGratty of KPW writing the following. The market is becoming increasingly concerned about credit quality, with now 3 prominent bankruptcies shaking investor confidence. Chris joins us now for more. Chris, welcome to the program. Before we get to these flashy headlines, Chris, can we spend some time just focusing on the details, the work that you do? When you look at a company, a bank like Zions, net charge-offs, non-performing loans, how good is the credit quality at that bank?
Well, Zion's balance sheet's in a great spot, right? They had an unfortunate credit announcement this week, but if you look at the balance sheet more comprehensively, non-performing assets are 1% of total assets. So we're off very low levels. Now, this normalization process that we're talking about, we're coming off of multi-year lows, and so that process can be painful when you see losses like this. But if you think about the capital position of the company, the credit quality of their portfolio, we think they're in a great spot. And more broadly, we think the industry's in a really good spot.
So, Chris, why do you think these more flashy headlines in the last 24 hours have spooked people to such a degree when you're able to break down the strength that you see elsewhere in the majority of the bank?
Right. The market sells first and asks questions and figures it out later, right? We saw that during 2023. This is completely different, right? So bank balance sheets are in a great spot. the market just doesn't like uncertainty. And so we've done a lot of work on the theme of consistency. The market loves consistency. If you look at the large banks, the earnings they've reported this week, they've been excellent. JP Morgan, Morgan Stanley, these companies, Wells Fargo, the ROEs of these companies are high teens, and they're very consistent. And so what our conversations have been with investors is let's stay up cap. Let's during this period of volatility, let's hide out in banks that have the ability to diversify the earnings through the capital markets. And over time, we're going to get opportunities in the mid caps.
So, Chris, this is an important conversation. Where do you hide out? That really is going to be led by where is the risk. Chris, where do you think the risk is when we're talking about Tricolor, when we talk about First Brands, the events of yesterday? If there is a credit cycle turning, where do you think that risk lies?
Well, I think that the common denominator in all three of these prominent credit incidences has been private credit. So private credit's been a really fast-growing asset class for the last decade. The bank's balance sheets, again, some of the effects of deregulation and regulation since the financial crisis has been pushing risk to the non-traditional banks. So there is a dynamic between banks and non-banks and who holds the credit risk. But overall, I think we need to bring it back. Underwriting has been very good. Yes, credit spreads are low, and yes, we are seeing these headline losses. But the industry has made tremendous strides improving the credit quality.
Chris, a lot of people are talking about how this is deja vu to the Silicon Valley bank collapse in 2023. Is it similar in your view?
I mean, the stock moves are, symbolic of it, but this is a completely different situation. That was a liquidity, deposit uncertainty, volatility, and that was a pretty, volatile period for markets. This is a handful of credits, and again, it all starts. Generally, cycles start with stuff like this, but this is totally different. Bank balance sheets and credit quality are excellent. Again, I'm going to underscore that point. Liquidity is something that can happen very quickly. This is not a liquidity event.
Chris, to the extent that one informs the other, I just wonder if, because of what happened last time, faith in management teams was shaken back then. And I wonder, Chris, if that's what's happening now, that there's a lack of faith in management teams because of what happened back then and how those issues were dealt with. Chris, are you saying that lack of faith is misplaced?
Well, I think I think there's confidence in the management teams. I think there's a little bit of uncertainty in just the day-to-day market volatility. So, returns have been pretty good. They're moving directionally higher. The banks have been transparent about where the losses may lie. And so this is a market, I view this as a market uncertainty when you're seeing these headlines come through. But if you kind of zoom out and look at the earnings reports that we've seen over the past week, the returns and the numbers have been very good, right? There's a handful of credits that are destroying confidence temporarily, but that's kind of when you make your money in banks, is when volatility is high.
Chris, in 2023, with the funding crunch, we heard a lot from the Treasury Secretary, regulators came out. Do you expect the same kind of response in this situation?
I don't think we do. I don't think we need a response. I think the numbers speak for themselves thus far this quarter. And again, we are going through, next week will be more of the mid-cap earnings. I would expect general results to be pretty good. I don't think you need intervention every time there's a little bit of a hiccup in the market.
Chris, there is a hiccup. How do you take advantage of it? If you were looking to buy this morning, where would you buy?
Well, look at some of the banks that reported yesterday, right? Citizens Financial reported earlier this week. KeyCorp reported earlier this week. These companies are trading at 7 times earnings, and they're on pace to produce 15, 16, 17 returns on equity. That's a mispriced situation. So you can pick your spots in the regionals, and if you are a little bit more risk averse, the large cap banks, the universal banks, the ROEs are much higher. They're much more sustainable. You do pay a premium for that. But again, over time, consistency pays.
The numbers this week from the major players just absolutely phenomenal. Chris, appreciate your time. Thanks for joining us. Chris McGratty there of KPW. There is a move from some, particularly in the analyst community, who are looking at these banks on a daily basis to say you should buy some of this weakness. I mentioned David George of RW Baird, and I'm going to share this quote with you just on the management of Zion. Fundamental trends are solid at that bank. Strong historic underwriting quality should limit further losses. This bank was really shaken yesterday, and it looks at 10-year performance, 2014 to 2024, and says that Zion has averaged net charge-offs of around 0.12% of loans on an annual basis, one of the best in the bank group. Goes on to say, good underwriting relationships and disciplined loan growth over the past few years suggest that lower credit risk from our perspective, creating a buying opportunity following the market reaction of the last 24 hours.
As what Chris just said, this is a hiccup. So you can almost see the end of the day where you see regional and some of the large players actually rally because so many people sold, asked questions later. This morning, they're recalibrating, they're asking questions. They're digging into actually what these banks look like. And they're saying, this is a real buying opportunity. This is idiosyncratic. Chris is there is talking about it's not a liquidity issue the way we had in 2023. So potentially this is the time now to get into the market.
It's funny. It's odd that we just had this week of fantastic earnings from Wall Street and we're ending it by focusing in more on the bad than we are the good. And I understand why. It's been good for a long, long time and people are worried that maybe some bad loans were made in the good times. I get all of that. But a lot of this comes down to Jamie Dimon at JP Morgan changing the conversation. Coming out and saying there's more cockroaches. That's going to get people feeling very antsy about what's happening.
Exactly. He came out and said, you see one of these, there's got to be more. So now anytime there's a potential hiccup in any of these banks, people are going to start to worry. Was this what Jamie Dimon was seeing? Was he foreshadowing this potential, not just idiosyncratic moment, but more systemic risk and contagion? I wonder if he didn't say that, would we be seeing this sort of market reaction across the board? I'm not sure.
He certainly turned the volume up on the conversation, let's put it that way. Western Alliance this morning down by about 2%. Zion's just slightly negative. Coming up on the programme, we'll catch up with Liz Ann Saunders of Charles Schwab, the IIF President Tim Adams, Steve Paliuka of Bain Capital, and the Dutch Central Bank Governor. That's all in the second hour of Bloomberg Surveillance. The second hour is up next.
A powerful pitch can unlock transformative growth. Having at least 1 million pre-launch equips companies with a 25% higher likelihood of success.
You're coming from a world that is quite far separated from venture capital. Building up the skills was an important part of that journey. Not just my own area of physics, but things on the business side.
The right expertise can move your business forward. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
We know that labor demand is cooling.
The weakness in payrolls is ultimately why you're getting rate cuts.
The market, of course, is pricing in a very aggressive path of cuts between now and the end of next year.
The big risk is that the Fed does too much too quickly.
I definitely think there's going to be more discussion around the December meeting.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P negative by 0.8%, off session lows. The Nasdaq still down by 1%. Big moves in the bond market in the last 24 hours. Across the curve, 2s, 10s, 30s. 2s at the very front end of the curve at 340, down 2 basis points on the session. 10s breaking below 4%, a clean break, 396.48 this morning. We're down about a basis point. And these two names responsible really for the price action of the last 24 hours. Western Alliance and Zion's. This morning, down marginally by 0.6% on Zion's. Western Alliance down by 2.1%. Yesterday, down dramatically.
Shaking investor confidence right now. What's going on in the concerns in the credit market, the fact that these two banks saying they were victims of fraud. But when you hear from Herman and you hear from Chris, you feel like there's going to be a turning point today because they're saying when you dig deeper into actually the balance sheet of these banks, they're buys. And the banking sector right now is in good condition, even though there are these concerns. And you bring up a great point. Is everyone just focused on the concerns because Jamie Dimon did tell us look for those concerns?
The concerns are legitimate. I think that the Dimon comments turned the volume up on the story this week. We've been talking about First Brands and what happened with Tricolor for quite a while now. But yes, you're right. In the last 60 minutes, we've heard from a group of people who've said, look at the balance sheets, they're strong. Look at the credit quality, it's strong. But over and over again, there's a worry about a turn in the credit cycle. That's why people are nervous that we've had good times for a long time and the worst of loans are made in so-called good times. And is this just the start of more to come?
We heard from John Waldron of Goldman Sachs, and he said the risk of a two-speed economy and that the recent blowups might indicate that those in the lower end of the economy are suffering, and there's been a lot of lending in there. So I also think when you take a step back, this is just indicative of the K-shaped economy we have been talking about for months on end.
As the US session comes online, Futures are starting to build on gains. We're still negative on the day, but well off session lows on the S&P 500, down by less than 1%. We're down by 0.75% so far this morning. Coming up this hour, we'll catch up with Lisanne Saunders of Charles Schwab as investors grow wary of credit stress. We'll talk to the IIF President Tim Adams as that worry spreads to global markets. And we'll speak to Steve Paliuka of Bain Capital, with more banks joining the massive EA buyout. We begin this hour with stocks sliding as hidden credit worries intensify. Joining us around the table, Lisanne Saunders of Charles Schwab. Lisanne, good morning.
Good morning.
Anything to worry about? This is all kind of building up, these one-off events, the fraud at a couple of banks, Tricolor, First Brands. How are you approaching this moment?
So I think when you look at now some of the strains in the regional banks and you think back to the 2023 period, the mini banking crisis, there's been a spread since then that has, again, to the K-shaped aspect, where regional banks are sort of seen as this separate little thing. I think the benefit to having this happen with Zions and Western Alliance is it occurred during a week where we were getting larger bank earnings. So that provided, I think, the continuation of that bifurcation between the regionals. High yield credit spreads broadly have been fairly well contained. I think, the CEOs, leaving Jamie Dimon's comments aside, are going to be peppered with questions by analysts to see whether there's an infection here. Wouldn't surprise me if, like was the case in 2023, this leads maybe to a bout of some consolidation and maybe some acquisitions of some of the regional banks.
It's funny, just to stay on theme, that all these comments about private asset managers, we're not talking about Apollo, KKR or Blackstone. We're talking about Western Alliance, right. We're talking about Zions, and in fact, we were talking about JP Morgan and their exposure to some of the stories of the last weeks. When you're thinking about, OK, there might be risks, there might be some so-called cockroaches, how do you think about where they are? Where are they and what do you want to be avoiding?
I think what you want to be mindful of are at the factor level, if you're a stock picker, consider factors like strength of balance sheet and high interest coverage and low debt to equity. I think that's, instead of trying to find where the cockroaches are, maybe provide some protection within portfolios by going up the quality spectrum in areas specifically where they're less likely to have some of these troubles.
Is up in quality and up in market cap the same thing?
No, not necessarily. In fact, I think up in quality is even more important down the cap spectrum. So when you look at the Russell 2000 and you look at the 57% that are profitable, the 41% that are not profitable, by the way, I know that doesn't add up to 100. There's 2% of the Russell that just doesn't have they don't provide earnings. You can't get data. But the performance on a year-to-date basis of the non-profitable component is about double what it is in the profitable component. So you have seen this bias and retail trader bias down the quality spectrum into the non-profitable areas. You see it in baskets like non-profitable tech as well. I think that's where you want to go up in quality. Again, look for strength of balance sheet, look for actual earnings growth and positive earnings revisions, profit margin, stability, and those lower leverage type companies.
So it doesn't mean you just have to stick to the big banks. There's still regionals out there that are good.
Yeah, I think that's the way to think about all sectors. I think it's you have to be careful about taking a monolithic approach to investing in at the sector level, at the industry level. And that's why factor-based investing adds so much value, because you can go into the characteristic level and look for opportunities, especially in the midst, or maybe even providing an opportunity when you have sort of babies being thrown out with the bathwater. It gives you an opportunity to sort of pick off some of the higher quality areas.
Why the swift reaction across the board, including even global markets, when it's these idiosyncratic to regional U.S. banks?
Even before this happened, that there was some skittishness that you were starting to see in the market, churn under the surface, more rotation, speculation that was moving out of the major indexes. And here's another peripherally good story, is a lot of the speculative fervor has been outside the mega cap tech areas within the market into these micro level baskets. I mean, even the micro caps within the Russell, way down the cap spectrum, were outperforming the index itself. Quantum and drone and meme. And I think there's been this concern about too much speculation in certain pockets, ongoing valuation concern. You had started to just see some agita underneath the surface of the indexes, and then you get a piece of news that sort of exacerbates what I think was already a little bit of a background story even prior to this.
It's a market stacked with contradictions. It's an economy stacked with contradictions too. Governor Waller was in your seat just yesterday, and we were talking about how good employment, or rather how good retail sales was, and how bad employment is. You've got this massive step down in payrolls, but everything else in the economy seems to be okay.
Yeah,
Do you think that can persist?
Well, the payrolls thing probably has a lot to do with immigration. And everybody is out, all economists are out trying to figure out what the break-even rate of payrolls is. You know, prior to the compression of immigration, numbers were around, you needed 150,000 payroll jobs a month in order to keep the unemployment rate from rising. I've seen numbers as low as 0. I would say consensus is somewhere in the 50,000 range. So I think we have to take immigration or lack thereof into consideration when looking at payrolls. But I also think there's a size differential too. I think in keeping with the K-shape, a big difference between the employment outlook, the CapEx outlook, the earnings backdrop, down the size spectrum. And that's why one of the things that's interesting that didn't get a lot of press is when we got the second quarter GDP revision. And I know that's very rearview mirror, but so it was a very positive revision. Sure. GDP up from 3.3 to 3.8. Most of that was stronger consumption. But the national income and product accounts version of profits, which is much larger than S&P profits. It covers millions of companies down the size spectrum into S-corps. So it's a much more comprehensive look. After-tax profits based on that measure were revised down into negative territory for Q1 and Q2, relative to 13% or so for the S&P 500. For what it's worth, NIPA-based profits tend to lead S&P profits. There have been divergences that have not resulted in S&P catching down to NIPA-based profits. That happened in 2018. But it does tell you that there is more stress being felt across the spectrum of companies, which maybe you don't pick up when you're just looking at S&P profits. That's not really a proxy for how the country is doing at the business level.
That suggests that maybe there's some underappreciated risk into 26 for a market price for reacceleration. Is that fair?
Yeah. So I think, coming into this quarter, the bar is probably still set sufficiently low, although analysts did more raising of estimates in the lead into the start to third quarter earnings season relative to what they did or did not do in first and second quarter. So there wasn't a commensurate extrapolation of the strong first half into the second half. But that trend has picked up a little bit. And you're right. I think one of the risks in this environment is not that earnings will disappoint in an absolute sense, but you might have some high-profile misses relative to an elevated expectations bar. And I'm almost 40 years doing this, and I'm fond of saying that better or worse matters more than good or bad.
It's true.
It does.
Lizanne, it's good to see you.
Good to see you.
As always, thanks for being here in New York. Lizanne Summers there of Charles Schwab from New York City. Equity futures are recovering. As the session grows older, we're down by just 0.6% now on the S&P. With an update on stories worldwide with your Bloomberg Brief is Vonnie Quinn. Hey, Vonnie.
Hey, John, thanks. Well, let's recap. The KBW Regional Banking Index falling to the lowest levels since August after Zions and Western Alliance said they were victims of suspected fraud on loans tied to distressed property funds. 74 of the biggest U.S. banks shed more than $100 billion in market value in yesterday's session. Shares of Eli Lilly and Novo Nordisk are falling after President Trump said the price of diabetes drug Ozempic could come down to $150 a month. The U.S. list price of Ozempic, which Trump calls the fat loss drug, is roughly $1,000 for a month's supply. Lilly sells similar treatments, including Wegovy and Zepbound. Apple getting ready to launch a touchscreen version of its Mac computers. The new laptops will have displays with OLED technology and a full trackpad and keyboard. The touchscreen Mac Pro is expected to be released in late 2026 or early 2027, with prices likely to be a few $100s more than current versions. So that's your Bloomberg Business Brief. John.
Hey, Vonnie, thank you. Appreciate it. More from Vonnie in about 30 minutes' time. Up next, cracks in credit.
You're starting to see things that feel late cycle, and I would feel quite strongly that we're in the latter innings of a credit cycle. The problem when being the latter innings, you don't know if you're in the 6th inning or the 9th inning, and no one will ever know until afterwards.
That conversation up next with the IIF President, Tim Adams. Live from New York City this morning. Good morning.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Live from New York, welcome to the program. Check out the equity market. Futures recovering by quite a lot. We're down by just 0.3% now on the S&P. On the Nasdaq, down by 0.5. There was a question earlier this morning about whether the move in banks was overdone. But also, in addition to that, just in the past few moments, the president's been speaking to Fox News earlier on this morning. They've released some of the headlines from that interview. And the headlines suggest, let's just say this, and I know this can go switch and back and forth to heightened tensions, lower tensions, but a more constructive tone coming from the president on tariffs on China ahead of his meeting with the leader at the end of this month.
His hand, Jonathan, is on the knob right now, and he's lowering the temperature. When asked about the 100% tariff threat, he's basically signaling, no, that's not going to stand. He's saying we're going to be fine when it comes to China. He's going to sit down with Xi Jinping. Maybe we do not get the grand bargain deal, and maybe you don't get all of these issues that the United States has with China wrapped up in this one meeting. But it does look like both of these economies are looking potentially for an off-ramp. And the issue really this administration has is the fact that China is making it much harder, much more expensive to get access to rare earths.
That's just helping to support sentiment, those comments. We're down by just 0.3% on the S&P. If you turn from equities to bonds, see the move unwinding there too. 2-year bond yields now just about unchanged at 342. 10's now up a single basis point, so that's a change as well. 398. On 10 so far this morning. We'll keep tracking that story for you. Under surveillance this morning, the big story in the last 24 hours, cracks in credit.
Equity valuations are very high. Credit spreads are very tight. You're starting to see things that feel late cycle. And I would feel quite strongly that we're in the latter innings of a credit cycle. The problem when being the latter innings, you don't know if you're in the 6th inning or the 9th inning, and no one will ever know until afterwards. We're just being a lot more cautious in how we think about credit.
So here's the latest this morning. Traders turning risk off in the last 24 hours on concerns about increasing cracks in the credit market. On that story, Lisa joins us now from Washington with a special guest. Good morning, Lisa.
Good morning, John. It's great to see you and Anne-Marie talking about both credit cracks as well as the trade uncertainty, because it's what's really been dominating the conversations down here in Washington, D.C. I am joined by Tim Adams, who is the head of the IIF, the Institute for International Finance. You've been going around the world. You've been talking with 1 million people this week. You are exhausted after all of this. How much are cracks in credit markets or some sort of concern about a real kind of credit event? How dominant is that in your conversations?
Well, first of all, thank you for having me on this Friday morning. It's great to be here with you. Actually, not much at all. Most of the conversation here this week in Washington during the bank fund meetings and our own annual meetings is really about bigger issues: geopolitics, U.S.-China relations, AI, technology, stable coins. It really has not come up in a single conversation that we've had this week.
Although on the greed versus fear metric, right, this is sort of going to the same question. Do you get the sense that a lot of CEOs of banks, a lot of finance leaders feel like they might be missing out on profitability still, rather than worried about what they aren't seeing with respect to credit risk, with respect to fraud?
What I have heard are foreign banks coming here this week noting that the U.S. is open for business. In fact, they're a little jealous of the environment, the regulatory environment that's evolving here. And I think Scott Bessent and this administration does a magnificent job of signaling to the financial services industry, we want you here, we want you healthy and profitable. That's really dominating the conversation.
So this isn't really necessarily a feeling that maybe things have gotten a bit too far, that maybe there's this dissonance between really easy financing conditions in the United States, along with not only uncertainty with respect to trade, but also a backdrop of a weakening labor market that has certainly the Fed somewhat concerned.
You know, the perception is the U.S. economy is pretty resilient. And, you know, it's not perfect. There are certainly weaknesses. But given what the C-suites have gone through over the past 9 months, this seems pretty trivial, right? We've gone through a whole year of shock and awe, enormous uncertainty. Where are tariffs going to end up? Where's U.S.-China relations going? That still exists. And I think that dominates the C-suite more than do we see cracks in particular parts of the credit cycle.
We saw this morning, and Anne-Marie was saying that President Trump is turning the dial down when it comes to some of the rhetoric between the U.S. and China and just what's at stake here. We know that the automakers have been very concerned about losing access to rare earth minerals and what that could do to manufacturing. Is there a sense in the C-suite that there is a new normal and that there are certain places that the U.S. and China just will not go, and they can kind of create business around that?
So we're still waiting for the new normal. The old normal's gone. Something new's coming. There will be a new equilibrium at some point. But right now, it really is kind of chaotic. But C-suites have gotten used to the chaos, right? Their job is to manage through this, right? Even if you don't know where we're going, you still have to learn how to drive. And I do think there's a perception that despite the animosities that may exist, the dissonance between Beijing and Washington, delinking or uncoupling really isn't pragmatic or practical in the short term.
You sound so optimistic. And I have
it's Friday.
to say, well, it might be Friday, but this morning the discussion is all about what might be emerging. The fact that you could have weakness in the economy, the fact that credit standards have gotten very loose in the United States, that when Wall Street demands a product, when they want income, well, when investors want that, Wall Street will create it for them, even if it means at the risk of lowering some of the credit standards. How do you square this?
I'll take off my optimism.
Okay. Well, I'm just curious. How do you square these things?
Look, there's no doubt that we see softness in the labor markets. Corporates are not hiring for a whole host of reasons. That's a challenge. We have a labor supply problem that isn't going away anytime soon. And tariffs are going to work their way through. I know some people in this town say they don't exist, that economists are wrong. They're not wrong. It just hasn't happened in the magnitudes we thought. So there are a lot of challenges to this economy, especially for low-income consumers. But the markets and the wealth effect and high-income consumers are driving this economy, and they're going to keep driving it as long as we have buoyant markets. And I don't see that going away in the short term.
How much do international banks, international finance companies right now seek to diversify away from the U.S., keep other channels open and expand them, whether it's Middle East to China, whether it's just Europe to the rest of the world, in a way that feels different to you?
That's a great question. In fact, what I've witnessed over the last 6 months is a great reshuffling of the global economy, a reshuffling of capital flows, trade flows, new relationships. People are getting out of their offices, getting on planes, and going to new destinations to create new alliances, new relationships, and new trade deals. The world is not being static. People are looking for opportunities, whether it's in the Gulf or Africa or the ASEAN countries. The world moves on, and it's rewiring itself.
Do you get the sense that there is a shift away from the dollar, in the sense that is beyond just the price of gold, that is beyond just lip service, that is beyond just using derivatives to offset, hedge the risk of some sort of weakening in the dollar?
I think there's still some concern about where the Fed is going to end up, who's going to be the next Fed chair, where are interest rates going. Will this administration take its foot off the neck of Jay Powell in the short term? I think Scott Bessent has done a magnificent job of signaling to the industry and the people here this week that, in fact, they're not going to hassle the Fed going forward. But it remains to be seen. The president could wake up tomorrow and decide to go in a different direction.
How much fear is there that the Fed is going to be prompted to cut rates disproportionately in the near term and inflate whatever, I don't want to call it a bubble, but whatever bubble there might be, whether it's in AI or whether it's in some of these credit markets that certainly are showing some strains, at least in terms of the credit quality underpinning them?
Well, all the aspirants to be the next Fed chair have all indicated that they want to see looser monetary policy, and they've argued a variety of different reasons for it because of productivity, AI. I know them all. I think they're world class. Any of the individuals that have been cited by Secretary Bessent, the president, I think would be fabulous Fed chairs. But talking about it and being in the seat's different. And I think whoever gets the job will be much more prudent than maybe they sound today.
Is that the belief in markets right now? Is that the reason why people aren't taking the whole idea of Fed independence that seriously? And it doesn't seem like it's actually bearing out in any kind of market action that demonstrates concern?
Yeah, the people who've decided are world class. And I know them all. They're quite good. Now, if you have some dark horse that comes out of left field and we don't know them and it has a different view, I would be worried. I would sleep comfortably with any of these people decided and replacing Jay Powell.
So were there any risks that people flagged to you, or did everyone just seem really
It's
happy?
still trade. It's still a lot of technology, stable coins. Where's AI going? Quantum computing, the technology stack. But it really is about, given the uncertainty in the global economy, we still have to navigate through it. We want a new equilibrium. Probably not going to get that for years to come. Chaos is the state of nature. It's just, how do we work our way through it?
You know, I think about some of these events as, I don't know, counterindicators sometimes. And I know that in April, the feeling was pretty dark and people were gathering and asking each other questions that nobody could answer. This time around, there is incredible optimism. And honestly, it's been shocking how much optimism there has been from everyone who I've talked to, that there's going to be calm that prevails with trade, that markets are going to keep chugging forward, that deals are going to just accelerate. Does that...
It makes me nervous. Yes, it
yeah,
does.
But that's what I'm
It
wondering. I
does.
mean, hasn't that been your impression as well?
Indeed. And, you know, in March, we were pro-Europe. Everyone was hurting into Europe. That was the place to be. Now people are pessimistic about Europe, unfortunately. So, yes, I think maybe too much optimism. I think the concern is more about technology. Where is all the technology going? What does it mean for labor markets? What does it mean for tech spend? But I do think we've just gotten used to the animosity between Beijing and Washington. We've just gotten used to the chaos and uncertainty. Maybe that's what people get paid for in the C-suites. It's to really manage and lead through times of chaos.
It's an irony that a lot of people are coming here and talking about the loss of U.S. exceptionalism and the loss of U.S. dominance. They're all here.
They're all here.
So doesn't that make you feel like maybe that's not the case?
Well, I heard one European CEO tell me yesterday, the U.S. is open for business. And I think it puts pressure on others. We hear it from the UK. The Chancellor was out yesterday absolutely on fire selling the UK. The Europeans are they need to be more aggressive as well.
Tim Adams, thank you so much for being with us. That was Tim Adams of the IIF. John, as you can see, a lot of optimism down here in Washington, D.C. from world leaders amid even some of those credit cracks and concerns that we talk about every day.
Hey, Bramo, thank you. Appreciate it. You see that optimism in the market. Futures recovering. We're now down by just 0.3% on the S&P 500. The turn, if you're just joining us, off the back of some comments from the President of the United States just moments ago on trade and the relationship with China.
Yeah, he was asked about the 100% tariff threat and what that would mean, given the fact that we already have double-digit tariffs in place when it comes to China. And he signaled, of course, that's not sustainable, and that will not be the outcome when he sits down with Xi Jinping later this month.
Stocks recovering in the bond market. Yields were lower, just a little bit higher now. Up next on the programme, we'll catch up with Steve Paliuka of Bain Capital as more banks jump on the EA buyout. Plus, Danny's got your morning movers. Truist Financial rising following their latest earnings. Stocks recovering this morning. We're now down by about 0.3% on the S&P 500. Only a few hours ago, we were down about 1% on the S&P. So this is a quick, fast turn on the S&P 500 and the Nasdaq too. See this also in the bond market. Yields were down across the board. 2s out to 30s across the curve. 2s now higher by a single basis point, 343. 10s up as well by a basis point at 398. Yields at the front end was sub 340 only 2 hours ago. This is a major change off the back of some comments from the President about 10, 15, 20 minutes ago.
A question about the 100% tariff that is that sustainable? President basically signaling it's not sustainable. But I don't get the sense that no tariff level is not going to be sustainable. This is a president that we know continuously wants to use tariffs. I don't think that we're going to go down to 0% when it comes to China, but I don't think we're going to go to north of 100% was basically what the president signaling and also confirming that this meeting will happen. So when you talk about the two biggest economies, one thing investors always say, at least they're talking, and they will be talking, and they're going to be meeting face to face.
Looking forward to that summit later on this month. Let's turn to the gold market. Gold was higher. Now it's negative. We were on a 6-day winning streak off the back of these headlines. Just turning slightly negative. We're down by 0.2% on gold this morning. Still heading towards a 9th consecutive weekly gain for the precious metal. The longest weekly winning streak going back to August of 2020. Gold this morning, 4,300. As we count you down to the opening bell about 2 hours away, let's get you some morning moves and cross over to Danny Berger for more. Hey, Danny.
Hey, John. Good morning. Even some of those jitters around regional banks, the comments from the president seemingly lifting those as well. I guess it's overall risk appetite starting to come back into the market. Just moments ago, these shares were both down more than 1%. Western Alliance now up 1.5%. Zion's up 0.7%. Of course, these are the two mid-sized regional banks who've come out and saying that they're taking write-offs tied to loans gone bad, allegations of fraud. It's the credit concern that's been rippling through markets. But again, after those comments from the president, those shares turning positive. We also had some earnings that's helping out the regional bank space too. Truist reporting earnings in the past hour, and the key for them is that their credit quality got better. Their losses tied to bad loans was less than expected. They beat on a whole host of metrics, so those shares up 1.1%. Of course, they fell 5% yesterday in the drama, so still not recovering from them. We also got Amex earnings about half an hour ago, really strong too, even though the share price reaction isn't huge. It was the Platinum card that had huge amounts of signups. The CEO saying it was the best refresh cycle that they've ever seen. Maybe that was anticipated. Maybe that's why you're not seeing a reaction. But the CEO saying that there are a lot of concerns about credit out there, but ours is pristine. John.
Danny, isn't that always the way? Danny, thank you very much. A turnaround for some of those banks this morning. On our radar, credit concerns weighing on stocks around the world. Regional banks tumbling after Zions and Western Alliance said they were victims of fraud on loans to funds that invest in distressed commercial mortgages. Those names have turned around in the pre-market higher across the board. Elsewhere, the three candidates for New York City mayor facing off. On the debate stage last night, Andrew Cuomo, Zohran Mamdani and Curtis Sliwa trading personal attacks and discussing various issues, including President Trump and their stance on the Israel-Hamas war. And finally, US-China tensions showing signs of easing. President Trump telling US media high tariffs on China are not sustainable. President Trump adding he's still on track to meet with the Chinese leader later this month.
It comes after this threat. The president on Friday talking about potential 100% tariffs on China after the fact that China was talking about and continuously is making it more difficult for U.S. companies to access rare earths. Now, the president was asked, you would have a tariff rate north of 100%, considering what is already right now stipulated on Beijing. And he's saying, no, that is not sustainable. It doesn't mean we're going to zero, but that high tariff threat, he's bringing down some of that heat we saw.
How much is new about that line, not sustainable? I've heard that line a few times from the president since April.
Well, I don't think anything is really new, given the sense that what happened Friday, the market was down off this threat and hot rhetoric, the tit-for-tat rhetoric between Washington and Beijing. And what happened on Sunday, the president saying is all going to be fine. So he already signaled he was looking for that off-ramp, and it's not going to be as high as he had threatened just 48 hours ago.
There's a turnaround in the stock market. We're down now by just 0.3%. Let's turn to private equity. The consortium buying Electronic Arts is set to add more than a dozen banks to its underwriting group after JP Morgan put up $20 billion of debt to bankroll the leveraged buyout. The banks are in line to share roughly $500 million in fees for arranging the financing. Joining us now, a man who knows something about a leveraged buyout, Steve Pagliuca of Bain Capital. Steve, it's good to see you, sir.
Great to be here.
Good morning. Let's reflect on your time. The largest leveraged buyout ever before this one was HCA back in 2006, 2007.
Right in there, yeah.
You were right there in the middle of it. Describe that moment and how it compares to what we're seeing play out now.
Well, it's really interesting. I think that buyout was $5 billion equity and $27 billion debt. This buyout is much more equity, kind of $30 billion of equity and $20 billion of debt, maybe $35 billion of equity. So the markets have changed to that extent that you can't leverage as much, but the EBITDA is a little less. Very quality sponsors. And JP Morgan's a very quality bank. So they did the deal because of the great growth in gaming and media and entertainment. And I think it's a very solid company.
You did tremendously well out of HCA. Need to be very, very clear about that. But the timing of it is curious. It came right at the peak of credit. And this is now too. Is that anything to be concerned about?
I'm less concerned about credit right now in terms of the private credit markets because the private lenders actually are very good. The banks have been very good. JP Morgan, especially Bank of America, well-run, well-capitalized banks. And private credit is different than credit from banks because if it does go bad, you only write off the equity from people that put the equity in. It doesn't have a systemic multiplier effect. So I'm less concerned about private credit. What I'm more concerned about is the size of the national debt and how much interest we're spending on the national debt. It's really interesting. If you go back to when I got out of business school, there was a huge Sturm und Drang about the national debt passing $1 trillion. That's in 1982. So it took 250 years to have 1 trillion of national debt. In the last 40 years, we now have 37 trillion, which is more than the GDP. GDP is about 30 trillion. So that concerns me more in terms of the impact on the dollar. Interest from the government now is one of the highest expenditures. It's right up there with defense and healthcare. So that concerns me more than private credit.
So, Steve, I could probably find you people who were concerned back in the 80s too. And then in the 2000s, and as we went through 10 trillion, 20 trillion, and kept going high, they were concerned all the way up.
Yeah, unfortunately,
why is this moment different?
Well, I think I don't know if it is different, but in situations like this, it's always okay till it isn't okay. So you get used to, you pass $1 trillion. Everett Dirksen had a board up that was counting it up at that time, and it passed $1 trillion. There was a huge outcry. Now it's 10 trillion, then 20 trillion, then 30 trillion. But at some point, you've got to have some long-term plan to pay that money back and get that deficit down, because it's eating up huge amounts of the government budget. And as the interest rates roll over, a lot of that is still financed in the old, really low interest rates. They're going to have to refinance it at 5%, 4.5%, and then the number goes up again.
Well, when you see what's going on in Washington, I want to go back to your EA deal. It's not just the size and scope that got a ton of people's attention. There's concern in Washington given some of the players involved. Have you heard from politicians about that?
I don't think there's been a lot of pushback on that, and the deal I think will be controlled by Silver Lake, which is an American, fantastic private equity company.
But with the Saudi PIF being involved, some people think Jared Kushner was brought in just to get the Czech government seal of approval.
Again, I think Silver Lake's a fantastic firm, and they're leading the charge there, and so I think there's really going to be no concern because they'll be calling the shots on the deal.
Steve, we started this conversation by comparing this deal to HCA in 06, 07. Have the pools of capital changed in the last 20 years?
Yeah, absolutely. When I started out in the industry, there was only 3 or 4 firms doing this, I think, in general, and it was mostly USA. Now it's global. The fund sizes are up probably 20 times from when I started. And also you have sovereigns and big institutional players partnering with private equity. So the dry powder is huge.
Are there enough opportunities to go around?
I got asked that question in 1989, 1990.
I'm asking it again, 27 years later.
And I feel like a broken record. Private equity, I think, is here to stay. The model has really evolved. So it really is huge value added to kind of transform companies, make them better, globalize them, build new products, and in an environment where you don't have to worry about quarterly earnings. So the model is a very good model, and it's only expanded, it's only gotten bigger. And I think there'll be plenty of opportunities for these folks to invest money.
Well, let's talk about the opportunities now for you and how your sport franchises are going, starting with Atalanta. Steve walked into the room with some Atalanta sneakers with the sponsor New Balance on. The relationship between you and New Balance, can you just describe what that's like at the moment?
Fantastic. New Balance is kind of a fighting brand, growing, taking a lot of share. They really like the Atalanta story because we have the same values. We're kind of a fighting brand against the vaunted AC Milan team that you support. And so it's kind of a match made in heaven. The New Balance is very excited about it. We're excited about it. We've just named our stadium New Balance Arena. I think it's the first arena that New Balance has named. And we're very proud to be associated with New Balance. It's a family company. The Pags Group is a family company, and the Percassis in Italy are a family company. So the 3 families have come together and hopefully take Atalanta to the next level.
You've done a tremendous job with the team and the franchise. Can you just describe the opportunities now that still exist in the sports world at a time when some people are pushing back against valuations?
Well, no question, valuations are at record levels. Why is that? Is because sports is now the only thing left that aggregates huge audiences globally. And there's been a technology change where, when I lived in Holland in the 1970s, you would only get sports scores 3 days later from an International Herald Tribune. You couldn't watch anything. Now you can watch any team globally, so fans are counted in the billions instead of the tens of thousands, what they used to be 30 years ago. So I think sports still has upside because advertisers, want to reach the globe, and that's the way to do it.
As you look at the sports world, and it's pretty broad, where do you see the best opportunity right now? Because your name's been linked to a team in the WNBA. I know you wanted to bring a team up to Boston. Is that where you're looking still, or is it elsewhere?
We're looking at many opportunities. I think the WNBA is a great opportunity. Women's sports in general, women's soccer in the USA and globally is growing. The NFL is the marquee properties. I think they had record ratings and record advertising on the NFL. So again, I think sports as a category is really a growth asset. And as you have this battle between old media and new media, it's existential for them. And they're battling over these properties that get all the eyeballs in. So I think that bodes well for all the leagues.
John mentioned the WNBA Connecticut team. Do you think that there potentially could be a future for you in that team?
That's something clear. We've kind of stood down for now, and we're going to abide by whatever the NBA wants to do with the team. I think it's very exciting. The ratings are huge for WNBA, and I think it's great that all Americans are following that sport now, and it's going to really take off. And the NBA's done a great job with that.
You've done a great job, Steve. It's always good to catch up with you. What a career! It feels like you're having the best of times now.
I've been very fortunate. My grandfather came from Italy on a boat with one suitcase and worked in a shoe factory here in New York in the Bronx for $8 a week. So I would say America's a great place. Coming from that, and I've loved the homecoming. Coming back to Italy with Atalanta, I get off the plane. And I love it because everyone looks like me there. Haven't lost my Italian heritage.
We've talked extensively about this in the past together offline, and I'm very proud of you and everything you've done. Steve, thank you, sir.
I really appreciate it.
Thank you. Steve Pagliuca of Bain Capital. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. It's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. US-China tensions showing signs of easing. President Donald Trump telling US media that high tariffs on China are not sustainable. The president adding that he thinks we'll be okay with China. Trump is preparing to meet with Chinese President Xi Jinping at the APEC summit later this month. Gold is heading for its biggest weekly gain in 5 years. The precious metal is surging alongside silver as concerns over product quality in the US send investors looking for safety. Gold's gain of more than $300 this week is the biggest on record in dollar terms. Automaker Stellantis is partnering with China's Pony AI to launch self-driving vans in Europe. They'll begin testing level 4 autonomous vans in Luxembourg in the coming months, a move that is Pony AI's first major team-up with a Western car giant. It lays the groundwork for future European passenger robo-taxi services. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next, bracing for future shocks.
We consider that where we are today, we are in a good place, and we are well positioned to face future shocks. And future shocks there will be.
That conversation up next with the Dutch Central Bank Governor live in Washington. Bit of a turnaround going into the weekend. We were down by about 1% on the S&P, now softer by just a third of 1% on the S&P 500. On the Nasdaq 100, we're down by just 0.5. More constructive comments from the president regarding China, lifting sentiment just a little bit. Under surveillance this morning, if you're just joining us, welcome. Bracing for future shocks.
Bottom line, we are currently, at least in the euro area, at 2% inflation, which was our medium-term goal. We are at 2% interest rates. It's a surprising coincidence, but we consider that where we are today, we are in a good place, and we are well positioned to face future shocks. And future shocks there will be. Both Kristalina and Talman said it. I completely agree with that. We will be facing shocks.
So here's the latest this morning. The ECB President Christine Lagarde showing confidence that risks to inflation and economic growth have become more balanced. Lagarde signaling the European Central Bank is unlikely to cut rates at this month's meeting. Lisa joins us now from Washington for more with a special guest. Hey, Lisa.
Hey, John, thanks so much. I am here with a member of the European Central Bank, Olaf Slijpen. He is the new head of the Netherlands Central Bank as of July 1st. And Governor Slijpen, thank you so much for being here.
Pleasure.
I want to start with that contrast, this incredible optimism that you're seeing in the U.S. economy, notwithstanding some of the recent credit cracks, And yet the Fed is going to cut rates several times. And in the Euro region, it seems like the ECB members that we've spoken to seem pretty okay with where things are at right now. But there isn't that much optimism around growth. Does there seem like a dissonance there?
Yeah, from a monetary policy point of view, we are in a good place. And you have been hearing that a lot, I think, these days. Because inflation rate is basically around our target, 2% in the medium term. We have more or less full employment at the moment in the euro area. But having said that, the potential growth in the euro area is actually relatively low compared to the United States. I think not a lot needs to be done in this context, but that's not for monetary policy. It's more for structural policy.
At the same time, the trade shocks that Christine Lagarde, that Madame Lagarde was talking about yesterday, have to do with both, yes, tariffs, but the tariffs have come in much less than people have expected, but also China flooding the European region with cheap goods that have suppressed inflation. I mean, how much is that a risk, the disinflationary risk, that you're taking increasingly seriously?
What we see is that the euro area economy, and I think that's also true for the global economy, has been much more resilient than we thought it would be, actually. Yes, if you go back to a year ago, the economy has worsened. But if you look to the spring, I think things look a little bit better than we thought. So, yes, the tariffs do have an impact. They have an impact on growth. They may have an impact on inflation, in particular, I would say, in the United States. But, so far, the economy is holding up pretty well. At the same time, there are a lot of risks out there, and there's a lot of uncertainty. So it's very important that we remain vigilant in this respect.
Christine Lagarde was talking about shocks and future shocks coming down the pike, and yet there is this feeling that the bar to cut rates is pretty high at the ECB. Is that the case for you? What would it take for you to think, okay, we need to accommodate? I'm worried once again about disinflation.
Yeah. As I already said, we're in a good place, but that doesn't mean that you, let's say, will always stay in this place. We have what we call the meeting-by-meeting approach. We are data dependent, and depending on new data coming in, new forecasts, we make our assessment regarding the inflation outlook. And that's when we decide on what to do with monetary policy. And that's the approach at the moment.
It must be nice to receive data. We're envious of your data collection and your data releases.
It's extremely important.
We haven't gotten some recently.
Yeah.
I am wondering what your response is. We've been talking about cracks in the credit market in the United States and this potential that there could be some froth developing, whether it's artificial intelligence-related stocks and some of the valuations there, or whether it's just some of the credit conditions that have gotten pretty loose. I'm just wondering how much you're watching that from a financial stability point of view, how you see that potentially rebounding into the European Union.
Yeah, I think if you look at valuations at the moment, I think one can say that they're pretty stretched. And that also means that, let's say, certain accidents, incidents, jitters can lead to more volatility. And that's something that we are closely watching, also from a financial stability point of view. That's correct.
What would your response be if there was some sort of stress, if any? Because right now the market's implying that there's going to be some sort of Fed response in the form of rate cuts. We've heard from Fed Chair Powell that potentially they're going to stop rolling off their balance sheet, stop quantitative tightening. I mean, how much is the ECB also considering some sort of measure to ease the liquidity strains that might be emerging down the line?
I mean, when we say we are in a good place, it also means that we are of the view that we have the instruments let's say, that can be employed whenever it's necessary. And that's also being part of being in a good place.
Do you welcome the increase in fiscal spending in the Euro region right now? We're hearing that from Germany. We're hearing that in other places as well, to try to, yes, bolster some of the defense side of things, but also just in general, infrastructure, and to adapt to some of the AI build-out.
I think it's important here to distinguish what kind of fiscal spending we are talking about. It is good that governments are boosting public investment, and I think indeed Germany is a very good example in this respect. At the same time, we also have to acknowledge that the overall debt to GDP ratio in the euro area is quite high. So there is limited room, so to speak, to let fiscal deficits and debts increase too much. But indeed, more focus on public investments, I think that's definitely a good thing.
Is it frustrating for you when you talk about the need for some sort of growth engine in the euro region and cohesiveness? And I hear this a lot in the sense that you can't rely on the United States, but then everyone's here in the United States talking about all of these things and talking about the growth and the optimism here. I mean, I'm wondering how you square that disconnect.
Yeah, I mean, it's actually good to be here and to, let's say, observe that optimism. What would be the lessons for Europe? I think when you talk to investors, then they tell me, they tell us that Europe, it's interesting, but it's not really a single market. We have 27 countries, and despite the fact that there's European legislation, there's also a lot of national regulation, national rules, gold plating going on. So the scale of the market is basically too small compared to the United States. So what does it mean? It means that we really have to create a true single market. That's one thing. So that markets, investors also really see Europe as one single market. Create a true capital markets union and finish what we started, that's the banking union. I think those are, for me, the three most important priorities for European growth.
Governor Slijpen, thank you so much for being with us.
My
Wonderful
pleasure.
to see you. That was Governor Olaf Slijpen, John, of the Bank of Netherlands, Central Bank of Netherlands, after joining back in July.
Lisa, very cool. Thank you very much. Appreciate the update on the European Central Bank. It's interesting to hear the ECB talk about policy being in a good place. And I understand why they're saying that. They have a very narrow mandate. It's an inflation target. But can you imagine the chairman of the Federal Reserve saying we're in a good place when they're forecasting 1% GDP for 2026? That ain't a great place for the European economy, that's for sure.
No, absolutely not. Europe has a growth problem. We've known this. And the issue they also have right now is they're stuck between the United States with higher tariffs, and they're stuck between China, which is absolutely decimating their industrial base. And Europe needs to decide, how are they going to fight back, or they're just going to allow it, which is going to mean a lot more layoffs, which we've already been seeing coming out of big European companies, especially in Germany.
They've got some policy issues. Just a lot of them are outside the ECB and beyond their control. Up next on the programme, we'll catch up with the Deutsche Bank CEO, Christian Sewing, James Picariello of BNP Paribas, Steve Rasciuto of Mizuho, Mark Haefele of UBS. The third hour of Bloomberg Surveillance up next.
Global connections are vital for business expansion. Nearly 1 in 2 business leaders say decisions made on their own usually turn out to be poor.
When we go into a new region, networks matter, experience matters. Culturally, there are a lot of differences from region to region. We are just trying to find the right partner. Somebody reliable, somebody that is as invested as we are.
Widen your global network. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
We've got this extraordinary stock market.
The U.S. capital market is the most liquid of the world.
This has been an earnings-driven market.
We've heard about all the AI infrastructure investment, and that's continuing to drive earnings.
I don't think we're in a bubble. And if we are, it's so early stage.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. We're focused on 2 bank names, 2 regional banks that are at the epicenter of the price action of the last 24 hours. They're recovering this morning. Zion's up by close to 4%. Western Alliance up by close to 2%. A lot of pushback against the concerns of the last 24 hours, including from R.W. Baird and David George, saying that we're fighting the last crisis, that a $1 billion market cap decline over a $50 million loss seems a bit excessive. Those 2 names are being bought so far this morning, and the equity market's turning around as well. Equity futures across the board on the S&P, the Nasdaq, erasing losses. We're now down just 0.25% on the S&P 500. Similar turnaround in the bond market. There was a risk-off bid Yields were lower. Now they're higher by a single basis point on 10s, approaching 4% again, 398.77. And a lot of that in the last hour came from some comments from the President of the United States.
The President had an opportunity to continue with the rhetoric on China and amp it up, and he decided to once again dial it down as he looks forward to this meeting he has upcoming with Xi Jinping. He says it's not sustainable, the high tariff level. Now, it doesn't mean we're going to go back down to zero, but that 100% threat on top of what already the United States has in terms of the tariff wall in China, he says that is not sustainable. So the market now can look at the worst case scenario being avoided as we head into the end of the month.
Hey, hopefully the worst case scenario is avoided. That meeting's going to take place in Asia at the end of the month. At around the same time, we get a Federal Reserve meeting and a ton of tech earnings as well. Coming up this hour, great lineup for you. The Deutsche Bank CEO just moments away. Christian Saving as credit concerns grow over the last month. James Picariello of BNP Paribas as he's downgrading Tesla ahead of earnings. And Steve Raschuta of Mizuho as bond yields break through 4%. We begin this hour with stocks lower as doubts grow over the credit health of US regional banks. Lisa is standing by with a key guest. Hey, Lisa.
Hey, John. Thanks so much. I am here with Christian Saving, the CEO of Deutsche Bank. And before we get started, I want to say we booked this weeks ago. This was not necessarily booked to talk about the credit issues that are emerging and to stave off any concerns that might be percolating out. But I do want to start there. This idea that this morning we're all focused on what are we missing? Have things gotten too frothy? And have there been some issues of fraud or easy financing conditions? Do you see that anywhere in your book?
Good morning, Lisa. No, actually not. There is a lot of volatility in the market. We have seen that actually over the last weeks and months. Whenever something is supposed to be there, market is reacting. In our books, I can tell you, no, there is no deterioration. We're very confident with our credit portfolio. And that across the world, whether it's in Germany, whether it's in Europe, whether it's in the US, in the different asset classes, corporate bank, private bank. And in this regard, I think the market is reacting quite heavily. But I think you always have to see it over the long term. And so far, to be honest, I see no credit deterioration.
Long term, your shares are up more than 80% so far this year. So a couple percent here or there. It's sort of, okay, it's tough, but we can manage through it. I am just wondering, though, whether it's indicative of people's mood, that people are looking for a reason to sell because they're getting nervous about how good things are getting and how far valuations have gone. Do you see that with any executives and the confidence that you're hearing from them in terms of what they're seeking to do or how much they're planning to expand?
No, actually, confidence is quite good. There's obviously always the risk in case a recession would come. Then obviously confidence would go down. You would also see then a deterioration in the credit portfolio. But this is not a topic at all. Also, in the whole week here in Washington, we haven't discussed the topic of recession at all. People are seeing growth. They're seeing employment. We talk a lot about what is happening in Germany and in Europe and how we can actually grow competitiveness and the economic output. So therefore, I wouldn't say that people are concerned. Of course, the geopolitical uncertainties, still trade discussions, other issues are also dominating the discussions. But I wouldn't say that there is a concern of the executives. We are watching the market, but there is nothing out where I would say people are concerned of a deterioration.
Given the fact that there are so many uncertainties still outstanding, are you surprised by how much optimism you've been hearing?
Yes, because we have talked for the last 2 years, given all the instabilities and uncertainties, when is actually a potential downturn in the markets coming. But again, there is a lot of liquidity in the market. We have seen it, for instance, in the second quarter, when there was a stimulus program in Germany, how much liquidity came to Europe. And you see that people really want to deploy their money. And therefore, I think you always have to see if there is a slight decrease in market prices, liquidity immediately comes in again. And therefore, I'm still optimistic, actually, that we are not talking about an overvaluation. We have some stretch valuations, no doubt, but I wouldn't say that the whole market is overvalued.
Let's talk about Germany. And European banks in general have been on a tear this year. And it's been driven by this idea that maybe there will be deregulation and maybe there will be actual fiscal spending to support the region. Are you seeing any actual tangible signs of deregulation that you think could unleash, whether it's bank mergers, whether it's just more dynamism in the European banking sector?
Well, at least we have discussions. Look, there are also some tangible items like the delay in the implementation of FRTB. We have also in certain national buffers, when it comes to capital buffers, we have seen some movements of the national regulators, but also of the ECB. I think we have a constructive discussion with the ECB. We are obviously talking about that we, as European banks, are demanding a level playing field. We see the developments here in the US, we see developments in the UK, and therefore I think there are constructive discussions with our regulators, so there is some movement. Nevertheless, I think it's not only about regulation. I think the most important is how can we ensure that Europe overall, but also Germany, is actually increasing the competitiveness and growth. And therefore, we need to do more on the structural reform side, which goes way beyond bank regulations. That is actually the topic which we need to push for, because at the end of the day, regulation is important. We need a level playing field, but the most important is the underlying growth, and therefore we need structural reforms in Europe.
Is that fiscal spending? Are you saying that you hope that they increase it more and that you're already seeing stimulative effects from that?
It's both. I personally think that the debt brake alignment and adjustments which we have seen in Germany was the right step to do, but only doing this is not the right thing. Just increasing debt is not the right thing. What you need to do is, in parallel, work on structural reforms that it makes sense for corporates, private individuals to invest. And that has all about to do with, tackling the problem of energy prices in Germany, reducing bureaucracy, making sure that we are doing bigger investments into infrastructure, that the approvals for new investments are not taking that long as it did before. All that needs to be done. So aligning or just growing by stimulus program will not be sufficient. We need in parallel structural reforms. And there I can see that actually the German government is taking the first steps.
What about businesses? How much are businesses in Germany moving away from places like China in terms of sources of business? How much are you seeing those fissures just in the companies that you work with?
Well, it's a result already of the COVID. I think after COVID, people really thought far more about diversification. We can see that German corporates, European corporates are very active in diversifying their supply chains, their production chains, and are also trying to invest more globally and less concentrated. You can also see actually that businesses are confident actually to really reinvest in Germany. You may have heard about the initiative which is running in Germany, the Made for Germany initiative, where more than 100 corporates are actually committed to invest over 700 billion euros in Germany over the next 3 years. That shows actually that there is confidence in the business, and at the same time that corporates are really redistributing their supply chains.
Are you seeing any clients trying to shift away from dollar exposure right now?
Look, there was clearly a trend in Q2 about reallocation, but I wouldn't join the core of saying, well, that is the end of the US dollar as the reserve currency. The US dollar will be the reserve currency, but I think that a lot of investors actually are trying to reallocate, and in particular with what happened in the second quarter in Germany, but also in Europe, you could see a shift to Europe, and that's actually the momentum which we need to retain and where we need to build on.
And this move away from the dollar has been largely in derivatives markets. I mean, how much has that just been on fire this year in terms of hedging any exposure to the dollar, not necessarily getting out of dollar-denominated assets?
Well, I think it's both. It's not only in the derivative market. We really have seen real flows, and therefore it has been a trend in Q2. It's a little bit reversing in Q3, and therefore it is so important, in particular for Europe, that they really continue with structural reforms. If this is not going through, if we are not continuing with structural reforms, then obviously growth and therefore also the inflow in European assets will not further increase.
How does that affect just whether there will be reforms or not? How does that affect where you want your footprint to be dominant, right? Do you want to be more in Germany? Do you want to be more in the United States? Do you want to expand more in one place or another based on your faith, hope, et cetera, that there will be reform in Europe versus what actually is happening elsewhere?
Look, Lisa, for me, it is from a bank's point of view, the most important is to be diversified. And we as Deutsche Bank have taken a clear decision to be a global bank and to make sure that we are not too concentrated in any one of the regions. Of course, when you have your home market in Germany with 40% of the revenues, you have a great interest that this country is growing, that you have the right structural reforms, that fiscal stimulus is kicking in. But at the same time, despite all the talks about the end of globalization, globalization will not end. Globalization will be different going forward. But that needs actually global banks with local know-how. And that is actually where we are focusing in from a Deutsche Bank point of view. Strong home market, but being an international player. Because what we see from our clients, they would like to have a bank with an international exposure, with an international expertise, and that with a global network. And that's exactly what we want to be. So diversified and a global setup is, I think, the key to success.
Are you interested in any acquisitions, or is this going to be a very organic process going forward?
It's a very organic process. Look, I'm very happy with the development which we have taken. You were just talking about our share price. I think overall the bank has done very well over the last 3-4 years. The turnaround has been completed. And now it's really bringing the bank from a 10% ROTE to the next stage. All levers for that are levers which are, so to say, within our own hands. It's about a better capital management. It's about focused growth. It's further about investing into technology to get further efficiencies out. All that is in our hands. And as long as I have the chance to further increase my return on equity with, so to say, homework, that is always the preferred option.
So not interested in any local banks that are nearby that you might bring under your hood?
Look, as I said again, if you can focus on yourself, if you can improve your return on equity by applying this homework, honestly, it's always the first option.
There's also a big question here about artificial intelligence and how much it's going to alter the size of the staff, the way of doing business going forward. Have you seen any material changes or advantages from using and adopting artificial intelligence of late that have really materially improved profitability or decreased staff?
Well, we have many use cases, and you can apply that across the bank. And the interesting part is it actually applies to revenues, i.e. customer satisfaction, interaction with clients. It applies to efficiency and cost management. And also it applies to something which is very important for banks, control and regulatory compliance. And in each of these three areas, we have seen great use cases. If you think about also our research department, they started actually applying AI. If you think about the precision of research reports with the help of AI, got far better. Of course, that has an impact in terms of the speed and turnaround of research reports. Same actually in other areas when you think about operations, the way we can apply AI. Now, the real important thing is now that we have a structural approach to all these use cases and that we have a clear priority. Where do we prioritize it first? Because you can imagine that everybody in this bank wants to apply now AI. We need to have a clear priority of investments, but I think it will be a game changer going forward, and it will be one of the key levers how to increase profitability of banks.
Christian Sewing, thank you so much for being with us this
Thank
morning.
you.
Christian Sewing there of Deutsche Bank, the CEO here in New York. And John, it really is a tale for the Europeans of looking to what levers can be pulled going forward, given some of the concerns and challenges facing the region.
Lisa, thank you. Great work down in Washington, D.C. Lisa there in the nation's capital. Let's give you an update on news worldwide with your Bloomberg Brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. The White House is poised to deliver a major win for automakers, easing tariffs after months of lobbying by Ford and GM. The Commerce Department is expected to announce a 5-year extension of an arrangement that allows car makers to reduce duties on imported parts, a key offset to Trump's record-level auto tariffs. Meta is set to seal an almost $30 billion financing package for its data center in rural Louisiana. Sources telling Bloomberg that Blue Owl Capital will split ownership of the data center, with Meta retaining just 20% of it. The deal would mark the largest private capital deal on record. President Donald Trump's former national security advisor John Bolton has been indicted over allegedly mishandling classified documents. Bolton was charged with 18 counts by a federal grand jury in Maryland. He served for more than a year in Donald Trump's first administration, but became an outspoken critic of the president. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next, the Morning Calls Plus. James Picariello of BNP Paribas as he's downgrading Tesla going into next week's earnings.
Regional banks are sort of seen as this separate little thing. Wouldn't surprise me if, like was the case in 2023, this leads maybe to a bout of some consolidation and maybe some acquisitions. Instead of trying to find where the cockroaches are, maybe provide some protection within portfolios by going up the quality spectrum.
That was Lisanne Saunders of Charles Schwab weighing in on signs of credit stress in the last week or so. In the equity market, we recover. We're down by just 0.1% on the S&P 500, with the opening down 1 hour and 11 minutes away. That's the price action. Let's get you some morning calls. First up, Baird upgrading Zions Bancorp to outperform, calling the pullback, quote, excessive. That stock is bouncing back by 4.4%. Next up, Goldman raising its price target on Schwab to 114, saying EPS growth is on track to continue through 27. And finally, Mizuho raising its price target on Microsoft to 640, calling it a favorite stock with solid upside. They're your morning calls. Let's turn to autos. The White House gearing up to ease tariffs on imported auto parts for 5 years. Bloomberg's Craig Trudell joins us now for more. Craig, welcome to the program. What are we hearing?
Yeah, Gabrielle Coppola, our colleague in Detroit, had the scoop last night on this. So this is a case where the industry has been concerned, particularly about U.S. vehicles that are importing parts from outside of the U.S., wanting to get credit for the fact that these are made in America cars and trucks. And, there's been relief already put into place where, for 1 year there was going to be a certain amount of recognition for the fact that those vehicles are made in the U.S., but that was going to phase out after 2 years. This will be an extension to 5 years. So it gives I would say this is an acknowledgement of the realities of this industry, where even if and when you do announce plans to build an entirely new car plant in the U.S., that can take 3, 4, 5 years before you go from announcement to actually having cars coming off that line. And this is an industry that, if it's going to sort of answer the call that the Trump administration wants, it's going to take time.
It's going to take a long time, potentially. Craig, thank you, sir. Thanks for jumping on and breaking that down. Craig Trudell there of Bloomberg. Breaking down the moves in the pre-market. GM positive by 0.75%, going into some big earnings over the next week or so. Tesla reports on Wednesday. James Picariello of BNP Paribas downgrading his rating on Tesla to underperform with a 307 price target. He writes Tesla may be the victim of its own ambition, in our view, with its insatiable appetite for growth leaving the company with more on its plate than it's able to execute unsuccessfully. James joins us now for more. James, good to see you.
Yeah, you as well.
Just build that out a little bit more. What did you mean by that?
Well, the fact is Tesla has a $1.4 trillion market cap. And how we've assessed it after valuing the auto business and FSD, full self-driving, and the energy storage business, 75% of the implied valuation rests in robotaxis and Optimus humanoid robots, right? So what we've done is try to put a real picture to what robotaxis and Optimus look like, even out to 2040, right? We've gone that far. And what we've assessed is when you compare Tesla's valuation to the Mag 7, right, to the Mag 6, right, if we exclude Tesla.
Sure.
The future 2035 looking profitability, it's towards the low end. It basically looks like a smaller Amazon, which is also in the Mag 7. And so then the question is, if that's what our version of the future looks like for these AI-led businesses, what's the right implied valuation?
What do you think it is?
I mean, I would generously apply the Mag 7 average forward EV to EBITDA multiple to Tesla's business. But how we've done that, because you can't just look at 2026, right? You have NVIDIA as the highest valued company of the Mag 7, excluding Tesla, at around 35 times, and you have Tesla sitting at 85. what we've done is we've taken that 2035 picture of Tesla, discounted it back to 2026, and then suddenly Tesla's valuation makes a lot more sense, where it's trading at around 18 times EV/EBITDA on our price target. And I think that's probably the appropriate valuation, and that's what informed our price target.
So let's take the robotaxi business. How proven is that concept right now? And how quickly do they need to show some real results?
So here's some context for how constructive we are for Tesla's robotaxi business, which still informs our underperform rating. The industry leader right now in robotaxis is Waymo. They've got about 1,500 active robotaxis on the roads today. And they've boldly said that they're going to expand to 3,500 by next year. We have Tesla in 2030 having 525,000 active robotaxis. Right? It just contextualizes how much credit the market is already giving Tesla for what is going to be potentially, right, an extremely successful story. But what does that successful story look like, and what's the right valuation? We've obviously made our determination.
We also have news at the White House, and it comes to the auto space, looking to ease some of the tariffs that are hitting these major players. That put them in line now with some of the Asian auto companies that actually were getting a lower tariff rate after Trump's trade deals?
Yeah, certainly. I mean, if we think about GM and Ford, right, GM's net tariff exposure is about $4.2 billion. For Ford, it's just under $2.5 billion. And yeah, I mean, when we think about GM and the South Korea trade deal that it should soon get finalized, you're looking at $1.1 billion, just over $1 billion of savings for GM. And Ford certainly will benefit from these tariffs relaxation, no question.
James, it's good to see you. Thanks for breaking down the latest call going into earnings next week with Tesla and a whole lot more. James Picariello there of BNP Paribas. The earnings story, tariffs. These guys, I think of GM earlier this week, just kind of stuck between a rock and a hard place. The tariff story, the EV story as well. Stellantis investing, what was it, $13 billion, that announcement earlier this week. They're getting squeezed from both sides.
Stellantis, I think this is their biggest investment in North America because they realize if the tariff walls stay up, which potentially they will, we're going to do more production in the United States. But yeah, a lot of these companies are stuck from a hard place because policy has swung so drastically between the Biden administration. Here, we're going to give some individual subsidies and help to go buy EVs, make those EVs, to the Trump administration saying those subsidies are not happening. And actually, the auto parts are going to be more expensive due to the tariff walls. It's hard right now to run an auto company.
If the policy is going to swing back in 4 years' time. Coming up on the program, we'll catch up with Steve Rasciuto of Mizuho as bond yields break through 4%. That conversation up next. The opening about 60 minutes away. Lots of swings over the last week, but on course for a weekly gain on the S&P 500 after the close yesterday. This morning, steep losses, and we erased them. We take some of it back on the S&P 500. We're just about unchanged on the S&P 500. On the Nasdaq, we're down by just 0.25%. As we count you down to the cash open, let's get you up to speed on the movers out there this morning with your morning movers. Here's Danny. Hey, Danny.
Hey, John. Maybe exemplary of the calm that's overtaken markets are what's happening with the two banks that were the poster child for the next little critters to crawl out from underneath the fridge. That is Zions and Western Alliance, the mid-sized banks that reported write-offs tied to loans made to a distressed commercial real estate developer that maybe was fraud. There are allegations of that. Maybe collateral disappeared. Either way, climbing 5% and 3.5% respectively. It coincides with the broader turnaround in sentiment in markets, but it also coincides with some of the regional bank earnings that we've been getting this morning. And we've had quite a few. We've had Truist, for example. We've also had Fifth Third Regions. You can see all those shares up that have reported because all of them also reported better than expected earnings. And key, their credit losses were less than expected. So no infestation here. Finally, one of the stocks that continues to lose steam this morning is Eli Lilly. Those shares down nearly 4% after Trump yesterday in that press conference with Merck saying that the obesity medication could be sold as little as $150 per month. As a reminder, Ozempic and Wegovy goes for about $1,000 a month. To be clear, the services for Medicaid and Medicare say that negotiations are still ongoing, but BMO notes that this just shows how tough and stringent those conversations are. So again, shares of Eli Lilly falling this morning, John.
Danny, thank you. Thanks for this morning. Look out for Danny and Matt Miller in about 30 minutes' time to run you through the opening bell. Better tone to the tape this morning off the back of comments from the President of the United States, a more constructive tone around the issues of China. And just seeing a report right now, Anne-Marie, that the Treasury Secretary will be speaking to his Chinese counterpart later on today.
So obviously they're going to be talking about trade and potentially what Xi Jinping and President Trump could agree upon in the next few weeks. Critical for the Treasury Secretary is going to be really trying to figure out if China can walk back their threats and what they potentially plan on doing in terms of choking off really the whole world when it comes to rare earths. Not just the fact that they own all these rare earths, they process them, they refine them, and then they sell them. And if we don't have access to that, that can affect everything from your cell phone to a tomahawk.
The very same week those two leaders sit down together, it's the very same week we get a Federal Reserve decision. The central bank going into the blackout period after the close today, but not after a week's worth of Fed speak. Bloomberg's Mike McKee joins us now for more. Mike, we get a ton of Fed speak going into the weekend. We've had a ton over the last week.
Yeah. We have indeed, and I'm sure everybody is glad that at midnight tonight we start the Fed blackout period. They can't talk to us for 10 days until we get to that Fed meeting on the 29th. We have had 17 Fed speeches, appearances, questions, interviews this week, and one more to go. Alberto Musalem sits down with me later this morning. There have been 10 different Fed speakers, and you can see the impact that they've had. You wouldn't really make a lot of money in Las Vegas on the change in those odds from 98% to 103%, and December 97 to 110. Well, you know, it's about where you think they are. And really, nobody has moved. We did this chart on Monday, and nobody has changed their position in terms of whether they're hawkish, dovish, or somewhere in the middle. The middle is the one where most people are, the largest number. So it looks like we are on track for an October cut. And as Chris Waller was telling you yesterday, then we pause for a second and see where we are if and when we get some more economic data before we start deciding on December. Markets have already decided, but the Fed is trying to make it clear that they haven't yet. One thing we did learn this week, Jay Powell came out on Tuesday and said that we are getting close to the end of QT, and the markets are starting to push in that direction. The Fed's standing repo facility has been taken up by the most amount since 2021 rather, in terms of banks accessing the facilities over the last 2 days. They are starting to show signs that there are some liquidity strains in the market. And we could see the Fed, even in October, perhaps, announcing an end to QT, or at least a timetable for that.
Mike, this was great. Looking forward to closing out the Fed speak with you, sir, and the St. Louis Fed president later on today at noon Eastern time. Don't miss that. Alberto Musalem, the St. Louis Fed president, sitting down with Bloomberg's Mike McKee down in Washington, D.C. Let's stick with the Federal Reserve. Governor Christopher Waller weighing in on the bond market.
If you think about cutting rates, which we're doing and I think we'll continue doing, that does have a pass-through to the 10-year. And the 10-year is often the anchor for pricing mortgages. So the 10-year is down to like 4%. It's come down from 4.5%. That's about 0.5% off. If it were to continue drifting below 4%, you'll start seeing some downward pressure for certainly mortgages.
Certainly after that conversation, we continue to drift below 4%. The 10-year below 4% at 3.99. Steve Asciuto of Mizuho writing the following. This is the minimum level of rates you would expect if the Fed were credible in its inflation target at 4%. The yield on the 10-year is fully priced for an economy with little to no inflation risk. Steve joins us now for more. Steve, good morning.
Good morning.
Do you think we should be priced for an economy with little to no inflation risk?
No, I don't. I think there is more inflation risk in the system than the markets are currently pricing in. But I think the markets are pricing in the degree of excess liquidity that's still there. Even though we're seeing some, chinks in the armor in terms of the quantitative approach here and what's happening in terms of some of the reverse repo areas, there's still an enormous amount of liquidity. And you see the way the market traded this week, especially, earlier in the week in the credit story when we were worried about banks initially. And then we saw the Goldman issue come out and the market was substantially oversubscribed for that issue while we're worried about banks. And so I think there's still an enormous amount of liquidity, and I think that's holding down the long end of the curve. Plus, there's the global deflation story that's holding down the long end of the curve as well.
When you say inflation risk, do you mean tariffs, or are you seeing inflation in other parts?
Well, I mean, we've got a Federal Reserve that wants to maintain full employment, and we have an economy where we are seeing inflation without much tariff running at well above its target, running closer to 3%. So you would sit there and say, okay, then there is inflation risk in there that's not being priced in. Now, you could say the 10-year is expecting, on average, the Fed to be credible over a 10-year period of time. True. However, we have been above 2% for 4+ years. So there starts to be a window there where this is a fully priced market. And I think that's part of the reason why, we had this rally yesterday afternoon, and then we've pulled back towards that 4% level, because it is a critical psychological level, and it's also a critical mathematical level because it's a 2% inflation rate.
Why is it critical psychological level?
Because it's an environment in which, when you look at most people who've been in the marketplace, if you break through 4%, you're usually looking at a substantial move below that, because something has gone wrong in the system. And that's why you had so much of a response to yesterday's announcements by Zion and so forth, in terms of the way the market's knee-jerk response took place on that. And now we're starting to see the pullback as we begin to realize it's more idiosyncratic than it is systemic.
And we've bounced back big time. The broader equity market has too. We'll be tracking that. I want to stay on course for the Federal Reserve and stay on track with you. This Fed and the recent decisions, and the next one too, is anchored to a massive step down in payrolls. What do you think they should be anchoring these decisions to?
I think they should be setting it up as an insurance policy standpoint. And I think they should be setting it up in an environment in which they want to make sure that they are achieving still full employment. That's what they say their target is. And I think if you wind up getting an unemployment rate movement that goes against their need to cut interest rates, then I think they should pause.
So this is a risk management decision.
Correct.
That's kind of what they're doing, isn't it? How much daylight is there between you and what they're doing right now?
There's not a lot. I mean, after the payroll employment numbers came out in August, I was on this call and we talked about the fact that they might as well just do 3, September, October, and December. And it looks as if that's what we're going to get out of it. And that will pull us back into, from my calculations, a marginally stimulative monetary policy standpoint. For the market, they still have to get to 3% to be neutral. For me, 4% is neutral. So if we get to that level of 3 3/4 or so on the 10-year note, then we're into a stimulative territory.
If their bias is to the labor market,
yes,
what do they do without a labor market report?
Well, I mean, as the chairman indicated the other day, they have the ADP numbers. They could look at some of the weekly claims numbers. They can look at some of the continuing claims numbers. They can do some work and adding those things up and making those kind of assessments. And I think you basically have to take into consideration that there's a lot of uncertainty built into this situation. If you look at the wall of worry, I mean, we've got a government shutdown. We've got the tariff situation. We've got the Chinese trade war negotiations, in terms of you want to call it that or not. We've got the Middle East hostilities. We've got the Ukrainian hostilities. We've got a government shutdown that doesn't look as if it's going away. We have the upcoming question as to whether or not the tariffs were legal or not in front of the Supreme Court.
Why not go on pause then for October and recalibrate for the end of the year?
I think you want to make sure if there is something wrong, you get it in October so that you make sure there's a good fourth quarter of the year.
Steve, I've got no idea what happens in May and beyond because we don't know what the leadership of the Federal Reserve looks like. But do you think markets might be underappreciating the potential for a pause from the new year up to May?
Oh, I think the market definitely is underestimating the potential not to get to 3%, yes.
Steve, it's good to see you. Thank you, sir. Steve Asciutto of Mizuho, more constructive on growth for next year and less constructive on rate cuts for the new year and beyond.
And what he's talking about is that there's still a lot of inflation risk in the system. To his point, the tariffs haven't hit yet. They really haven't hit a ton of consumers. Besides Levi saying they're passing it on, a lot of companies are actually just absorbing it. And we're going to start to see the effects the end of this year and then 2026.
Stop talking about trade for a while through the summer, and here we are in the last week, driven by the trade story again going into these talks between the US and China. Equities were down 1%. A lot of talk in Europe and Asia about what happened in the US session yesterday. Credit stress coming to the fore in a couple of regional banks, and And here we are with equity futures totally unchanged off the back of comments from the president a little bit earlier this morning on trade. Let's get you an update on stories worldwide with your Bloomberg brief. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John, thank you. US-China tensions, as you're saying, showing signs of easing. President Donald Trump telling US media that high tariffs on China are not sustainable. The president adding that he thinks we'll be okay with China. Trump is preparing to meet with Chinese President Xi at the APEC summit later this month. Apple is getting ready to launch a touchscreen version of its Mac computers. The new laptops will have displays with OLED technology and a full trackpad and keyboard. The touchscreen MacBook Pro is expected to be released in late 2026 or early 2027, with prices likely to be a few $100s more than current versions. In sports, the Toronto Blue Jays blew out the Mariners 8-2 behind a pair of home runs, leaving the American League Championship Series at 2 games apiece. In the National League, the Dodgers held off the Brewers 3-1 and now lead the series 3-0. And in the NFL, the Cincinnati Bengals edged out the Steelers 33-31 with a last-second field goal. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for this week. This is a Blue Jays free zone, right? We don't talk about the Blue Jays?
Definitely a Blue Jays free zone. I'm a little bit still.
You're still sore about that, really?
It's ridiculous. It's insane we lost those games. Absolutely smoked in Toronto, and it's embarrassing.
Okay, all right. We'll move on. Awkward. Up next, let's set you up for a day ahead. Plus, Mark Haefele of UBS Global Wealth Management joins us in just a moment from New York City. You're watching Bloomberg TV.
The Fed's going to have to cut more than they expect. We could go all the way almost back to zero interest rate policy. We haven't even gotten to a recession yet or any real liquidity event. High yield spreads are still tight. The market's near all-time highs. This is not yet the real troubling part of the market. When we get there, I think the Fed's going to have to cut more than the markets think. I think it's going to be a global phenomenon, and I think you could need to go back there.
I try to stay open-minded because so many people have got so many things so wrong coming out of the pandemic. But that is quite a call from Matt Miskin of John Hancock. And I kind of understand his point. Even with GDP where it is, a lot of people are talking about a Fed taking rates down to 3. And I guess Matt's point is, what do you think is going to happen to interest rates if things get really bad? If this is the conversation with unemployment in the low 4s, what's the conversation with unemployment 1 percentage point higher? And then I start to think about, okay, maybe not 0, but you can get your head around the idea that you go back to the 1s or the 2s, and that's the point that Matt is making here, just getting you to think about what could happen in the future. What could happen in the future is equities could turn green because the equity market's turned around big time in the last 2 hours. We were down by 1% on the S&P 500, now down just 0.1%. On the Nasdaq 100, we're down by a third. We were down by more than 1%. You see it in the bond market too. 2-year, 10-year, 30-year bond yields were down across the board, and now they're higher across the board. 2s at 344. We were sub 340 when this program started. 10s at 399, and a lot of it is the President of the United States with a more constructive tone on China.
Yeah, he's like the Terminator this morning for the cockroaches everyone was concerned about when we walked in, Jonathan, earlier this morning.
Pest control.
Pest control, exactly, yeah. Because remember, everyone's saying there's a cockroach here. We're going to have all these credit concerns. Actually, the banks are turning around, and we might end the day higher when it comes to the banking sector and also the broader market. And the president is just basically turning down the dial when it comes to the rhetoric between himself and Xi Jinping and signaling the tariffs are not going to be as high already as he threatened as he goes into this meeting.
The swings we've seen in the market over the last week, since last Friday, have been unbelievable. We talked about Friday, the biggest one-day drop last Friday since April, biggest one-day rally since May on Monday, and then everything in between has just been a massive swing of anywhere between 1 percentage point to 2 percentage points every single session coming into Friday. As we count you down to the opening bell, here's the trading diary for today and into next week. Today, President Donald Trump meeting with the Ukrainian leader in Washington. Look out for that. Next week, some earnings for you. Netflix on Tuesday. Wednesday, we get Tesla. Thursday, Intel becomes a more and more interesting story. And on Friday, we will actually get some data. We'll get some data. CPI going into the weekend. Let's stick with the data. CPI could be the only government print the Fed gets ahead of the rate decision later on this month. Mark Hafley of UBS writing, with the Fed on track to continue its rate cutting cycle, we believe the case for quality fixed income as a source of portfolio resilience remains strong. Mark joins us now for more. Mark, welcome back, sir. Let's just talk about that income. Over the last week or so, that yield is just slipping away from us, Mark. What do you think is driving that story?
Well, I mean, it's a lot of factors. I think first, we do have some concerns out there about the labor market and other things. But, we've got a Fed that's going to cut. And then I do think this QT story is also important to this because, that was a huge factor perhaps in creating some of those term premiums. So that side of it seems to be coming together.
S&P 500 target for you and the team mid-year next year, 7,300, Mark. What needs to go right to get us from where we are to get us there?
Yeah, well, first, anybody who's in the equity market does have a call on AI, whether they like it or not. And we think that the CapEx can continue into next year. That's one thing. Second, again, don't fight the Fed. Third, the earnings are looking good. And fourth, the one big beautiful bill is going to start to add some stimulus as we get into next year. So that looks like a positive backdrop to us.
Even you're constructive on AI. Do you have any sort of concerns about the vendor financing that's happening within this space?
Well, 26 years ago, I sat down and was writing to clients about the dot-com bubble. And so writing this month was, brought back some memories. So, yes, I think that I remember, some of the circular financing of the dot-com very well. I think that it's still early stages. Obviously, somebody's concerned enough that it's getting disclosed, and it's definitely something to watch. We'll just have to see where it goes from here.
Mark, when it comes to what we had this morning, which was the bank sector under pressure, given the concerns of these bankruptcies and credit qualities, do you think that this could potentially be a longer-term problem within this space and that can affect and have contagion across the broader market?
On the banks, we're looking at the delinquency rates. They look like they're okay so far, and so we're still thinking this is kind of a one-off. And the globally significant banks, the large banks, are doing very well.
It's odd, Mark, that we finished the week talking about these issues, and I get them, they're important, we should track them, on a week when we've just had blowout numbers from the big banks on Wall Street, Mark. Do you see this market as a bit of a market of contradictions at the moment?
Well, I love talking to you on a Friday because you're looking back on the week with this sense of wonder, almost awe that like all the stuff that has happened. And so I agree with you. I mean, we've had a heck of a run in the market. We don't have a lot of data right now, economic data. And so every data point is important. But I think as some of the, as you highlighted, you have to look at everything that's going on, from what the president is saying to, what the Fed is saying to what foreign leaders are saying to, what you're hearing from companies, and put it all together in the right matrix.
The good news is, Mark, that in bad times, bonds are working. And I guess the good news for gold is that gold works when the market's down and gold works when the market's up. This is just a relentless rally, Mark. We're on a 9th straight week of gains, a run we haven't seen since 2020. This week alone, we're up by close to 8%. I think 7.5% is the number on my Bloomberg terminal right now. Mark, can we just finish that? The relationship between gold and risk. We were touching on this when we talked last time. How are you reading these moves in gold? What's it all about?
Well, I think that part of it is fears about kind of the dollar and this and the concerns about debt. But a large part of it is the weaponization of the dollar after the Russian invasion of Ukraine, the use of sanctions, and central banks saying, hey, how else can we function that we're not necessarily beholden to the dollar system? And we continue to see that happening. Obviously, we've seen speculatory trades and retail come in on top of those things. But I think this central bank component is key to the story. And then, of course, underpinning this whole rally is the continued fiscal spending, deficit spending that goes on. And, it's don't fight the Fed, but also don't fight that tide of money that is stimulating economies around the world.
The Fed's an interesting component of this, Mark, and I'm pleased you mentioned the central bank diversification off the back of what happened with Russia, because that's been a source, a massive tailwind for this story. A non-yielding asset performed so well in an otherwise high interest rate environment. Mark, as we start to reduce interest rates of the Federal Reserve, is that just more fuel for the next leg of the trade? And what kind of numbers are you and the team considering?
Yeah, it normally would be, but I think that given this run, from here, we're a little cautious and thinking more of gold as a hedge against potential risks that pop up, rather than saying, hey, this is a great time to pile in for kind of speculative gains or trading gains.
Mark Haefele of UBS. Mark, thank you, sir. Appreciate the clarity on gold as well. Mark Haefele of UBS Global Wealth Management, breaking down a move on gold. We've had a long, long run. A really steep run. If you look at the chart of gold, it's like exponential over the last 3-4 months.
It's been relentless. And it's also interesting who's buying it. It's central banks, as we were just talking about, and that's been a story since Russia's invasion of Ukraine a few years ago, but also concerns about inflation, concerns about trade war, shoppers in Asia. There is a ton of demand around the world from different pockets of the financial system for this asset.
Since the middle of August, we've just sort of gone vertical on that chart. Great to catch up with Mark going into the weekend. Heading into Monday, here's the lineup for you. We'll catch up with Russ Kostrick of BlackRock, Amy Gower of Morgan Stanley, Sarah Hunt of Alpine Saxon Woods, Abby Yoder of JP Morgan Private Bank's going to join us as well. The next 2 weeks are going to be really, really interesting. So next Friday, a week today, we'll get some CPI data. Then the week after that really is the big one. We're going to spend the next week talking about it. A sit-down conversation potentially between the President of the United States, the Chinese leader, a Fed decision, and all those big tech companies. We've talked about the start of earnings season. Earnings season begins in 2 weeks' time. The major players on the planet, the big tech firms, reporting numbers.
And going into that meeting, as you would say of a Fed meeting, this Xi Jinping-Trump meeting is live.
Going to be quite a meeting going into month end. From New York City this morning, good morning. Thank you very much for choosing Bloomberg TV. Have a wonderful weekend. This was Bloomberg Surveillance.
Good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level. Sometimes conversations with different people might open up ideas to explore.
January. Blarina, thank you, as always. Blarina Urici there of T. Rowe Price, looking for higher inflation in 2026. The Federal Reserve's cutting interest rates into that.
And at the same time, what we heard from Earl Davis earlier is that even if the Fed cuts aggressively, it's going to cause the long end to rally. And when we asked why, it doesn't make any sense if you expect inflation's going to pick up. And he said, well, the market can only focus on one thing at a time. So that's a 2026 story. And that seems to be what a lot of people are banking on.
Chairman Powell set himself up to ignore it. Is this market going to ignore it too? Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Let's cross over to Lizzie Burden. Hey, Lizzie.
Hey, John. A U.S. appeals court is allowing, for now, President Donald Trump's plan to send National Guard troops to Portland to counter protests against his immigration crackdown. The divided court in San Francisco lifted the order blocking deployment of 200 troops. Elsewhere, Unilever has delayed its demerger from Magnum Ice Cream due to the U.S. government shutdown. The company shared the SEC is currently unable to approve its registration to list on the New York Stock Exchange. The spun-off unit was initially scheduled to debut in the Amsterdam trade on November the 10th, with planned secondary listings in New York and London. And police are still looking for those precious jewellery stolen from the Louvre and the thieves behind the heist as well. The robbers got away with a haul on Sunday that included a tiara, an emerald necklace, earrings and a sapphire necklace. They dropped a crown and a yellow vest with DNA traces, which gives authorities hope for recovery. And that's your Bloomberg Brief, John.
As you do, just casually dropping a crown.
Okay, actually, they damaged this crown from the 1800s, and people are saying amateurs. That was the response. Amateurs. Come on, get with Ocean's 11.
Thank you. Great work, Lizzie, as always. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with the former Barclays CEO, Bob Diamond, as he remains bullish on regional banking. That conversation up next.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups coming to the market to seek for new funding.
The best thing is to feel it and see it.
Southeast Asia is at a crossroads. In a global power struggle over tech, trade, and influence, will the region be able to chart its own course? hear from top CEOs and key policymakers as they shape the region's economic future and redefine growth on their own terms. The Bloomberg Business Summit at ASEAN. Join us.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at the front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. New episode Tuesday, only on Bloomberg.
Technology is embedded in every aspect of our lives and laying the foundation for the future. From finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Drulers in Hong Kong. I'm Sherrianne in Tokyo. Watch Bloomberg Tech Asia. New episode Friday, only on Bloomberg Television.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We kind of all recognize that the part of the reason why we have had such a strong economy is that we have a consumer who is so willing to go out there and spend money. And that has really propped up a lot of this economy in a really major way. If we lose that as we're starting to see some degradation in the consumer strength at the low income, it really does ripple through this economy when so much of it is driven off the health of what the retail consumer is doing.
That was Julie Beale of Kane Anderson Rundnett talking about the adaptability of corporate America and a whole lot more. As we count you down to the opening bell, lots of earnings in focus. Later on today, Netflix results after the market close. You'll also hear from Western Alliance 2. As we make our way to Wednesday, Tesla and IBM results. On Thursday, numbers from Intel, Ford and American Airlines. On Friday, CPI data, the main event on the data front because we don't get much of it these days. And UMich consumer sentiment going into the weekend. Let's stick with earnings. Zion's reporting a beat on earnings with a net income of $222 million despite a $50 million loss from an alleged fraud. The former Barclays CEO, Bob Diamond, writes the following: the dislocation in regional banks stems from a few single bank-specific issues, but doesn't change our view on the opportunity. We remain very bullish on regional bank consolidation. Bob joins us now for more. Bob, good morning.
Good morning, John.
Hey, it's good to see you, sir. Look, a few years ago, we had some problems managing interest rate risk. Can we avoid it with credit risk in this segment now?
I think broadly in regional banks, as you just quoted me, we're very bullish. I think, you know, both the interest rate dislocation that started with SVB or was recognized with SVB, and we were really a function of rates going from 0 to 5.5%, is in the market. I think the the regional bank area has some really strong banks and some that are not as well managed. So of course, some have more exposure, for example, to commercial real estate than others have. And if the commercial real estate is in Iowa, it might be different than if it's in LA. So we look at all of those things. But as a sector, this is a really, really strong sector, the banks. There's 4,500. It has the support of Secretary of the Treasury Bessent. That consolidation is necessary, makes the banks more competitive. It increases the ROEs. It makes them just better investments. And I think 4,500 banks in the United States of America, it's the wrong number. And so we see this going over the next 2 to 3 years to closer to 1,000 or 1,500. And we think also, John, I think this is really important. The thesis here is one of consolidation and taking costs out. So many of these smaller community banks are just too small to succeed. They're very good banks, but to get a positive ROE with technology costs, with regulatory relation costs, virtually all of these banks have the same technology platform. So you eliminate one technology platform. Many of them, or all of them, have regulatory relations staffs. You can eliminate one of those. You don't really need two. So if you add the cost synergies, which we've proven in back testing really come out and are real, and you add the increase in ROE, because when a bank buys another bank, there's purchasing accounting, and you have to market fully through the P&L, the bank that you're acquiring. You're putting capital in. Automatically the ROE goes up because the asset prices are different. So when we look at the cost savings, we look at the increase in ROE, we look at 4,500 banks, we look at too many or too small to succeed. This is probably the best investment we've seen, where the downside is really
to see Xi and Trump actually a meeting without some deliverables already in hand. And that can mean what Trump already mentioned, soybeans, you got the rare earths, as well as the fentanyl. And I think on the fentanyl issue, China is highly motivated to do something. It's already back in June, it tightened controls on exports of precursor chemicals. And, basically it wants those 20% additional tariffs reduced at the very least. And on the issue of soybeans, that's an issue that Trump is very highly motivated as well, just because he's been facing a lot of criticism from his main voting constituency in terms of the farmers. Yeah. And, China hasn't bought any soybeans this year after buying almost $13 billion worth last year. But in terms of rare earths, that's going to be a little bit trickier, just because China sees this issue as recently tightening its export curbs, just because the U.S. announced some other measures against China in terms of limits on U.S. exports and shipping tariffs. So that's going to be a lot trickier to sort of resolve, just because this is a big leverage that China has over the U.S.
So, Alan, in terms of the data today, the economy expanded some 4.8% from a year ago. How much confidence is there in China's economic future?
Well, I would say that the third quarter GDP gives the Chinese government confidence that it'll reach its annual growth target of around 5% this year, and probably reduce the need for any immediate stimulus. Outside of that, it's hard to say, just because in the third quarter numbers, there were some nasty surprises, such as fixed asset investment, which contracted, on a year-to-date basis for the first time since 2020, largely due to the fact that there's less investment in the key real estate sector. Yeah. And also with retail sales as well, it grew at the slowest pace since November. That's why the fourth plenum that's happening right now, and it's going to end on Thursday, is so crucial, because investors are going to see whether or not China what it's going to do is galvanize its economy. Yeah. So we're looking for stuff on, whether Xi Jinping will take more measures to reduce the curb overcapacity, the anti-evolution campaign, so to speak. Whether or not it's going to reduce China's reliance on Western technological goods, and whether or not it's going to do more to boost domestic consumption. As I said earlier, retail sales and domestic consumption is flagging, despite what happened during the October national holidays, when we saw some really good growth overall.
Alan, thank you so much. Yeah, thank you so much to our Shanghai Bureau Chief there, Alan Wang. Now let's also turn to the budget concerns in France and to our Paris Bureau Chief, Alan Katz. Alan, we've seen actually a lot of the French bonds move on the back of that S&P downgrade. How worrying is it for France at this delicate political time?
So the downgrade in and of itself isn't that worrying. As you pointed out, French bonds are down slightly today. I mean, a little bit more than German bonds, but not that much. And so, again, the idea that the ratings agencies, S&P and next week Moody's, were going to downgrade France was already baked in. The surprise was that S&P did it on Friday night rather than doing it a month from now when it was scheduled to do so. Why it accelerated its decision is not really clear yet. But overall, though, it does bring this bigger question, which is that given the sort of compromise that the current Prime Minister Sébastien Lecornu had to make last week, instead of giving up or suspending pension reform for a while, and agreeing not to use the decree system to sort of force through the budget, sort of what kind of budget is France going to come up with, and what does that mean for its efforts to try to reduce its deficit? And those are real questions that are not going to be answered very quickly, though we will have a better sense probably in a few weeks once sort of the amendment phase is through in the budget process. But S&P said that really what you have is a big period of uncertainty, and it's really not clear how much budget deficit reduction France is going to be able to get through in the end, and that's how they justified their downgrade over the weekend.
Alan, we also have quite a big corporate news actually in France, with Kering selling its beauty division to L'Oréal in a deal that's almost $5 billion. Does it say more about Kering or actually what L'Oréal's future looks like?
So it's really much more about Kering. So Luca Di Maio, who is the former CEO of Renault, who came in as Kering's new CEO in September, this is the first big deal under his mandate. It's not clear whether he was behind this deal or if it started before he got there. We've heard people say both things. What it is it's a move to say that Kering really needs to sort of focus itself on the areas that it's good at, which include fashion and eyewear, and that its effort to sort of move into beauty, which started, I believe, in 2023, wasn't perhaps I guess it certainly doesn't have the scale that it needs to really be able to compete on that level. And this deal, which allows it to sort of partner in the beauty space with L'Oréal, that's their main business, puts the beauty in the hands of the company that really can produce it, and allows Kering to focus on some of its other areas that it really needs to fix, namely Gucci.
Great. Thank you so much. Alan Katz there, our Paris bureau chief. Quite a lot going on, of course, in our different bureaus. Now we're joined by Lale Akoner, market strategist at eToro, and Dana Al-Battaji, our managing editor for credit in EMEA. So thank you both for joining us. I mean, it just feels like, all weekend, Dana, we were looking at, what happens Monday, what happens with some of these credit concerns. I mean, could it be that we're two and done, or are we going to see a lot more turmoil this week?
I think so. Markets are priced to perfection. Spreads are so tight. So any sort of bad news would really be bad for the market. I mean, we are seeing a lot of volatility, mostly because people are nervous about how tight these spreads are. I don't think that we're done. I mean, we definitely know that there's a lot of bad credits out there. We definitely know that there's a lot hidden, specifically because of the growth in private markets. So we don't have that much visibility of how bad it is. So these things will come up. However, I will say that everything that has cropped up thus far has been very idiosyncratic. It's not been market-wide. It's been very company-specific.
Yeah, so Lale, I mean, I guess the big concern is that there's some kind of mountain of defaults that just waits to unravel. What's your take on it?
Sure, I totally agree with Dana. We do think that this is just headline-driven risk repricing based on very idiosyncratic, very one-off events. That said, let's be clear that we are approaching the end of the cycle. Yes, the macro backdrop is stretching it a little bit, but there will be incidents like that where, because of the very easy financial conditions that we have seen since, I would say, 2010, there might come up, these types of issues might come up again in the future. We look at places of weakness such as, again, subprime auto loans. Commercial real estate has been a concern for us for many years, especially distressed portions. And we also look at, obviously, consumer credit. But we are positively assured that the regional banks said that their consumer credits quality are stable, non-performing loans, charge-offs, they are all sort of at very stable levels right now.
So, Lale, where do you think we are? I mean, do we still have a lot of pain, or do we still have a lot of things to shake out? And could it be in 2-3 months? Or do you think we're actually done through the worst, full stop?
I think I'm quite positive, again, because of the macro backdrop, the fact that the Fed started easing, and there's massive fiscal stimulus coming into the picture, especially for next year. We are going to see $150 billion consumer aid coming in February as in the form of tax refunds. And that will go to the average U.S. consumer, right? So that will help, say, retailers, banks, and just consumer discretionary in general. And on top of that, as I said, easy monetary policy intact. We're saying 5 rate cuts by the end of 2026. However, that said, I think until we feel them in the macro, there could be some volatility because of the fact that the markets are, say, very concentrated. Earnings season is very on in terms of pressure on these mega cap names. If you are going to give a cautious guidance, your stock is going to suffer. That price to perfection is a little bit worrying for us.
Dana, what's your team looking at today and this week?
So we are obviously monitoring private markets to see what's happening there, and loans as well, just to see if there's any stress in those markets. And of course, we are seeing this bounce back because, as you said earlier, there is a lot of optimism in markets. However, I would also kind of go back to what you were saying earlier and just kind of add that a lot of corporations, a lot of lenders don't want to see a default wave. And so what private markets have been doing, and they've been doing very well, is they've been basically doing everything they can to avoid a default. And I think that we will be seeing much more of that, so that then if something does crop up, it's because you've got fraud allegations, or if you've got something big that they absolutely can't deal with anymore.
Lale, is there something in the earnings season, a way, can we go back to now looking at the earnings season if this kind of like calms down?
Sure. Look, for earnings season, we are really looking to see whether that strength in earnings is going to broaden both down the cap scale for, say, small to mid-cap companies, but also across sectors, right? I'm really hoping that we will get good results from financials. Banks have been very positive. Apart from insurance, I want to see, again, materials, industrials coming into the picture, thanks again to the fact that, the macro cycle is being stretched as well. There will be pockets of strength in consumer discretionary and laggards such as energy, such as consumer staples. Again, we want to look at consumer strength, pricing power of companies, whether they are operating margins are coming under pressure or not due to tariffs.
Is there anything that looks at like .com levels in terms of valuation that we should worry about, where we could see a little bit of air coming through?
I am not worried about a bubble in AI. In my opinion, AI has an earning power. It is poised to increase profitability of corporates, productivity of corporates and employees, and therefore it has earnings power, as opposed to, say, .com, where the market was pricing in hundreds of companies being profitable, where, in fact, they had no earnings power, they weren't profitable, they had no cash generation, and they had no scale as well. These handful of companies have proved to us that they are scalable, they are persistent, they have immense amount of cash flow right now. Now the first derivative is coming down, so the free cash flow growth is coming down. We will take a look at that, but ample amount of cash as well. So I am not worried. I'm not even comparing it with .com at the moment.
Dana, when you go back to the credit and actually look at some of the fault lines that we're looking at, it's always like the second and third round effects. Mm-hmm. Do we have a full understanding of what these companies, who they were exposing to?
See, this is exactly the problem. And because markets have become so complicated, and specifically with private markets, it's hard to know where the pain point is and where the pain point will end. And I think that's what makes everybody so nervous. So as soon as something comes up specifically like, anything to do with private markets, like a bad private market loan, and then they realize how many people are impacted by that, it reminds them that we don't have visibility in this space, and that's one of the issues. However, I will actually go back to the fact that a deal like EA, where JP Morgan was confident enough to give a $20 billion commitment for that takeover deal, for that take private deal, that is the same market that we're in right now. And markets are flush with cash. There's tons of money out there. So even though you do have these risks, and everyone knows that they don't know exactly how those risks will play out, they're still willing to buy these bonds.
Lale, is there anything that you see as weakness? Probably not linked to credit, but there are industry groups that, just because of the way they're put together, could be under more pressure.
Sure. Again, insurance is a concern for me. Yeah. I think costs are coming higher because of all these storms and disasters, and therefore claims are increasing. It has been a weakness, so we will look at other companies that will be reporting in the next few weeks. Energy is another one because of obviously decline in energy prices. We still haven't seen a meaningful pickup in earnings growth. I think those are the sectors I would like to.
I mean, how's the consumer doing, and especially the U.S. consumer? I mean, we have to remember we're also in a government shutdown, so actually there's not much data that we can look at to give us an indication of what the Fed could do, but also the health of the economy.
Sure. I mean, just looking at the banks, for both large cap banks and regional banks, I was very, again, positively surprised that consumer credit is very strong. Credit spending is strong. Delinquencies are low as well. So obviously, the concern is if layoffs increase, that will come under pressure. And obviously, we also want to see how inflation will happen in the future, and therefore how it will impact consumer spending as well. That's an area of concern. My opinion is consumer discretionary stocks are oversold right now. They are undervalued. And once these macro drivers are going to be felt in the economy, we will see those sectors coming to the picture in terms of performance.
Wonderful. Thank you both for joining us. Lale Akoner, their market strategist at eToro, and Dana Al-Baltaji, our managing editor for credit in EMEA. Now, coming up, cockroaches in credit become the talk of global markets. As we just discussed, we'll discuss if more are hiding in the corners. Robert Daforn from Polus Capital Management joins us next, and this is Bloomberg.
Global connections are vital for business expansion. Nearly 1 in 2 business leaders say decisions made on their own usually turn out to be poor.
When we go into a new region, networks matter, experience matters. Culturally, there are a lot of differences from region to region. We are just trying to find the right partner. Somebody reliable, somebody that is as invested as we are.
Widen your global network. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups coming to the market to seek for new funding.
The best thing is to feel it and see it.
Well, let's turn now to the credit troubles that rattled global markets on Friday. My next guest told Bloomberg earlier this year that we were in the foothills before a fountain of defaults started to build. That, of course, was before Jamie Dimon's warning of cockroaches and lending standards. And those worries escalated after credit losses at 2 U.S. regional banks. Well, let's discuss all of this with Robert Daforn. He's Chief Investment Officer of Opportunistic Credit at Polus Capital Management. Robert, thank you so much for joining us again. In May, you told us that you believed we were in these foothills before the mountain of defaults started to build. After the summer, actually, banks and private capital firms were stung by a series of high-profile bankruptcies. Where are we now in terms of that mountain analogy?
Well, thanks for having me again. I think we're just still gradually climbing the foothills, to be quite honest with you. It's been an incredible pickup in leverage over the last 15 years. And what we're seeing now are only those initial indications of misallocation of capital that are coming to the fore, because we've been in a period of slightly higher interest rates for 2 to 3 years now. We're starting to see decent level of bifurcation in earnings that we know of, bifurcation in the economy. And those things are creeping into this gradual growth in defaults. Naturally, we will see at what point that eventually becomes something that accumulates into something slightly larger.
Robert, how long do you think until we see the peak of defaults?
Honestly, that's very, very hard to tell, and it may not be a statistic to be worth watching, to be quite honest with you. The actual level of defaults that you would see recorded these days tends to be actually the level of hard defaults, rather than those that incorporate kind of effectively situations where creditors are taking losses, but perhaps are just amending and pretending into the future, or conducting liability management exchanges to convert a stressed credit into something that, is still outstanding, hasn't gone through default, but is unlikely to pay later. So I think the relevant statistic is going to be how many defaults and shadow defaults are there in the system. Will we actually be able to count those in private credit? Will they be accurately reported? So I actually think this time that the following kind of what looks like a default rate might actually not be as worthwhile as it has historically. We'll have to look at those other signals, things like bank charge-offs, which continue to slowly rise, consumer delinquencies, etc., and so on and so forth.
Yeah. So if you look at, the pain threshold, is it more banks or actually private credit firms that will suffer the most?
Or actually expanding that to other parts of the market. I think, look, typically the banks do tend to syndicate their more levered risk. So, there are pockets of leverage everywhere, and what's going to matter is which of those misallocated pockets of credit becomes the issue. I think in the banking system, we know that there is an amount of lending and leverage facilities into the private capital market. So there is that link between private credit and the banking system, via the leverage on those funds. So they're not immune from the issues. Obviously, what we also know is that private credit funds have actually been buying a lot of the syndicated risk rather than that the banks produce, rather than actually kind of self-sourcing that risk. So in the end, they own a lot of relatively similar risks also. So, but I wouldn't say that those are the only pockets of issues, right? I mean, there's a lot of leverage in the system, be it leverage, via margin in the stock market, on crypto, but let's not, of course, forget the high yield market where those weakest exposures are as well for the corporate market. So I would actually expect potentially all of those different pockets to suffer some issues at some time. I think ultimately what matters is also going to be the liability structure of how that debt is owned. I think people often think private credit is going to be immune from issues because these are closed-end vehicles, and therefore they don't necessarily have that run on the liabilities that you can have. But ultimately, these funds do have to sort of effectively send their money back to their investors at the end of the fund life, and that will be a very interesting process for us to see.
Robert, are there any sectors actually that you worry most about for defaults? I know there's been a lot more interest in, for example, software lending, which is facing pressures because of AI.
Yeah, I mean, it's actually quite a few different corporate sectors for various different reasons. So thinking cyclically, there are a number of weak sectors from that perspective. You only need to read the headlines to understand it's not that strong conditions for many of the highly cyclical interest rate sensitive sectors. So building materials companies globally are finding it relatively hard at the moment. We know the same of developed market chemicals companies. There's been a lot of headlines over the challenges for that sector recently as well. So I think you can actually go much more simply and think, well, which sectors are to some extent struggling in this cyclical environment, because we have a very bifurcated world on the earnings side at the moment. But I think it goes without saying that over time we will be seeing losses in the software sector. I mean, I think artificial intelligence as a theme will see some relatively interesting credit losses, partly because of kind of stranded assets that will eventually emerge on the kind of harder asset side. But on the software side, potentially those situations which where the coding has been done more cheaply and hence the product replicated via those systems. So certainly that having been a big area of growth for the leveraged credit and private capital markets is why it poses a risk over the coming periods. But that may actually be a sector that incurs losses slightly later than the more obvious cyclical ones with this bifurcation.
Robert, thank you so much. As always, Robert Daforn there, Chief Investment Officer of Opportunistic Credit at Polis Capital Management. Coming up, Israel strikes Hamas in Gaza and suspends all aid shipments. We discuss the state of the ceasefire next, and this is Bloomberg.
Southeast Asia is at a crossroads. In a global power struggle over tech, trade, and influence, will the region be able to chart its own course? Hear from top CEOs and key policymakers as they shape the region's economic future and redefine growth on their own terms. The Bloomberg Business Summit at ASEAN. Join us.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. President Trump lists rare earths among his top issues with China as a trade truce nears its expiration. France gets a second credit downgrade, with S&P stripping the nation of its AA rating. Plus, Japan looks set for its first female prime minister, with the ruling Liberal Democratic Party expected to announce a coalition deal over the coming hour. Now, Israel says it has resumed a truce with Hamas in Gaza after heavy fighting over the weekend. That's as both sides accused each other of breaching a deal brokered by U.S. President Donald Trump. Let's bring Jumana Bersachi in Dubai. Jumana, bring us up to date with developments on the ceasefire.
Yeah, well, Francine, an intense week of fighting on both sides. And what happened is early on Sunday morning, Israel blamed Palestinian militants and Hamas for an attack that took place on an IDF vehicle that ended up killing 2 soldiers. In response to that, the Israeli Prime Minister vowed a very strong reaction. And that came throughout the course of Sunday, with over 100 airstrikes administered by the IDF on various parts of Gaza and Rafah. They also temporarily suspended the shipment of aid, and up until now, the Rafah crossing is still closed. Now, the Gaza government media office says that Israel has killed at least 97 Palestinians and injured 230 since the start of the ceasefire. That being said, Hamas officials have said that they are committed to maintaining the ceasefire, and that they had actually lost contact with some of those militants that were operating in Rafah, that it wasn't themselves or Hamas, the militants themselves, who had conducted those attacks. By the end of the evening, Israel said that they were committed to enforcing the ceasefire. This is where we are today. So the ceasefire is still holding, still very tenuous situation. President Trump was asked about it on Air Force One. He also said that he believes that it's going to hold up. But again, a very fragile situation here. And of course, a lot still to be done, Francine, in terms of implementation of the rest of the points out of that Gaza peace plan that came into being a week ago.
Jumana, have we heard from the U.S.? What are they doing about it?
Yeah, well, so we know that some of the heavyweights, the mediators, are going to be flying back to the region again. Steve Witkoff alongside Jared Kushner, who were key to getting the Gaza peace plan agreed to in the run-up to Sharm el-Sheikh. And then J.D. Vance, also the vice president, weighed the possibility of also coming to the region as well. And I think key here is the U.S. want to keep the momentum going. They want to make sure that there are no further violations of the ceasefire. And let's also not forget that even though we have seen the return of the living hostages, there are still 16 bodies yet unaccounted for. And there's still a lot of pressure from the Israeli government on Hamas to retrieve the remainder of those corpses, which many of them are actually unaccounted for and buried deep, deep beneath the rubble. At the same time, of extreme importance to the international community is the resumption of humanitarian aid. As I just mentioned, the Rafah crossing is still closed. There has been a resumption of aid, but not to the extent that is required. And then beyond that, security considerations with the establishment of an international security force, with the likes of the U.S., other countries looking to participate as well. As of now, to be stationed in Israel, no boots on the ground in Gaza, which is what the U.S. have said. And then finally, and this is a major point of contention, how exactly they're going to disarm Hamas and the steps to get that done, given Hamas have been resisting calls for complete disarmament in the absence of a full withdrawal of Israeli forces from the Gaza Strip. They still occupy or control around 50% of it. So still a lot of daylight, but certainly focus from the Trump administration to keep the ceasefire alive, Francine.
Jumana, thank you so much. Jumana Bersachi there in Dubai. Now, Ukraine's President Volodymyr Zelensky says the war with Russia should be frozen along current battle lines before the two sides can enter into peace negotiations. President Trump has urged Zelensky to accept Russia's terms for ending the war, despite weeks ago saying that Ukraine could win. Well, our next guest says Europe is facing an unprecedented moment for its security, and the uncertainty is changing the future of the continent's defense and technology sectors. Well, we're now joined by Alex Ferrara, a partner at Bessemer Venture Partners. Alex, thanks so much for joining us. Look, if you look at the defense investing and actually defense industry, it's gotten like a huge amount of momentum in Europe. I mean, are we overestimating or underestimating how much this sector can thrive in Europe?
I think it's the appropriate amount of estimation. We have been investors in defense tech for a decade in the U.S., and over the last 18 months, we've started to become more active in defense tech investing here. And it's really for three reasons. One is we've seen this dramatic commitment increase by NATO for 5% of GDP among the 31 of the 32 member states. The second is we really are seeing changes similar to the U.S., changes in the way procurement is happening. And the third, we're seeing just the nature of warfare has changed dramatically and the economics of warfare as well. So I think while there's a lot of excitement, I think it's warranted.
Yeah, what does that mean in terms of investments actually in Europe? I know that if you look at the budget, for example, this was a real game changer from Germany. We're not going to really see that money until maybe, next half of next year and then well into 2027. What does that mean for companies?
Sure. Well, we try to invest at the very early stages. We try to invest at the inception stage where possible. So these companies that we're backing often take 10, 15, 20 years before they ultimately go public. And so, we're looking at a pretty long-term time horizon. So if it's 5 years or 10 years, I mean, that's something that's compatible with the way that we look at investing in these startups.
Yeah. Do you need consolidation amongst the big defense companies in Europe for the startups to have a little bit more space?
I think there are, not necessarily. I think the pie is growing. We've got a number of very large primes in each of the, in many of the major countries. Those companies, those primes have seen dramatic increases in their market caps. I think, Rheinmetall, its stock price is up 27 times over the last 4 years, which is, that alone is a venture return. It's dramatic. And we've seen now a growth of the pie. And so while I think those companies, the primes, will have a lot of success, I think we expect some of the neo-primes, some of the more emergent startups are also going to have an opportunity to fill the gap that exists around specifically some of the AI and software-defined innovations that are needed by warfighters on the battlefront.
Alex, just 4 or 5 years ago, defense was a dirty word, right? It was arms, it was dealings, and now you need it to rebuild, I guess, a more secure Europe. But how do you make sure that you're not giving to the bad guys, weapons that are dangerous?
Sure. Well, I should say, we don't invest in munitions. So, we're focused on defense tech. There are elements of war tech as well. But, I look at it somewhat differently. I think that combat, I think we can all agree, combat is probably the one job that we would like to see replaced by robotics and automation. And so, by, deploying these autonomous, drones, whether it's air, land, or sea, I think long term, it's probably going to be something that has potential to save lives rather than create more destruction.
So what are you focused on? Is it like air defense or is it drones, recognition?
We have, it's a pretty broad area of focus. We have 5 specific areas. We're looking at drones is probably the centerpiece, and it's both air, land, sea, as well as space. We're also looking at command and control software, which is the software layer that's needed to control this increasingly autonomous fleet of drones. We're looking at space tech, which is, I think, increasingly space sovereignty is viewed as critical for national security. The satellite constellations that the U.S. has, that Europe has, are critical for both commercial applications as well as military use cases. And we're also looking at advanced industrial manufacturing, including rare earths, which has been in the news a lot lately in terms of the fact that China has such a stranglehold at this point on the production of them.
But Alex, when you look at robotics, but also drones, does it not mean more casualties on the ground if these wars are just fought on that ground?
It's hard to estimate how that will play out, but I think as we look more and more at what's happening in Ukraine as a model, we're seeing the deployment of these low-cost fleets of autonomous drones, autonomous boats, submarines, and it's in many ways that has become this autonomous fleet has become the front line, and so the hope is that it actually can reduce the number of lives lost because you will have more robots fighting the fight rather than humans.
Yeah, I think that's still debatable, but maybe there's a hope. Alex, when you look at, some of the things that I know is being discussed in the corridors of Brussels, is how can you be less reliant on the U.S. given the unpredictable nature, actually, of this allyship, and we don't know what happens in 1, 2, 3 years.
Yeah.
Could European defense stand alone without Starlink, without some of the American technology that at the moment is really at the center of everything we do in Europe?
Sure. Well, I think Europe is going to need and is working on its own answer to Starlink and its alternatives to things like Starlink. I think in many ways this has been a wake-up call, and when we speak with people in the ministries of defense or government, they look at this in the optimistic case as a potential path to prosperity. Europe has really struggled in terms of a shortcoming on GDP growth relative to the U.S. Per capita productivity has really lagged over the last 15 years. A number of things have been attempted, but as a technology investor, I'm of the belief that productivity and innovation really are going to be the drivers for future prosperity. And the hope is that, much like we saw in the U.S. in the 1950s and 60s, that we will see dual use opportunities where many of the innovations that are coming out of the front lines of Ukraine ultimately will be used for the commercial sector. And whether that's something like the drone capabilities that our portfolio company Auterion has developed, being used for things like food delivery or deliveries of medicines into far-flung reaches where they're inaccessible today, or whether it's some of the technologies around aerial defense that could perhaps be used in applications such as self-driving cars. The hope is that this could really drive prosperity for Europe.
Alex, thank you so much for joining us. Alex Ferraro, they're a partner at December Venture Partners. Now, Japanese stocks have rallied on news that the ruling Liberal Democratic Party will sign a coalition deal later today. It paves the way for Sanae Takaishi to become the country's first female prime minister. Now, let's get more on that story with Alistair Gale, our Japan economy and government reporter in Tokyo. So what more can you tell us, Alistair, about what we can expect later today?
Well, probably in the next half an hour, we can expect there's going to be a signing ceremony for this new coalition. We learned earlier today that this smaller party, Japan Innovation Party, was going to join with the ruling Liberal Democratic Party into a new coalition. They've reached an agreement after a weekend of long talks. They found ways to kind of resolve their differences on policy. And we expect really in the next half an hour that all to be formalized.
What can we expect? What do we know about her leadership style, Alistair, and how will it be very different from previous prime ministers?
Well, I mean, it's obviously historic because she will be the first female prime minister. If she survives a vote tomorrow, I mean, there is a process where Parliament will choose the next prime minister. We fully expect her to win that. We know that she admires Margaret Thatcher of the UK. She wants to be a strong leader. She's a social conservative, but she also believes in strong economic measures to try and improve Japan's growth rate. She's talked about government spending. She's been critical in the past of the Bank of Japan for its interest rate hikes. Or at least the course that it's planning to take to raise interest rates. So we're expecting her to be look for ways to kind of expand the economic support measures. This is, of course, a coalition. She will have to negotiate with the coalition party. But I think she's looking to start with a bang, and we'll probably hear more from her tomorrow evening.
Alistair, thanks so much. Alistair Gale there, our Japan economy and government reporter in Tokyo. Coming up, cashing in, Kering sells its beauty division to L'Oréal as part of a strategic shift. Details next, and this is Bloomberg.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Well, Kering has agreed to sell its beauty division to L'Oréal in a deal worth €4 billion. It's the first major strategic move by Kering's new chief executive, Luca De Meo. Well, joining us now is Andrea Felstead, columnist for Bloomberg Opinion. Andrea, if you're in the know, you would have known or expected that something big like this could happen. But a lot of people are saying $5 billion. Why didn't they do it earlier? Is this just a new chief executive getting in charge and kind of marking his point?
Yes, exactly. Kering wanted to build in beauty. It bought Crude. It paid a very high amount for Crude a couple of years ago. But the reason for that was to build a platform so that it could gradually take its beauty businesses, the biggest one is Gucci, in-house, and have its own beauty business in the same way as it's done with eyewear. So Luca de Mayo has come in and completely reversed that strategy.
So what can we expect from Luca de Mayo? I mean, again, this is a car man that's now in charge of Kering, but he's bold. He's going in like fast and furious.
He is, and I think that's, I mean, obviously he's struck this deal. Kering has around 9 billion euros of debt. He needs to do something to bring the debt down. But I think there's a bit of a message here that he is going to come in, make quick actions. When you're a luxury brand that builds for the long term, and a great reason for success in luxury is being able to build and see into the future, if someone's going to come in and make quite sort of knee-jerk decisions, that's also a bit of a concern.
Yeah, I love that. Okay, Andrea, thank you so much. I look forward to your column. Andrea has the best columns because it's brilliant, but also usually funny. Bloomberg's opinion columnist Andrea Felstedt, who focuses, of course, on a lot of the luxury companies. Now, staying on the topic of M&A, once you've acquired a company, how do you ensure that it is a success? Well, my next guest has spent his career taking over companies and turning them around. His latest book provides insights into just how he did it and how you can do it too. Well, Charles Skinner's Buy, Run, Build, the guide to entrepreneurship through acquisition is out, and I'm pleased to say that Charles joins me now in the studio. Charles, thank you so much for joining us. It's a brilliant book because actually it reads like not a self-help, but it's quick. It's quick and it gets to the point and there's no faff. And so once you read it, you kind of say, oh yeah, I should have done that better. What's the one thing that you wish you knew now, or you wish you knew 30 years ago that you know now?
I think the importance of working closely with people, getting people on board is absolutely critical to this sort of process. But I think it's also, the book is primarily just to address something which I felt was a gap, which is that people think of entrepreneurs like Steve Jobs or the Hewlett-Packard guys, and if you want to set up a business, if you want to be an entrepreneur, you've got to start from nothing. Starting from nothing is really, really tough. Your chances of success are very low, you're not going to get paid, a lot of things are going wrong. So actually it sort of struck me, one of the biggest courses at Harvard now is entrepreneurship through acquisition. And I didn't feel anybody had addressed that. And what I like to suggest to people is that buying a £2 or £3 million business, and I explain in the book how you can buy it for nothing, that's the way to get going. And if you really want to run a company, be the boss, it's a much better way than sitting at your kitchen table going, what can I do? Will anybody buy it?
But Charles, is it different? We were just talking about, the new Kering boss. I mean, this is a man that, had a vision, and certainly I met him a couple of times. Like he's always known what he wanted, right? No matter what sector. Is it different being a leader of a listed big company or in management at like a junior level or like mid-management to be an entrepreneur?
I think management is the same in whether it's a family company, whether it's big, whether it's small. Clearly, when you get to very large companies, it becomes quite a lot of matrix management and a lot of stuff, which is why I've tended to specialise in small companies. Once it gets towards $1 billion of value, I'm not the sort of person to run that sort of business. So it's about realising those things. I think the other theme in the book is that I've been running quoted companies for 30 years, taking very small ones to quite larger, and I had a disaster. And that disaster in 8 months taught me far more than I could have learned. We have a sign on our...
What did you learn?
I learned what my weaknesses were, where my blind spots were. When something gets into trouble, you've got to really expect everything to get worse and worse. You realise that people can be great people. When there's trouble around, you've got to look after them because everybody's going to behave pretty badly. So that was actually the genesis of this book. I started writing it to work out what I'd done so wrong in 2007. And those lessons, when I started writing the book in 2008, to go, why was I so useless? So,
Charles, do you think you could have saved the company? Or done it differently?
Absolutely. I mean, I'm a bridge player, and I described it. I was dealt an abysmal hand, and I played it appallingly. And from that, the next company I got involved with was a small quoted company worth 1 or 2 million, and it got to a market cap 500, 600 million, primarily through acquisition. And I'm a sort of buy and build person. But it's interesting how I'm very thrilled that the son of a friend of mine He and a partner, one worked at Goldman Sachs, the other worked in private equity. And I had a long chat with them about life. Now they're running their own business, which is a vehicle leasing business in the Northwest, and doing brilliantly. Classic retirement sale. I'm really excited about how you can rejuvenate companies, particularly at the moment when it's actually quite tough for sort of older business owners. They're getting hit with taxes everywhere, and you need energy to run those things.
But it also seems, and I have a lot of CEOs on the show, that, you know, you get told, well, it's a legacy company. I mean, even if you make toothpaste that everybody needs every day, it's still a legacy company. So it's only the sexy stuff that's AI. Like, actually, how do you stick up for companies that we use day to day, or things that we need as humans?
Okay, I've worked in tool hire, laundries. I store bits of paper in cardboard
real
boxes.
Stuff, Charles.
Oh, God, yeah. I'm UK's biggest office removal firm. Yeah. I mean, I got involved in when we had the box business, and then I ended up with the removal business because I bought the removal business because it had a lot of boxes in storage. And then I was poking around the back of one of their sites, as I normally do. I let everybody get on with it, but I like to sniff around. I saw all this old IT equipment, and I thought, how does this work? So then, a year later, we bought a little, very small, 2 million turnover business, IT recycling. We sat on it for 2 years to sort of go, how does this market work? And now we're the biggest IT recycler in the UK. It's practical stuff. It's all the same things. People are a lot nicer in blue-collar businesses than they are.
Is there a danger that people just want that look too much into the new technology?
I think that there is a huge place for new technology, and certainly a lot of the people who I'm encouraging to buy into old-fashioned businesses are up to speed on AI, things like this, and that can rejuvenate them. But the technology sector is not the only sector in which you can take something, as I've done in the past, very small, grow it to something large, partly through acquisition, become national champions, and have a lot of fun with less risk than you might do from trying to set up your own app or whatever.
Charles, I mean, you started by saying it's always the people. Everybody always says it's the people. So what have you learned about dealing with people? Do you have to get them on board from the start? Is it convincing?
In Buy, Run, Build in the book, which takes you through all these things, one of the things is when you go into a business that is in trouble, there are 3 types of people. The first type are good operators, and they're going, hey, this isn't working around here. Where do I go to next? The second lot are a real pain. They say, Charles, why? This is wrong. What are you going to do about it? It's a nightmare. Yeah. The third group of people, perfectly sensible, who go, I turn up, I get paid, I'll do my job. The people you really want are in that second group. The ones who are a pain, who are going, Charles, come on, what are you doing? You're doing it wrong. Those people care. They care about themselves, they care about the business, they want to get it right. So when you're going into a business which is in trouble, look for those people. The other 2 groups, nothing wrong with them, but look for those people, because they're the people who are going to be in the trenches with you.
Charles, we just have a little bit of breaking news. So we understand that Amazon Web Services has suffered widespread disruption today, Monday morning, that affected services on other platforms. In a X-post, formerly known as Twitter, Robinhood said, for example, it's investigating the issue as the AWS outage impacts its services. We understand that multiple other platforms, Snapchat, Roblox, Fortnite, Verizon, are also experiencing issues. That's according to Down Detector. I mean, in a day, since you've been on air, I've had like 55 breaking news.
I'm so admiring how you do your job.
But as a CEO or an entrepreneur, how do you cut the noise away from what you need to do day to day?
I think I'm very keen on locking power and responsibility together and driving it as far down the organisation as possible. So my divisional managing directors, I expect them to deal with everything. Right. I have time. I like to go round all of our sites, which is a waste of everybody's time apart from mine. I like to have space and time so that when something blows up, actually I'm around. That's how I approach it. And then you know that if all of a sudden your biggest customer tells you that they're pushing off, so I've actually got time to go, how the hell did that happen? And get stuck in. So I always think a CEO's got to have time.
So you can't micromanage?
I can't. And I need people around me who are really good. And absolutely, I push everything down to everybody else, but always give them responsibility, but never forget the power. Give them power. Get it down to the people in the workforce. They will do amazing things if you let people get on for it. Just make sure you lock power and responsibility without power is dreadful, and power of responsibility, we know. That was actually what the press barons were called, I think. You know, the harlot's prerogative.
Charles, thank you so much. Charles Skinner, their CEO of Restore and author of Buy, Run, Build. Up next, we have Bloomberg Brief. Again, watch out for the story with Amazon Web Services saying they suffered widespread disruption this Monday morning. Then we have quite a lot going on, of course, in the markets. We talk about credit. And a reminder, we forget, but actually we're still in U.S. government shutdown. It's week 4. This is Bloomberg.
Southeast Asia is at a crossroads. In a global
So the problem originates from one of Amazon or AWS's oldest legacy data centers, North Virginia on the East Coast, US East 1. And you're absolutely right that AWS accounts for a third of the internet, put it that way in cloud computing context. But this specific data center is the backbone. They have something called DynamoDB, which you can think of as a large filing cabinet or database. So if you are an app or platform or website that relies on AWS, it's likely your data is in that DynamoDB database. They basically had a traffic jam, DNS errors, which meant that even if the database was running, those platforms couldn't communicate with it. And so the stock's modestly higher, right, 0.4%. But the way to look at it is that this happened between, say, 2 or 3 a.m. Eastern time, midnight here on the West Coast, and lots of technology companies will be waking up to the ramifications of it, which is delays, other sort of slow performance issues while it still gets resolved. But the general outage is over. That's right.
And from what I understand, Ed, and maybe you know more about this was not any kind of an attack, although it does leave the opening now for attackers if they wish to try to use this opportunity, right?
Yeah, there's certainly some vulnerability, and it's a black eye for AWS, put it that way. We're talking about the Amazon stock being up 0.4%. The market is calm, but the way to look at it is AWS is the majority of operating income. So reputationally for Amazon, it's notable. The very simple explanation on a DNS error is that the DNS converts things that you and I could read, website addresses, into IP addresses. And that's why the point about DynamoDB is important. Even if the database with all of these platforms' data was up and running, those companies for a short period of time had no way to communicate with them, which means retrieving data is very difficult. That is the basis of the internet, retrieving data and putting it in another place. So operationally, it had big ramifications globally. For example, in the UK, HMRC was impacted. Some trading-based platforms like Robinhood, Coinbase have been impacted. That impacts people's abilities to transact. That now seems to be over.
Surely Amazon will say more throughout the day. Our thanks to you, the always wonderful Bloomberg Tech co-host, Ed Ludlow. On the earnings front, Tesla kicks off this quarter for the Magnificent Seven on Wednesday. We'll also get results from Netflix, Ford, GM and more. Bloomberg Markets correspondent Nora Melinda is here now with a preview. So what are the main themes investors will be looking for as automakers in particular, and also Intel reports?
Almost 90 companies reporting this week, but of course in focus, as you're mentioning, are automakers this week. We're looking at GM, we're looking at Tesla, we're also got Ford coming up as well, and they're all expected to report record EV sales for the month of September here. But really what is on the mind of investors in terms of main themes is rare earth materials. Of course, there's been that conversation going back and forth between President Trump and China, just what the relationship is like there. So that's really going to be what a lot of investors are looking for out of these reports, in addition to tariffs, of course. Those are the two main themes that I would say that a lot of Wall Street has their eyes on as it pertains to these automakers here.
Yeah, it's fascinating, right? I mean, investors are going to be wanting answers when executives don't even have the answers themselves. They're probably looking for contingency plans just to offer up to investors. What about Netflix, Nora? Because we have had some developments on that front, and also it pertains to the U.S. consumer. Everybody's going to be watching.
Well, it should be a good experience here, a good quarter here for Netflix as we're taking an eye and a look deeper into what the metrics are right now. But right now, it seems as though there should be potentially a better than expected margin gains coming out for this quarter. We're seeing people who are seeing a lot of viewership and uptick in the U.S. in particular here. So it seems as though it should be a relatively strong quarter for Netflix. If you look at the stock, it's up about 34% year to date. So it seems as though Wall Street expects more gains to come after this report.
What are you binging on Netflix at the moment?
Lots to keep an eye on, honestly. What is there? There's this one little cartoon. I can't even remember the name of it right now. But there are a lot of shows to keep an eye on.
Too many. Thank goodness the holidays are coming up next month. Bloomberg's Nora Melinda, thank you so much. Turning to Washington, trade talks between the U.S. and China will resume later this week in Malaysia. President Trump listing his top demands in the negotiations.
One of the things I want is China's going to buy soybeans. I want China to stop with the fentanyl. Very, normal things. I don't want them to play the rare earth game with us.
Bloomberg Washington correspondent Tyler Kendall joins us now from the nation's capital. So, Tyler, to listen to President Trump there, you wouldn't have imagined anything unusual went on last week, and yet it did. Can China look past all the mudslinging and engage in regular discussions this week?
Well, Lonnie, that seems to be the question, but we have gotten some positive indications. Take, for example, last week on the sidelines of the IMF meetings here in Washington, people familiar tell us that the Chinese delegation actually worked to tamp down some concerns of global partners over their newly unveiled curbs when it comes to critical and rare earth minerals, saying that the intention here was not to disrupt any normal trade flows. As of now, it does appear that these tracks are on talk. We know the Treasury Secretary Scott Bessent met with his trade counterpart virtually on Friday and then confirmed that they will meet face-to-face this week in Malaysia. And both sides really are re-engaging because they're up against this rather firm and key deadline. That's November 10th for the broader trade truce. And we heard what felt like a softening in President Trump's rhetoric, saying that ultimately there is still this threat of that 100% levy on the table, but that he doesn't think rates that high are ultimately sustainable. Both sides have mounting pressure here, but I'll put one main one on your radar. None of those topics that we heard President Trump outline are considered to be unusual. We knew that these were going to be the topics on the table, but soybeans in particular are going to keep coming up, Vani, because we are starting to hear from U.S. farmers that they are running out of storage for this excess in supply since China has not imported any U.S. soybeans so far this season. Just for quick context here, China imported $12.6 billion worth of U.S. soybeans last year alone.
Yeah, and for more context, Tyler, soybean futures rising for a third consecutive session in Chicago today on speculation that this meeting will, get some renewed agricultural trade between the two countries. That said, will a soybean deal be enough, or does she have to give something on rare earths in order to avoid 100% plus tariffs?
Right. So as President Trump outlined, rare earths really have been at the center of these discussions. But we're going to have to see where it goes from here, because we know China in particular is looking for the U.S. to loosen some of its own curbs that it's put on advanced semiconductor chips. As one example, we also know that China is upset at these new fees that are being put on Chinese ships that are docked at American ports. So it's going to be a negotiation that continues to evolve here, and something that we're going to have to watch really closely. Our analysts point to fentanyl, that third topic that President Trump mentioned, as perhaps the lowest hanging fruit here. We know that there has been at least some progress when it comes to fentanyl. 20% of the tariffs that are currently in place on China are imposed over this concern. But really, it does seem to be coming back to those agricultural purchases. Vani, I can tell you that a senior administration official tells me that the White House is currently looking at other export markets where U.S. soybeans can go, also other uses for U.S. soybeans as a sort of safety net in case these talks do not yield the sort of results that U.S. farmers are looking for.
Tyler, thank you so much. That is Bloomberg's Tyler Kendall. And let's get a check now on futures and markets more broadly, because we are seeing futures pointed higher. A lot of relief in this equity market this morning, but I do want to point to treasuries. The 10-year yield was firmly above 4% once again today, but now it is below 3.99. So the 10-year yield is lower as treasuries get a bid. No doubt shutdown being in day 20 is not helping this market. The VIX also came down, but it's still above 20. And I want to point to gold as well, because we're seeing gold announced at 43.21. So it's definitely off its record, but we're not flat today. We're still 1.6% higher on gold. Bitcoin has woken up too. It is just below 111,000 a coin, and so rising from its lows of the weekend. Let's get a look now at some other movers on our radar. Cleveland-Cliffs shares jumping on a recovery in demand for steel made in the U.S. due to tariffs. Some rare earth and critical mineral stocks are climbing. This after William Blair analyst Neil Dingman initiated the companies at outperform. And crypto-linked stocks, of course, are rising alongside Bitcoin and gold today. Just mentioning Strategy, Robinhood, Coinbase, all higher Mara Holdings as well. Coming up, Apple nearing a record high following an upgrade from Loop Capital. We'll discuss the growing optimism around iPhone demand next. This is Bloomberg Open Interest. Now to high interest, to look at what's making headlines around the world. The The Louvre was shut yesterday after a gang pulled off a lightning-fast jewellery heist, cutting through windows with angle grinders and all sorts of power tools and stealing 8 priceless pieces, including tiaras and necklaces once worn by French royalty. One item, a diamond and emerald crown worn by Empress Eugénie, was recovered as police hunted the thieves. Kering is selling its beauty division, including House of Creed, to L'Oreal for $4.7 billion, scrapping plans to build out its own cosmetics arm. The two will co-develop a perfume for Gucci, Bottega Veneta and Balenciaga. The tie-up with L'Oreal is the first big move under CEO Luca de Meo, who took over last month. Kering is confronting a slump in Chinese demand and the threat of higher US tariffs. Carlyle CEO Harvey Schwartz says market volatility is on his, quote, worry list, but he sees no signs of real deterioration just yet. He spoke with Bloomberg's Danny Berger at the Formula One Grand Prix in Austin over the weekend.
That data suggests that companies are growing, employment is steady, inflation's a little sticky, but there's nothing in the immediate horizon that suggests that, as you would say, things are crumbling. Having said that, late cycle, it should be on a worry list.
Turning to tech now, Apple shares are on track to open near record levels today. This helped by Loop Capital upgrading the stock to buy from hold, citing positive iPhone demand trends. Joining us now is Ryan Vlastelica, Bloomberg Equities reporter. So Ryan, we did get this information that the first 10 days of sales were particularly good for the iPhone 17, not just in the US, but in China. Give us more details.
Yeah, good morning. Thank you for having me. So it seems like after a period of time where people were very kind of underwhelmed by the pace of iPhone 17 sales, especially relative to expectations for a real super cycle, it does seem like people are becoming more optimistic. Even though they don't have the kind of AI features that were touted last year, it does seem like consumers are buying the new iPhone. Maybe this just reflects how long people have been holding on to their previous version, but it does seem like there are stronger than expected sales. And like you said, that did lead Loop Capital to upgrade the stock to buy this morning.
Now, why all of a sudden are customers thinking about upgrading, even some that haven't since the pandemic, when next year we'll get a flip phone and it seems like next year is maybe the bigger upgrade cycle potentially?
Well, I know earlier this year there was some speculation that people were buying to get ahead of the tariff. So there could be some of that. There could just be the fact that people really have been going longer and longer without upgrading. Maybe people just feel like the latest iPhones, even though it is seen as mostly having some incremental improvements to battery, camera life, memory, things like that, this is enough for them to sort of upgrade, especially if there are concerns about tariffs. I'd say that's sort of the main takeaway.
Well, we also know that, we're waiting for the Apple Intelligence rollout in China in particular, but it doesn't seem to have deterred those shoppers in China.
Right. I think a lot of the Apple Intelligence features will still be available. It might just take a software update or an OS upgrade in order to get them, but it doesn't seem like you will be barred from using them even if you upgrade right now. So I'm not sure that is too much of a limitation for people.
This was very serious for Apple. It needed this iPhone 17 to work and to sell, right? It's half of its revenue, the iPhone. It has to keep coming up with better and better refreshes for this iPhone. Can it continue to do that, Ryan?
Well, that is really the key question here. Apple's sales growth or revenue growth has been a lot slower than what we've seen at the other mega cap tech companies. People are really hoping to see some kind of big upgrade cycle. That's why there was so much optimism surrounding Apple Intelligence when it was first announced. Obviously, that didn't really play out as people expected. There were a lot of delays. Some programs were canceled or paused. We are still waiting for them to have a more pronounced shadow in the industry of AI. But in the meantime, it does seem like people continue to buy. They're upgrading more. Positive signals, at least for the near term.
All right, Ryan, thank you so much. That is Bloomberg's Ryan Vlastelica. A check on futures now, just about 30 minutes before the opening bell. We see S&P futures pointed to a gain of about 0.5%. NASDAQ futures up 0.6%. And I do want to point out that we had a very nice up week last week in spite of everything. We had the NASDAQ 100 up 2.5%. Plus, this is a big earnings week. Not as big as next week, but we have nearly 90 companies reporting this week. So there's a lot of enthusiasm this Monday. Coming up, Morgan Stanley's Andrew Sliman says this bull market is here to stay if it manages to reach a 4th year. This is Bloomberg Open Interest. Bad news, good news for companies reporting earnings since Trump's Liberation Day on April 2nd. Torsten Slok of Apollo sent this chart to clients, writing, quote, stock prices of companies with negative earnings have in recent months outperformed stock prices of companies with positive earnings. Let's bring in Andrew Simmons, Senior Portfolio Manager at Morgan Stanley Investment Management. So, Andrew, I know you're bullish, but you have to answer me this. Is it concerning when growth stocks and companies without earnings are far outperforming those with earnings for this long of a period? Sure, there's always going to be a few, but has it gone overboard?
I feel like you teed me up. It's my number one worry. My number one worry is that the signs of late cycle in a bull market is when speculation really heats up. And you see in that chart, non-profitable technology stocks, it has been the best thing to invest in since the low. Low quality, money-losing companies, and that is never a good sign of health for the market. There's certainly reason to be optimistic, but that is a sign of late cycle.
Okay, but at the same time, you are waiting to see what happens with this bull market because you think it can continue.
Well, I mean, it's just the data suggests if you get to the fourth year of a bull market, which means you don't have a bear market decline of over 20%, which we haven't. We've had 7 of those since the S&P started, and in all 4 years, the market has been up. We've never had a down year. And you look, I can flip around and give you the positive, compelling arguments. The Fed is turning increasingly friendly. Don't fight the Fed is rule 1 of the handbook. Number 2 is you have fiscal policy. You have tax release coming early next year. So you have fiscal policy turning friendly. And I'm amazed at sentiment after 3 years of a very strong market. Sentiment, which follows price, is not higher. So it lines up that the fourth year could be positive again. But as we started the segment, what worries me is the speculative stocks seem to be leading the charge.
Well, it's funny because you just used this unusual monetary fiscal mix to make maybe the positive case, but Paul Tudor Jones the other week literally said, look, it's so unusual that it's really, really scary. So can everything coexist, Andrew? Your concerns about, companies with negative earnings alongside your, happiness, maybe perhaps with this easier policy. How does it all coexist without something going wrong somewhere?
Well, something will go wrong. The question is when, and I think those having both sides, fiscal and monetary, I think it will cause the heating of the market just to, ratchet up, and we could get closer to the end of the bull market. But you're going to see these money-losing stocks just continue to charge forward, and that's what's really happened. Every time they take a step backwards, which I think is good news, they come roaring back. So it's not the Mag 7, it's not AI, it's the more speculative stocks. That's what is attracting investors' attention. And if you have this liquidity coming, I think that's where the money's going to go.
If investors must be pulled in, as you suggest, Andrew, what do you do with the money that you're pulling in? Do you leave it on the sidelines and wait for another opportunity? Or do you just shift it into things like defense and other types of tech, for example?
Well, I think you were coming up to earnings season, and I think earnings season is going to remind people, hey, don't forget about these, the very large cap tech stocks. They're generating a lot of cash flow. They're doing very well. So I think the fundamental backdrop is very good for lots of industries. We saw the banks largely report very good numbers. So, I wouldn't ignore most of the industries. I think it creates an opportunity to find the industries where they're performing well. And, as a portfolio manager, I just don't hear a lot of weakness. A lot of companies haven't told me things aren't great. So I think earnings season is going to be good, and that's a good opportunity to find areas. It
all right. We are going to continue this conversation.
It doesn't have to be in these super speculative stocks.
No, it does not. All right, we'll ask you whereabouts in a moment. Andrew Simmons is staying with me through the opening bell. And just to check on futures as we approach that opening bell now, well, we're in the green once again. We had our up days and down days last week, but we finished in the green for really all the major indices, including the KBW Bank Index, for example, which came roaring back. So all those credit jitters seem to be put to the side for now. Moments away from the start of trading, this is Bloomberg Open Interest. I'm Bonnie Quinn, stepping in for Matt Miller and Danny Berger. So let's take a look at where we're about to flip over from futures to actual live trading. We are pointed higher. It looks like it might start off a positive Monday, at least, with S&P, NASDAQ and Russell 2000 futures trying to put last week behind us. We'll even get some data this week, some CPI data from the government. So ringing the bell at the NASDAQ, YD Bio, but look at the NYSE because we have the winner of a young scientist competition from California, in fact, Kevin Tang, ringing with 3M. It was their young scientist competition, and apparently he developed something that helps detect falls for older people. So that young man having a bright career ahead of him. All right, let's look at some stocks to watch. Apple getting upgraded to a buy at Loop on positive iPhone demand trends. First 10 days were up 14% over last year in the US and in China, according to Counterpoint Research. Apple's iPhone 17 series outstripping then the 16. So that stock up 2.1%. It should be noted, though, that it is an up session. Amazon, though, it had a problem this morning. Web Services said its cloud service had recovered after a disruption degraded operations for customers. Everyone from government agencies to financial trading platforms. That stock recovering from being lower in the pre-market, though, and up about 0.4%. All right, still with us, Andrew Simmons, Senior Portfolio Manager at Morgan Stanley Investment Management. So, Andrew, 90 companies or so reporting this week, another 175 next week. You said this is the quarter where it's time to pick, time to get out of your winners maybe and pick some new winners. Where should we be looking?
Well, actually, the winners haven't really done that well lately. The market seems to be fixated on the more speculative stocks and has left a lot of companies behind. I think so. The setup going into earnings is quite good. In that I always get nervous as a portfolio manager if I have stocks that are red hot going into earnings season because then the chances are they don't beat the number and they go down, but that's not the case this time. So I think the opportunity set is great, whether it's large cap tech. These stocks have kind of lagged. I think that's intriguing. The big banks have reported, but a lot of the wealth management asset managers haven't reported yet. I think they're going to have good quarters. Industrials as well. And, look, I think one of the risks, the only risk that I see is that the AI trade is capturing more than just tech and utilities, other areas, and just be wary that the correlation of the AI trade is spreading out beyond just tech. And that might be good, but make sure you understand that you have correlated AI plays.
Yeah, it's a good point. And how much longer can we see these deal announcements? Also, what about CapEx plans? I mean, do companies need to beat and raise those now as well every quarter? Or at some point, will investors be happier if companies say, look, we have our CapEx plans in place, they're not changing for now?
That is a tough question, and I don't know the answer to it. What I do know is that this is not like the late 90s where we're laying dark fiber with the hope that the demand would come. Every time I turn around, listen to anyone who's knowledgeable about the industry, they say the demand is there for these data centers. They full up as soon as they build them. So we haven't seen a slowdown in demand. Until you see that, I don't think CapEx expectations are going to come down, and that's all very, very bullish for the industry. Look, yeah, ultimately it will get inflated too much. But one of the things that does give me comfort, Vonnie, is, AI is a cost savings tool. It enhances productivity. I couldn't figure out how to fix my treadmill yesterday. And who do I go to? An AI chatbot. So, it's replacing people, sadly, but that's going to help profitability. And I think CEOs are better. Let's face it, it's harder to grow revenue than cut costs. And this is a cost cutting. So I'm in the belief that we're still in the early stages of the AI enhancements.
Yeah. You mentioned financials a few minutes ago. Are they oversold, Andrew? Because sure, we had an up week last week in spite of everything, but year to date, I mean, the BKX might be up 13% or so, but the broader ETF, that mirrors all of the companies in the S&P 500, financial companies, that's down 2% year to date.
Well, I mean, it's a very fair question. I mean, the issue is, were they two isolated credit cases yesterday, or is this, as Jamie Dimon said, is cockroaches? That's tough, and I think you have to be very cautious because you just don't know. And to step in and buy, whether it's the regional banks or the alternatives have been hit, they might be great trades. I think for me, that's just too much risk because we just don't know the answer. Will it be, will it grow to other companies or not? So I'd stick with the big banks that have reported great numbers, or some of the areas in financials that are less exposed.
So you have more risk appetite for some of these tech companies than you do for the regional financials. That's really fascinating. What about gold? Andrew, Alexander Altman from Barclays last week telling Surveillance that it was actually, if anything was in a bubble, it was gold that was in a bubble. Can you comment on gold at almost records?
Yeah, I mean, I would say Vani, I go around and speak at these conferences, and the questions I've been getting for the last decade was, well, when is the dollar going to lose its reserve status? And I used to say to people, what, are people going to sell dollars to buy the euro, or are they going to sell dollars to buy the Chinese yuan? I just don't see that happening. And the mistake I made was I think other central banks are selling dollars and buying gold. I never thought gold would, take the mantle. So is it a bubble? Yeah, but if foreign central banks are reducing their treasury holdings and buying gold, then I think it can continue.
Andrew, how much are you going to be watching the actual official data that we get later in the week, CPI data, for signs about the consumer? Are you concerned at all about the U.S. consumer?
I'm not, because I think it is the risk is only this period of time until these tax refunds start coming early next year. So maybe it's a slowdown, but I doubt it, because payroll, you got to remember, yes, payroll growth is not growing, but that doesn't surprise me because we're in a new wave of technology. And if you look back to the late 90s, Vani, there were plenty of negative payroll prints when when the internet was rolled out. That's not that unusual. But the consumer has a job. Maybe there's not a lot of job growth, but the unemployment is not growing. So I think it's going to be a good Christmas, and then we're going to roll into next year and these tax refunds going. Going back to our original conversation, I'm more worried about the speculative bubble growing than some bad economic news.
All right, Andrew, thank you so much. We'll have you to guide us through it if anything of that import happens. Anyway, that is Morgan Stanley's Andrew Sliman. Let's get a check on the stock market right now, because we started positive and we'll see if we continue to, but we certainly have 452 stocks higher and less than 50 stocks lower as we kick off a week that actually has earnings, that actually has data, and even Tesla earnings. We're going to hear from the car maker, the EV maker, a little bit later in the week. So the Mag 7 earnings will be kicked off. And then you have Apple, of course, the best performer, about to overtake Microsoft as a second most valuable company. Amazon recovering, but this is a broad tech rally. As you can see here, we had Andrew Sliman give us the reasons why. And clearly the market is in agreement once again today. Let's take a look at the broader macro picture too, because for the moment, it looks like the tone is set. As you can see, all of the major sub-indices, except for the Consumer Staples Index, and that really is trying to go negative. It's basically flat. Energy is powering us higher. Utilities, industrials, materials, everything you can think of, from defensive to growth companies to financials, are roaring back today. So we'll see if it holds throughout the session and what it portends for the rest of the week. So coming up, Tesla investors looking for details about demand for its new models. We'll be looking at that story, plus risks from its rare earth supply chain from China and how it's all going to meld together into earnings season. This is Bloomberg Open Interest. Let's get a check on some stocks now with our top calls. Some of the analyst action in focus this morning. And first up, Darden Restaurants. It's getting an upgrade to a buy at Goldman Sachs. The firm says Darden is gaining share thanks to its smaller exposure to lower income consumers and strong value positioning at Olive Garden and Longhorn. Next up, Marvell Technologies is getting cut at Barclays. The firm says Marvell's custom chip business just isn't shaping up as strongly as hoped, and it also sees Broadcom's gains in the custom chip industry as a longer-term threat. Finally, Apple is getting upgraded to a buy at Loop Capital. The firm is also raising its price target to a street high now of $315. The analyst says Apple is entering a, quote, long-anticipated adoption cycle that could drive iPhone growth through 2027, fueled by refresh demand and new design momentum. Joining me now to continue discussing this, Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh. And in San Francisco, we have Ed Ludlow, Bloomberg Tech co-host. Mandeep, I want to ask you first about the refresh cycle, because apparently some people that hadn't refreshed since the pandemic decided now was the time, and not next year when we're getting all these exciting flip phones from Apple and all sorts of other things.
Yeah, I mean, typically, people tend to keep their iPhones for 4 to 5 years, some even longer. So it doesn't surprise me that you are getting that sort of bump, now that they have launched a new version of the iPhone. I don't think it's going to be a big refresh cycle as everyone is anticipating, with AI, and there will be that big moment when Apple will have a much bigger anticipated refresh cycle. But that being said, there's a lot for them to do on the large language model front, and that's where I feel they still have to show that, the device is a lot better than the regular upgrades where you have a better chip and a better battery.
Yeah, I'm sure Apple wants to get to the point, Ed Ludlow, where everyone is upgrading every year, right? That would be the ideal, but they're not. And in China, there isn't even Apple Intelligence out yet, but still, they got Chinese consumers to buy.
Yeah, it's why the calendar matters. So when we had the big splashy event in Cupertino at Apple Park, you first look at to what date does the new generation of handset go on sale, where does it go on sale, and will those units be counted in the quarter? Mandeep is completely right. Of course he is. This is Mandeep Singh of Bloomberg Intelligence. But, cycles are greater than a quarter. You don't get a lot of visibility into what happens in a 3-month period. The one thing we will get more on, because Apple has communicated about it, is the impact of tariffs and supply chain, right? Because all Apple and any other of the Mag 7 names can do is tell us in that moment that they reported their earnings for the period, the information they had available to them, this is the charge or hit they do or don't see from tariffs. And so that will be a factor irrespective of whether they sold handsets just here in America or elsewhere.
Will tariffs negatively impact Apple to a substantial degree, Mandeep?
It will, and the other big risk is there may be a pull forward going on since first quarter. We didn't see it in 2Q results. I'm expecting, it will get reflected in 3Q or probably will impact their fourth quarter guide, because everyone is expecting tariffs to raise the prices for the iPhone. So imagine if you're a consumer, you're saying, I should better buy it now. And so to my mind, there is a pull forward element in Apple's holiday quarter, and that's where everyone will be focused.
For sure. And we saw that with EVs as well because of policy. I want to ask you about something that happened this morning. When I came in, AWS was experiencing problems from its customers getting all sorts of notifications that apps were down, even its own Alexa and so on. What happened, and is it something we should be really worried about?
Outages in general are not that big of a deal. We have outages with YouTube, and anytime you have apps this popular, like AWS is hosting pretty much a lot of the popular apps, so outages can happen. My worry is more, it has to do with the AI code that is being written now for a lot of these systems. They keep calling out 35-40% is AI code. Was it one of the reasons for the outage? Because that puts doubts in minds of people. Okay, is AI, yes, it's helping you boost productivity, but is it incorporating bugs that could result in outages? So that I'm curious about.
Okay, that's terrifying, and I hadn't actually thought of that. Ed Ludlow, are you hearing anything about those kinds of concerns?
No, again, just hearing that it's a DNS error. In other words, the database that was found to have glitch or an issue couldn't communicate with the outside world. So all the apps and platforms that rely on DynamoDB had issues with IP address conversion. That's quite technical, but that's the stated reason that they're giving, and it's back online. But to Mandeep's point, one of the companies whose CEOs was up overnight posting on social media was Perplexity's CEO. So, when you have outages to services like that, it speaks to Mandeep's concern.
Yeah, and I just want to mention that Robinhood is commenting on the service impacts in a post on X right now, saying services were impacted due to issues at AWS. And it's obviously not the only company, far, far, far from it. Let's move to Tesla, though, Ed, because we do get
Sure.
earnings this week, and that stock has had quite the volatile ride. Is all the bad news priced in, or could we hear more bad news in earnings?
In many ways, it's a really simple story. In the quarter they're about to report, Tesla delivered almost 500,000 vehicles, the best ever quarter on record. But we know that was largely because of the end of a federal tax credit in the United States. So consumers ran out and bought EVs before it was too late. The story longer term with Tesla is one about AI and robotics. We know that. And on November the 6th, shareholders will have their annual meeting where they'll vote on this Musk pay package. You would not expect that to directly come up during the course of Tesla's earnings and the earnings call. However, Tesla is one of the companies that allows retail shareholders to propose questions for the call and then vote them up. And so in that sense, it will be interesting to see if Tesla honors that commitment of taking questions through say.com and whether Musk and other executives are forced to answer the question about the pending vote on Elon Musk's compensation, but also XAI and the non-binding proposal that Tesla make an investment into XAI, which is kind of more analogous to that long-term story.
Yeah, so much to learn from this quarter's call. We also have Netflix reporting October 21st, which is tomorrow, Ed. What can we hear from Netflix? They've been on a tear.
Yeah, Netflix has said for a really long time, judge us by classic Wall Street top and bottom line financial metrics. And so they have around 300 million subscribers. They have a goal by the end of decade to get beyond 400 million. But the thing that they want to argue that they're showing, and this is a stock that's up 36%, 37% year to date, it rose 80% last year, is revenue growth and bottom line expansion because of all of the content wins that they've had. They've managed to do streaming in a much more profitable way. That's how they want to be judged. But in the limited previews we have of this name, that's also where Wall Street seems to be focusing its attention. But as always, like I'm watching Black Rabbit right now, Vonnie. I don't know what you got going on Netflix, but the content pipeline and their strategy for live events, for example, and sports is really important.
For sure. I'm catching up on The Punisher, so I'm really far behind, but I'm still enjoying myself. Mandeep, I want to ask you about Intel, because we've had a lot of news out of Intel and pertaining to Intel in the last quarter. What can they say on earnings season, you know, given that all of this is just new and really they can't have changed too much?
I mean, right now, everyone on the AI side is so excited about this ramp up of compute and, you know, consumption when it comes to generative AI. It feels like the traditional cloud server demand is also going to benefit from generative AI. And that's where Intel comes in because of their x86 architecture. So any news on that front would be a positive. And also on the fab side, I mean, we know the government is trying to push companies to use Intel fabs here onshore. So any news related to that will be a positive. So two catalysts, one on the traditional cloud infrastructure and the second one on the fab side.
Yeah, Ed, you talk to analysts constantly. What are they asking in terms of the government stake and what it means for this company and investors in this company going forward?
Yeah, Intel's ability to move faster by association. You know, at the center of this administration's AI policy is cutting red tape. Otherwise, it's not, you know, an issue of like where they get capital from. I don't think Pat Gelsinger and now Lip Bhutan had any issue on where they get capital from. What they have in common is they wanted to shore up the balance sheet. But with Intel, yeah, they need some I mean, it's always the same story. Mandeep's probably like nodding or rolling his eyes. I'm not sure which one. Intel just needs to go on television or on an earnings call and be like, here is a customer that we actually have for our lead edge process. And until they do that, there's always going to be some skepticism around the foundry part of their business where they don't have the products to compete on the AI accelerator or GPU side against NVIDIA, AMD, etc.
I mean, can they do that, Mandeep? The stock, and it wouldn't be hard to be up 90% from where this stock was at, but it's up 90% really in the last month.
And look at AMD. I mean, they've become a formidable, you know, number two when it comes to GPU side. To my mind, Intel has to really kind of strike those alliances that AMD ended up doing, you know, when it comes to OpenAI. So something like that with a large LLM provider would be, I think, exciting for investors.
All right. Mandeep, you promised to come back if it turns out that the large language models went amok because of the AWS problems this morning. Thanks to both of you. That is Bloomberg Tech's Ed Ludlow and Mandeep Singh of Bloomberg Intelligence. Well, it's not just Tesla. Ford and GM also reporting earnings this week. Do turn into Bloomberg surveillance tomorrow morning for an interview with the CFO of General Motors. That's Paul Jacobson. Tomorrow morning, 7:30 a.m. This is Bloomberg Open Interest. This is Bloomberg Open Interest. To check on stocks now, about 25 minutes into the trading session. It is a Monday trading session. We do get data later this week. And you can see we're off to a positive note. Risk on firmly once again today. Most stocks in the S&P 500 are higher. The index itself up by 0.75% after jumping more than 1.6% last week. The Nasdaq up 1% as well. The VIX coming down ever so slowly. It was above 20 for most of the morning. And the Russell up 1.7%. Gold is a little flat. It's, below its record. But the question is, after the Diwali season, are we still going to see demand for gold, or has it reached its peak? Let's just look at some of the stocks that are moving. Cleveland-Cliffs is a fascinating one because it came out with earnings. It missed on many metrics, but of course the steel tariffs helped. But now it's saying it's going to start exploring for rare earths. So very timely for Cleveland-Cliffs. That stock was up much more than that in the pre-market, but up 16.5% ain't bad for a post-earnings session. Bitcoin has woken up as well, and you've got Robinhood Markets, Coinbase, and all of the Bitcoin-related stocks higher. In fact, this even after Robinhood was affected by the AWS outage. Earlier this morning, Robinhood said it did affect users, but obviously that stock is higher. And Apple, of course, up almost 3% after we discovered the iPhone 17 sold 14% more in its first 10 days than the iPhone 16. Coming up next hour, Manulife, John Hancock's Emily Rowland. Plus, we talk cybersecurity with the Okta CEO. This is Bloomberg Open Interest. We're 30 minutes into the trading session. Welcome to Bloomberg Open Interest. I'm Bonnie Quinn. Matt Miller is off and Danny Berger is on assignment. And we are risk on once again today. It might be day 20 of a government shutdown. We might have all sorts of problems lurking, but it is earnings week. 90 companies almost reporting earnings this week, including one of the Mag 7. And certainly that's being reflected in today's trade. A bounce back from last week once again, and a VIX that is below 20. Coming up, earnings season ramping up, as I was saying, with Tesla, Netflix and Intel among almost 90 of them reporting. And a new round of US-China trade talks as President Trump lists rare earths, fentanyl and soybeans as top US priorities. Plus, investors are looking ahead to an inflation report delayed by the government shutdown. That data dropping, fingers crossed, on Friday. We begin with stocks kicking off the week on a positive note. I caught up with Andrew Sliman of Morgan Stanley earlier on his outlook.
My number one worry is that the signs of late cycle in a bull market is when speculation really heats up. Non-profitable technology stocks, it has been the best thing to invest in since the low. Low quality, money-losing companies, and that is never a good sign of health for the market. There's certainly reason to be optimistic, but that is a sign of late cycle.
Let's continue the conversation now with Emily Rowland, Manulife, John Hancock, Chief Investment Strategist. Emily, that's not a man that worries about too much, and yet he is worried about the quality, perhaps, of this rally, or at least some of the companies that are getting very much rewarded in this bull market. Are you concerned, and if so, about what?
We are. Bonnie, that was a great interview. I listened to it earlier, and Andrew pointed out one of the things we're watching every morning when we wake up. It's unprofitable stocks, meme stocks, crypto-related assets. Again, you're just seeing a sort of junk rally playing out as momentum and sentiment has really been the name of the game here. It's a key reason that we're allocating to higher quality stocks. We're fully invested, but we are drafting off the market right now. We don't want to be that lead race car. We want to be right behind, not chasing beta here, but still owning these high quality stocks that are producing earnings. The earnings engine in the United States is still on. So while we want to watch those more speculative corners of the market. We do want to be invested and, again, following the trends in those high quality pockets of the market.
So how do you do that, Emily, then, you know, with avoiding as much downside as possible? I mean, do you go for the names like NVIDIA and so on still? Do you look at particular ETFs, particular sub-indices of tech?
Yeah, so we are overweight technology. It is one of the highest quality parts of the market. And the way that we measure that is by looking at things like return on equity. We're seeing tech, communication services rank the highest there. But we also want to be mindful of not overpaying for earnings growth. So we look at things like the PEG ratio, the PE divided by earnings growth estimates. It basically tells you how much you're paying for future earnings growth. Areas like consumer discretionary do not rank well on that PEG ratio, so we're not overweight there, but we're seeing more attractive opportunities in areas like communication services, technology, even industrials and utilities, all of which have been really a play on AI, whether it's through power demand, whether it's through earnings. We're even seeing the gains in technology stocks helping financials. There's a symbiotic relationship there where, because tech earnings are helping power the economy, that in turn is, and the markets, that in turn is creating opportunities for financials, particularly on the wealth management side. So really that circular relationship there, really helping fuel positive results across various sectors.
You know, Emily, is there a danger that the more we talk about this, the more investors become skittish and it's a self-fulfilling prophecy that some kind of a liquidity event or something is created? I know that you say that what has always stopped momentum markets, at least in the last 25 years, is some kind of liquidity event from leverage. Yeah, I mean, we can't obviously foresee it, but where are you looking?
Yeah, that's the biggest challenge, Vani, and that's the number one question that we get from our clients right now. What can stop this bull market? And it's usually some over-levered player that gets uncovered in the face of higher rates. And, you know, we saw a few rumblings of that through some regional banks that had some issues last week. It seems to be idiosyncratic at this point. So we don't know where that next liquidity event is coming from. It is probably more in these more speculative corners of the market, which is a key reason that we're embracing high quality areas. We're also looking at bonds as a really attractive opportunity there. There is still income in bonds, but it could go away quickly if there were some type of concern that something more nefarious was going on with the economy. So we want to think about locking in those yields. We've been talking about income in bonds for years. The 10-year Treasury now hovering right around 4%, the 2-year breaking below 350. We want to think about engaging in that income before it vanishes over the next 6 to 12 months.
Yeah, I mean, where are we on the economy, Emily? Because, you know, it seems like we've stopped talking about any potential recession, or that we might be even coming out of a recession. We just don't know it yet, or there could be a rolling recession through the economy. I mean, that would be very concerning to have markets at these kinds of highs and think that there might be a recession ongoing.
Yeah, the economy's not great. When we think about it, you know, that Facebook relationship status button, it's complicated. That's the way that we look at the US economy right now. And just the data last week, we're all over the place. We saw the Empire Manufacturing Index beat at the same time where the Philly Fed Index fell. We look at things like the Fed's Beige Book, which was giving us mixed messages. The NFIB survey fell. We have to look right now at real-time or alternative sources of jobs data. We're looking at things like Indeed and Link Up as sources right now. Those are showing that job openings are falling. We're hearing from businesses that their hiring plans are slowing. So we're really getting a mixed message there. What we do know, though, back to income, is that we do have a steeper curve now, and there's an opportunity for roll down. And that's a key reason. Given this complicated backdrop for the economy, we want to think about leaning into that income that's available.
Emily, we're into day 20 of a government shutdown. This market doesn't seem to care. I mean, I guess, well, I guess it's not really affecting the economy, right? Anything that is delayed will, you know, hopefully come back to those who deserve it. And as for layoffs, we're not hearing about more and more and more layoffs as time goes on. So, and also it's not a debt ceiling issue, right? So is there anything to be concerned about with this government shutdown?
You know, Bonnie, the only thing that could be a little bit different this time is that there are actual layoffs going on. In prior periods of government shutdowns, like you mentioned, all those wages were restored. We are seeing government layoffs happening, though, in the backdrop. So, and that is against a labor market that has already been softening. So we're watching the jobs market, at least the data that we can get really closely here. We've seen negative jobs, in recent months. That is usually only happens during recessions. It's very unusual to see a negative jobs print outside of a recession. The only time that ever happened was 1996. So we want to be mindful of any further cracks forming in the labor market in light of this government shutdown. That may mean that the Fed may need to cut even more aggressively. They are probably underestimating, in our view, some of the weakness in the labor market right now. So that's really the key difference in our minds.
As Ian Lingen of BMO last week said, "Dear data, we miss you. Please come back." Continuing the relationship status topic there. Emily, thank you so much. That's Emily Rowland of Manulife John Hancock. So let's get a check on these markets as we see risk on Monday. We have the S&P 500 up 0.8%, the Nasdaq 100 extending its gain there to 1.1%. And we have that 10-year yield back below 4%. So perhaps just a little bit of a divergence once more there. We have gold up as well, 1.6%, though it's off its record. And Bitcoin has woken up as well. But I think it is very telling to see what those stocks are doing on this Monday. It may not take much to move this market. But let's get a look at some single stocks moving at this hour. Shares of Apple rising after an upgrade from Loop Capital on positive iPhone demand trends. Counterpoint Research also released a report finding that the iPhone 17 is outselling the previous model in both the US and China, at least in its first 10 days. That stock up 2.6%. Amazon is higher as well, though it was lower in the pre-market. It said its cloud service has now recovered after a disruption today impacted a wide range of customers. And then Cleveland Cliffs, a fascinating story today. It's exploring its sites for, get this, rare earth materials. This as the U.S. steelmaker looks to expand its presence in metal production. It reported results that did well but did miss on some metrics. We'll discuss all of this later in the hour with Bloomberg Intelligence analyst Richard Burke. Coming up, President Trump names his demands ahead of trade talks with China this week. We get the latest from Washington next. This is Bloomberg Open Interest. Now to high interest to look at what's making headlines around the world. BNP Paribas is under pressure after a U.S. jury ordered it to pay $21 million for aiding Sudan's brutal regime in the 1990s and 2000s. The verdict could open the door to billions more in claims from 23,000 plaintiffs. BNP vowed to appeal, calling the ruling flawed and saying it was specific to 3 individual cases only. Goldman Sachs veteran Michael Marsh is leaving after nearly 2 decades. The 49-year-old, who leads capital solutions for Europe, the Middle East and Africa, will retire with no immediate successor named. His exit follows other senior departures as Goldman reshapes its private markets business under a newly formed capital solutions group. The Finnish smart ring maker Aura is trying to move into blood pressure monitoring. The company is launching a new study this year with the goal of spotting early signs of hypertension. The announcement comes just a month after Apple released a similar hypertension detecting system for the Apple Watch. Well, turning to Washington, trade talks between the U.S. and China will resume later this week in Malaysia. President Trump listing his top demands in the negotiations.
One of the things I want is China's going to buy soybeans. I want China to stop with the fentanyl. Very, normal things. I don't want them to play the rare earth game with us.
For more on the trade talks, we're joined now by Bloomberg Washington correspondent Tyler Kendall. So the president speaking as if there were no words exchanged between the parties last week in any fashion other than friendly, Tyler. I mean, is that the way these talks will kick off later in the week, or does the blood remain?
Well, Vani, that's really the needle that the White House is trying to thread here, right? That there has to be this balance. And while the White House maintains that that threat of a 100% additional levy on Chinese goods could go into effect on November 1st, you also hear President Trump saying in an interview over the weekend that rates that high are unsustainable. But really what we've seen in recent weeks upended what was considered to be a rather months-long stability, tentative stability at least, in the U.S.-China trade relationship. And it appears that we are getting back on track. We heard some positive comments out of China over the weekend after Treasury Secretary Scott Bessent met with his counterpart virtually on Friday, and then the pair are expected to meet face-to-face in Malaysia later this week. That will, of course, set the groundwork for any sort of tangible deliverables that we could expect when President Trump and Chinese President Xi Jinping have their face-to-face meeting. Now, all along, we have been expecting that these negotiations would take place because if you look at the timeline that's been outlined by both sides, there seems to be room for negotiation here, right? November 1st is the date for those potential additional 100% tariffs, but it's the same timeline as the enforcement dates that China has unveiled for its newly unveiled export curbs on critical and rare earth minerals. But Vani, of course, in the background of all of this is that the White House has to keep up the pressure here because pressure is mounting here at home. You heard President Trump mention soybeans. We know that American farmers are sounding the alarm that they're starting to run out of storage space when it comes to their supplies since China has not imported any U.S. soybeans this season. And one other dynamic I'll just add to your radar really quickly here is that farmers are also waiting on economic assistance. But the Trump administration says that that is on hold at the moment while these trade talks play out, but also because of the government shutdown that's currently in place here in Washington.
Yeah, you know, I'm reminded of a note I saw last week, and I can't find who authored it right now, but it was titled brilliantly, She Loves Me Not, right? And it's very nuanced because if she gives in on something like soybeans, that doesn't really help the United States on rare earths, and yet the United States would then not be able to potentially leverage this, massive tariff that is really the only stick that the United States has to use, Tyler. So what happens if we get something on soybeans and not on rare earths?
Well, it's definitely a complicated dynamic. And of course, China really does have a grip when it comes to the global supply chain related to rare earths, accounted for more than 70% of global supply last year alone. Now, the U.S. does have a few other cards it can play, particularly when it comes to their own export controls related to advanced semiconductors. Also, these newly imposed fees when it comes to Chinese ships that are docked at American ports. So we'll have to see how this continues and how it continues to ramp up. Actually, you mentioned one piece that you enjoyed. I had pulled from our own economists here at Bloomberg Economics that pointed out a really key piece of leverage that China also holds that I found super interesting. China maintains the ability to disrupt other U.S. economic engines. Look at some of these companies like Apple that are trying to shift its production out of mainland China. China actually has the ability that they could potentially stall that by restricting cooperation from some key Chinese contractors that remain essential to that process when it comes to shifting supply chains. So this really could escalate and go from here, much to your point. But at the same time, it does appear that both sides want to at least tamp down the rhetoric for now.
And Tyler, if I can ask you about the government shutdown day 20, we were just speaking with Emily Rowland of John Hancock Manulife talking about, layoffs. Do they continue in D.C.? What is the situation at the moment?
Right. Well, President Trump did say in an interview over the weekend that the layoffs are going to continue. We know that 4,100 federal employees have so far received those termination letters. But there is a court case that is throwing the legality of these firings essentially into question here. So we're going to have to wait how that plays out. We're also watching really closely, of course, pay for federal workers. I'll put on your radar that this week we are expecting a bill to go to the Senate floor that would essentially authorize and appropriate funding for those workers deemed essential, such as the military, for example, to keep getting their paychecks. Because, Vani, we've really seen in recent days some of those pressure points being taken off the table, such as we got funding for at least the first paycheck for members of the military. We also saw supplementary funding for a key federal nutrition assistance program for women and children. So the next big looming date here appears to be November 1st when open enrollment begins. So we're expecting conversations to maybe ramp up ahead of that, though Republicans really really do maintain that they're not going to discuss any of those health care provisions related to the expiring Premium Affordable Care Act subsidies until the government reopens. Vonnie, we did hear from the Senate Majority Leader John Thune, who is promising what's known as an up and down vote on extending those ACA tax credits for 1 year. But again, the red line seems to be the government needs to reopen before those conversations can happen.
Well, it is already the third longest shutdown ever. Bloomberg's Tyler Kendall, thank you so much. Still ahead, Cleveland Cliffs soars as it expands its search, it says, for rare earth materials. More on the steelmaker next. This is Bloomberg Open Interest. One stock we are watching is Cleveland Cliffs. The stock soaring after announcing it entered into a memorandum of understanding with a, quote, major global steel producer. It also announced it's searching sites for rare earth materials. Joining me on set now is Richard Burke, Bloomberg Intelligence Senior Analyst for Basic Materials. Richard, I had to smile. Cleveland Cliffs saying two of its sites, one in Michigan and another in Minnesota, show, quote, key indicators of rare earth mineralization. Who knew that these states were so rich? Is there rare earths in Minnesota?
Well, I'm not surprised there would be, because if you look at rare earths, it's kind of a misnomer. They're pretty predominant in the Earth's crust. The thing is, are they in big enough quantities to make it economically viable to extract profitably? And you've seen, Ramaco Resources announce that they found rare earths in their coal mines. We've seen various lithium producers finding that they found rare earths along with lithium. So the fact that Cleveland Cliffs, which has been in iron ore mining for probably almost a century, has found rare earths in its iron ore mines, is not really that surprising.
Okay. Now, can you use the same equipment to mine for rare earths? And, how much of each individual rare earth do you need for it to be viable to produce something else?
Well, it's a lot different process. Rare earths are kind of, you extract the rock, and then you have to use chemicals to target very specific rare earths to, get them out of the rock. The other thing that's a little different is a lot of times where rare earth resides, also radioactive material resides. So you have much more environmental concerns than you would have with just iron ore mining.
That is fascinating. Now, on the steel portion of things, they didn't quite meet metrics that analysts were putting out there, but they did, do well in revenue and so on. They had the benefit of the steel tariffs, though. I mean, is everything going Cleveland Cliffs' way now?
Right. I mean, they definitely, if you look at companies that are definitely would be a beneficiary of Section 232 tariffs and some of the tariffs, Cleveland Cliffs probably is at the top of the list. So in fact, all steel makers are. They've been able to, Cleveland Cliffs not only benefiting from the tariffs, it's also benefiting from the U.S. auto sector starting to reshore production back to the U.S. And also we've seen other industries reshoring. In fact, the MOU that you mentioned in the intro to this segment was with the global steel manufacturer that wants to support its customers that are moving from elsewhere in the world to the U.S., so they want to team with Cleveland Cliffs to supply the steel in the U.S.
Such a fascinating story. Richard, thank you so much. That stock up more than 16% today. That is Richard Burke of Bloomberg Intelligence. And once again, let me point out that Cleveland Cliffs saying that, if the sites are able to produce rare earths, that would, quote, align Cleveland Cliffs with a broader national strategy for critical material independence. You have to wonder what Cleveland Cliffs is hoping for here. Let's get a check on the markets. Nearly 1 hour into the trade. We're up 0.9% on the S&P 500. The Nasdaq is powering ahead, up more than 1.1% to add to last week's 2.5% gain, by the way. And we have that 10-year yield still, though, below 4%. Coming up, this morning's AWS outage heightening the need for cybersecurity. Perhaps Todd McKinnon of Okta joins next. AWS says services are back up and running. This morning's outage underscoring, though, the need for cybersecurity. Well, enter Okta as one player. The company says its business has grown alongside the acceleration of cloud services. It now says it's on the lookout for rising AI-enabled threats. Joining me now is Todd McKinnon, Okta CEO. Look, anyone can have an outage, but if you're providing cloud services for 30% of, corporate America and beyond, it's a little concerning. What went through your head when you saw this morning, Todd?
Well, I think about the world as layered into different critical services. Cloud infrastructure is one critical service. And as the leading independent neutral identity company, we're building this identity service for the entire world, whether that's enterprises, whether that's consumers, whether that's people building AI agents. We want to be that identity infrastructure. It's important for cybersecurity, it's important for business continuity, and it has to be reliable.
So how do you make sure that it's reliable then?
A lot of redundancy and a lot of focus and a lot of making sure we do exactly what customers expect, whether it's backups, redundancy, and monitoring it continuously. It's very important for us.
Now, you are growing very, very substantially. You have 800 people in San Francisco and how many thousand around the world?
6,000 global employees doing a great job for our customers every day.
Well, love to hear it, and I hope they are. How fast are you adding customers, and what's your pitch versus another identity security company?
Yeah, it's an interesting perspective we have, and there's different perspectives on some vendors want to sell you everything across the entire application and platform stack. Some vendors want to sell you everything across cybersecurity. We focus on identity, and we focus on verifying who the people are in your company, who the people are coming to your website as customers or prospects. And now, really, with AI agents, we make sure that that identity service is continuous across everything you're trying to automate in your business with AI, too. And that's our focus. And beyond that, we focus on connecting to everything else in the technology stack and letting our customers choose what they want to use.
What is the scale of AI agents Okta expects in the next 12 months?
It's starting out very strong, but it's going to be growing significantly. When you think about what companies can automate with these AI agents, how they can improve their top-line revenue, how they can cut costs, how they can be more efficient, how they can serve their customers better, it's got tremendous potential.
What about your exposure to ChatGPT user growth? How much of that do you have, and how is it changing how you do business?
Well, I think ChatGPT is the perfect example of how much can be automated with AI. And when every company looks at that, they think, hey, we can make our customer experience better with adding ChatGPT-like capabilities. We can make our employees more productive. So it's really driving them to deploy more AI technology. And that means more identity is required. Those connections have to be secure. Those connections have to be reliable. So it's really an exciting time for the industry.
Is it still in the land grab phase? And if that's the case, which I think it is,
yeah.
Then how do you make sure that you're the one doing the grabbing?
Well, I think it's really important that everyone understands how important identity management is to rolling out AI and AI agents.
I mean, they only need one person to manage their identity, right?
Yeah. Well, it's important that the identity service connects to everything. It connects to every application in the back end, every development platform. One of the things about AI agents particularly is how you build these things is changing very rapidly. So we give our customers the ability to make sure they have security, governance, and visibility, and then let them choose the rapidly evolving platforms behind the scenes to whatever fits their needs. That's really core to everything we do, that choice and that flexibility.
What did the Google Wiz Palo Alto CyberArk deal mean for you?
Well, it's a different worldview. I think companies try to consolidate around everything in cyber. We think that that's not the right approach. We think the right approach is to consolidate on identity because it preserves the choice of other cyber tools for customers. They're not locked into one endpoint tool or one network security tool. They can choose whatever is best for their business and will keep them more secure, especially as the threat environment is rapidly evolving. The ability to choose the best cyber tool and not be locked into a stack from one monolithic vendor is very powerful, and it's resonating with our customers. They cut costs and standardize their identity workflows and use cases around Okta, and then choose everything else around the rest of cyber to best fit their needs.
All right. Well, thank you so much for coming in today, Todd. That is Todd McKinnon, CEO of Okta. Let's get a check on markets now. It is risk on Monday with the indices up a percentage point or so more in the case of the Nasdaq 100. Most stocks in the S&P 500, in fact, are higher right now, just a few lower. A little bit of a tentative bid into treasuries, perhaps. Government shutdown day 20 and still some lingering trepidation out there. That has the 10-year yield below 4%. And just to take a look at Apple, it is up 2.9%. Apparently, iPhone 17 sales are running 14% ahead of last year's iPhone 16 sales in the first 10 days, not just in the US, but also in China. Coming up, Carlyle is partnering with Oracle Red Bull Racing. We'll bring you our interview with Carlyle Group's CEO and Oracle Red Bull Racing's team principal next. This is Bloomberg Open Interest. Carlyle has become Oracle Red Bull Racing's exclusive investment management partner. It's the first partnership between a Formula One team and a major global private markets firm. Carlyle's CEO, Harvey Schwartz, and the team principal of Oracle Red Bull Racing spoke with Bloomberg's Danny Berger following that particular announcement.
Everything about Oracle Red Bull Racing is about performance, execution, excellence. So that part was very easy to see and very easy to relate to as a firm. The sport, F1, is also global and growing dramatically, as we know, as are private markets. And so that all aligned. What made this really special was when Laurent and I spent time together, the team spent time together, and there was almost like this sort of very, uniquely natural affinity where we all just became best friends really quickly. And so, hey, it's got to be fun, too. But it is about performance excellence, first and foremost.
I was going to say, Laurent, given what Harvey is saying, that the finance world in general has been more interested in sport, more interested in F1. Have you been fielding a lot of calls before this partnership from Harvey's peers who wanted to get in like he did?
You know, in reality, no. It felt very natural straight away with Carlyle, with Harvey. It's this moment where you realize that the person you are talking with are the best at what they do in the world. And we feel we are quite good at what we do. And what we see with our partners is that we go and try to partner with companies that are the best at what they do. And we had a lot more points of connections. We had these performance obsessions. We have this data-driven approach in our very different business. But together with that quest for perfection in everything we are doing, it felt like a very, very natural connection.
To be fair, Harvey, there have been some outspoken critics about the move for private capital to do sponsorships, to get invested in sports. Josh Easterly of Sixth Street said at a conference a couple weeks ago, it's representative to him that firms are more concentrated on fine-tuning their brand than on the returns themselves. What do you say to that criticism?
Our business is exactly the way Laurent just described it. It's first and foremost always about performance. Performance drives everything. If you have performance, you have success. Again, you think about everything they do at Oracle Red Bull Racing, it's all oriented around success. When he references data, we think about data. It's different data, but these are organizations driven around performance excellence. If you don't have performance, you don't have success. In terms of the partnership here, yeah, this is important to be able to reach a global audience. You mentioned sport before. There's a real desire in the world for people to come together around sport, and this is truly one of the fastest growing sports in the world. And so it's all very synergistic, but you don't have success without performance. You can't sacrifice it. It has to stay number one.
Well, the concentration of the sport, it's growing quickly. Apple, now a U.S. partnership with F1. But again, there is so much institutional money coming in, whether it be Carlyle, a sponsorship, whether it be other private capital firms taking investments in the team itself. What has that money done to change this sport, Laurent?
I think as a sport, we have spent years and decades to try to have a more global reach. We have been trying to reach out to our fans. We have been trying to reach out to the businesses. And finally, it seems that we are now having that incredible growth year after year. We reach more fans, more global audience. We have now 40% of our global audience in Formula One that is female, 40% that is under 35 years old. And we also had that common points of connections with Carlyle and with Harvey. They are trying to get private markets to have that broader reach. And Formula One is also trying to get that broader reach towards a bigger fan base. And we are enjoying that period. We worked a lot to be closer to our fans, and you are right. There is so much more coming. We feel we are only at the beginning, especially in the US, in terms of reaching out to the wider audience.
It's a fair point. This growth is happening to both of your industries at the same time. Harvey, that growth also coincides with you taking over the leadership of Carlyle in early 2023. It does feel like a different mindset coming from people, institutions coming to you to buy funds versus you now having to sell them as well to a broader audience. Is this a big cultural shift you think that you're leading at Carlyle? Is this a Carlyle 2.0?
Well, I think, again, if you think about, it's an incredibly competitive world out there. All organizations have to go through constant processes of self-analytics, really being humble, asking themselves, hey, what can we do better tomorrow? What can we do better for any client we serve around the world, whether it's a wealthy individual outside the United States or a future retirement, an individual planning for retirement in the United States when all those rules change. And so, no, I don't know if you're ever through your 2.0s. I think as a leader of any organization, you constantly have to be working with your teams to say, hey, on any given day, what can we learn? What can we do better? And who can we serve better? And so again, I don't view that any of that as revolutionary. I just think of that as evolutionary. Now, the firm, as you point out, has been on a strong growth trajectory since I've shown up. The team's really rallied. They've done an extraordinary job. I'm really quite proud of everything they've done.
Is it a cultural shift, though, to go from institutions to have to think about retail and wealth?
I wouldn't say it's a cultural shift, because at the core of everything that is culturally relevant is performance. What I would say is understanding that end client. So you see a lot in the news today about retirement. It's not really even a sensible question to me whether retirees in the United States should have access to private markets. Firefighters, millions of them. Teachers, millions of them have had access to these solutions through their pension plans. What is relevant is how do you structure them? How do you work with regulators to get it correct? So the real issue about extending private markets more broadly around the world to different clients is just getting it right. But it makes total sense. You know, and since 2000, we've lost half the public companies in the world. So private markets are the market that people want to allocate capital to, and they shouldn't be denied that opportunity. We just, as an industry, have to be really thoughtful about how we deliver it.
Right. Well, you coming in as leader, maybe there are some things that also mirror each other. Coming in when there's some tumult at the top, when there's maybe questions of leadership. Laurent, you've had to do that this year as well. Has Harvey given you any advice of what it's like to come in as leader when there are questions surrounding past leadership?
Of course it did. Of course, absolutely. And you know, it even goes beyond. You know, when we say why do we partner with Carlyle? We partner with companies so that we can have that challenge, we can have that exchange about leaderships, about
well,
culture,
we have to know what the advice
people.
was. We need to see behind the scenes.
You know, the behind the scene advice was as simple as that. You know, it's all about performance, and performance only comes from people. So get your people in the right conditions to work, give them the possibility to express their talents, make sure they have the right working environment for them to operate at best. That's what they do. That's what we do. That was one of his first advice. Yeah. And all of that is happening in an incredibly technological environment and data-driven environment.
To be fair, you were also coming from Racing Bulls, where you were having a lot of success with the team, even outperforming the parent team at certain points too. Was it a hard decision to make to come over to Red Bull, or was it even a choice at all?
I think it was an incredible honor, you know, to receive that call. The first feeling you get is it is Red Bull asking you to step up there. There is a sense of loyalty towards the company. So of course it was a big news and a big surprise. But it's also something that you have to jump into as part of the loyalty you have with the group. And you know it's an incredible honor and privilege to be part of a team that has been winning so much in such a competitive environment in the last 2 decades.
You know, as leaders, we can all learn from each other. You know, what he just talked about was really about talent, and talent drives everything. We're in a